55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phrases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others...
Good morning and welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Over the course of the next half an hour, we'll tell you everything that you need to know to start the day on the right note. And today is a day of deadlines set by courts and regulators. From electoral bonds to Paytm to the stress test results in the mutual fund industry. Let's start though with the headlines. The electoral bonds data confirms the corporate political party Nexus, BJP, receives nearly half of the donations, followed by the Trinamool Congress and the Congress party. A lottery company in Chennai, Megha Engineering, Quick, Vedanta are the top donors. The list also includes a number of well-known listed companies. The BJP, Congress, AIADMK, BRS are among the top recipients of funds from electoral donors. The Modi government finally cuts petrol and diesel prices just before the date of the elections are to be announced. Strong inflation data spooks the US markets, treasury yields rise and equities fall. The first stress test results of the mutual fund industry is out. Edelweiss and Quant Mutual Fund have released the report on how they can manage liquidity if they face redemption. In the top story this morning, the Election Commission last evening released the data on electoral bonds on its website. According to the data, 1,277 unique entities have bought electoral bonds worth about 12,155 crore rupees during the period that it was available. Now, in fact, let's talk about some of those details. We've got some information that has come through. You've got a few of the biggest donors. You've got Tamil Nadu-based lottery company Future Gaming and Hotel, which has emerged as the biggest electoral bond donor, donating about 1,368 crore rupees to Indian political parties. And following Future Gaming, the list also includes the likes of Megha Engineering and Infrastructure, Quick Supply Chain, Haldia Energy, Vedanta Limited, the listed entity, SL Mining and Industries, Western UP Power Transmission, Keventer Food Park Infrastructure and Madan Lal. And those are just the top 10 entities. Among the recipients of this amount of money, you have the beneficiaries list. On top of that list, you have BJP, which has received close to half of the amount. You also have the Trinamool Congress, which has emerged as the second largest recipient of donations, and it's received about 1,600 crore rupees. The Indian National Congress is the third on the list and has received about 1,420 crore rupees. Now, if you're curious about some of the biggest donors, I would invite you to check out the stories on the website ndtvprofit.com, and you'll find all of the details right there. Now, before we move on to the other news, let's get you a quick check of the global markets. You had Wall Street that is a little bit under pressure. It saw selling overnight, and this is on the back of the stronger than expected inflation number. All three benchmarks lost about 1/3%, and you had bond yields that moved higher in trade today. In the Asia Pacific region, you have quite a few of the starters that have begun in the red. You have the Nikkei 225 that's down about 1/3%. More cuts in the Hang Seng than on the onshore markets in China. But let's turn to the Indian equity markets as well. And it's been a couple of frenetic sessions. It's been a roller coaster ride on Wednesday and Thursday. What are the latest cues from the F&O space? We've got Samina to tell you about just that. Samina, tough to put a range to it.
No, it's tough. The markets really saw the bulls come back with a bang in trade yesterday. But remember, the last few days have been about anticipating everything that we've seen on the 15th of March. So today is going to be a day of reactions. It will be a strong fight between bulls and bears. We can guarantee you that. And Bank Nifty goes in a weekly expiry as well. So Bank Nifty will continue to remain action-packed as always. But let's take you through what the action really stands at. That's your Bank Nifty futures on, as it stands, premium of 220 points. There's a slight decline that you're seeing. The spot, of course, continue to remain under pressure, but at the last few days have been rough. But remember, Bank Nifty has maintained its support of 46,700, which is a 40-day average. So traders and brokers expect that you could see an expiry ahead of those levels in today's weekly expiry. Well, that's the Nifty 50 spot, trades at a premium of 110 points. Open interest has also gone up by about 1.5%, so it's actually not looking too bad after yesterday's sharp up move in trade yesterday. Let's take a look at the put call ratio and get a sense of where the support and resistance really sits for the market. In terms of the call action, that's where you see it. 22,000 as the maximum open interest addition for calls, indicating that the immediate level of resistance for the Nifty stands at 22,000, followed by 22,400. On the downside, of course, you've got a maximum open addition in terms of puts, indicating where you're really going to see enormous amount of support coming in for the markets, and that stands at 22,100. No surprises there for guessing. Trading range for the day is going to be 22,100 on the downside, followed by 22,200 on the upside. The next, of course, break comes in at 22,500, followed by 22,300. So if we do see a takeout of levels above 22,200, we could make a ditch to levels of 22,500 to 22,600. So that's pretty much the equation in today's day of trade. 22,100 is going to find enough and more support coming in for the bulls. On the upside, 22,200 is going to be a critical level of resistance that the markets will try and take out. That's what the stock action was. Stocks like MGL, Shriram and Dr. Lal Path saw long unwinding. You saw a lot of shots on NMDC, followed by Shriram Finance. That's pretty much where the activity was. This is where you saw short covering. So stocks like Ultratech, PI Industries, Adani Enterprise, Sun Pharma and HUL saw a decline in open interest on short covering. So in terms of stock trades, it looks exciting, but it's going to be anybody's guess. Today is going to be a pretty strong, crazy day for bulls and bears. I'm not sure where the bets are sitting, but it will be a trading range, and that's going to be interesting to see where we actually see bank expiry at as well today.
And it's a heavy
busy morning.
It's a heavy news flow day. Thanks you so much, Samina, for getting us those details. Like Samina was pointing out, there's everything from the list of electoral bond donors. There is the stress test results of mutual funds. There is also the possibility that you get election dates today. Don't count that out. But for now, let's get you details on the latest from OMCs. They have cut, or there has been an announcement that the prices of petrol and diesel are being cut nationwide by as much as 2 rupees for petrol and diesel. Mika is joining in to give you some idea of the impact on the OMCs. Mika, it's been quite a while. I can't remember exactly when, but it's been quite a while since the prices were changed. What are the implications that you're seeing?
Yes, it's since May 23rd, 2022. That's how long prices have remained the same. And the Ministry of Petroleum and Natural Gas did announce a rupees 2 per litre cut for both petrol and diesel. And these prices were effective from 6 a.m. today, which is March 15. And what this does in terms of Indian oil marketing companies like HPCL, BPCL or IOCL is it impacts their gross marketing margins. Now, according to brokerages, obviously the current marketing margins do varies. For petrol, it's in the range of 5 to 7.5 rupees per litre, while for diesel, it's as low as 1.4 per litre to 6.3 per litre. Now, in terms of impact, now MK says that the margins will take a hit on to the tune of 1.6 to 1.7 rupees per litre. However, FY24 and 25 estimates in terms of financial stay impacts, and they expect the price cuts to be applicable till elections. Systematics estimates an EBITDA degrowth of 21%, 28% and 29% for Indian Oil, Bharat Petroleum and Hindustan Petroleum respectively. But in the long term, they expect margins to be at healthy levels. Citi said that the EPS estimates changed to 10 to 14% for the three OMCs. However, the integrated margins, which is both taking into consideration the refining and the marketing segments, they do stand to be healthy. One key thing is, if the diesel marketing margins are at the 1.4 rupees per level, since it's a direct cut on the selling price, diesel margins for the oil marketing companies could go into negative territory. So that would be a key level to watch out for. And finally, the risk is the crude oil prices. Yesterday itself, while the announcement was made, the Brent oil futures crossed the $85 per barrel mark. And if prices do tend to rise, then marketing margins could also see more pressure regardless of the price cut.
Got it. Absolutely. Thanks so much, Mika, for getting us those details. As of this morning, though, Brent crude trading just about the $84 per barrel mark. Let's talk about an update from Paytm. We've got today that marks the last day for the RBI's deadline on Paytm Payments Bank. The company, though, Paytm, almost in the nick of time, has received an NPAP license from the NPCI, that's the National Payments Corporation of India, for UPI payments. What does this mean for the company? We've got Pragati standing by to tell you just that. Morning, Pragati. What are you picking up?
Morning, Alex. Yes, just in the nick of time, Paytm app got its license. Last evening, NPCI granted it the TPAP license, which essentially means that Paytm can now continue as a third-party provider for its UPI transactions. Now, for this purpose, 4 banks have been designated to become the payment service providers for Paytm. These include Yes Bank, Axis Bank, State Bank of India and HDFC Bank, which essentially means that the UPI transactions or the UPI payments via Paytm will now continue. Additionally, Yes Bank also becomes the merchant acquiring bank for Paytm. So now the @Paytm handle is gonna change and be shifted to Yes Bank. So the idea behind is this, that the UPI transactions, like I mentioned before, continue in a seamless manner for both merchants and customers. Additionally, sources also told us that since Yes Bank is becoming the merchant acquiring bank for Paytm, the idea behind it is to complete the KYC of the merchants or onboard the merchants after completing the KYC in a week or 10 days. In fact, sources told us that Yes Bank already has a plan in place to do it, and the KYC will be done online via the app Yes Pay. That's all we have for now. Additionally, 15th March, because it is indeed the last day for these curves on Paytm Payments Bank, so we will be looking out and watching out for an update from the RBI as well.
Got it. Thanks so much, Pragati, for getting us those details. We have to slip into a very quick break, but there's more stock-specific action on the other side, so do stay tuned.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made...
Hi, welcome back. You're watching All You Need to Know, and it's time to look at the stocks that will be in focus today. We've got Varsha to tell you about Railtel as well as Genesis International and more. These are all counters that were buzzing in trade yesterday as well. Varsha, what do you have for us?
Good morning, Alex. So let's start with Railtel Corporation of India, wherein they've received order from Odisha Computer Application Center. The order value is almost 113 crore, which needs to be executed by September 13, 2025. Then we have Genesis International Corporation, where they've received LOA from BMC to develop Mumbai's 3D city model and map Slack. Now the order value is almost 155 crore. Veritas to be their consortium partner, and this needs to be executed within 18 months. Then lastly, we have Navin Fluorine International, wherein they've approved additional investment of 250 crore in their wholly owned subsidiary Navin Fluorine Advanced Science Limited, which was incorporated in Feb 2020 for greenfield project in fluorochemicals. Now, as on 31st March, if you see, their subsidiary has a turnover of almost 514 crore with profit after tax of 68 crores.
All right, let's talk about more stocks then, and we've got Mahima joining in to tell you about the likes of Shakti Pumps as well as NHPC and more. NHPC, for one, Mahima, gaining quite significantly in trade yesterday.
NHPC has been gaining in trade and back-to-back order wins also. So this will be the first stock that will be on the radar for trade today. It has received LOI from GUVNL for a 200 megawatt capacity solar power project, and the estimated value of project is around 846 crores. Then next we have Shakti Pumps, which has received an LOA from MEDA for 3,500 solar photovoltaic water pumps, and this has been received under the PM Kusum scheme. The amount of work order is around 93 crores, and the contract will be executed in the next 120 days. And lastly, Interglobe Aviation will be on the radar because as per a Bloomberg report, Indigo is set to introduce 11 codeshare routes across Australia, and it has expanded its partnership with Qantas Airways. The airline will start operating from 31st of March, and they've added 3 new destinations of Canberra, Gold Coast and Adelaide. So these are the key 3 stocks that will be in focus in trade today.
All right, got it. Thanks so much for getting us those details. Mahima, with the FTSE rejig coming into effect today, BFSI giants like HDFC Bank, Kotak Mahindra Bank, as well as companies like Sundaram Finance are bracing for a $1.7 billion passive flow into the sector. We've got Saloni joining in to give you some more details on that. Saloni, what are you picking up? Morning.
Good morning, Alex. Yes, so FTSE rejig, it was announced, the list was announced last month, and it is effective from today. It included about 16 Indian companies in its All India, All World Index, and some of the names include Jindal Stainless, Kalyan Jewellers, KPIT Tech, Metro Brands, Mazagon Deck, NLC, two real estate names, Phoenix Mills, Prestige Estates, and even from the financial sector, Poonawalla FinCorp and Sundaram Finance. Now, talking about the passive inflows that it will lead to, Nuvama did a research and they expect India to see an inflow of about $1.7 billion. Now, major of these inflows is expected to come in the BFSI sector, and it's going to be led by HDFC Bank, ICICI Bank, Kotak Mahindra Bank, and Sundaram Finance. Now, they are expecting about $500 million of flows in HDFC Bank, over $380 million in ICICI Bank, and even if you see on in Kotak and Sundaram, you would see that most of these constitute the $1.7 billion and the rest are mostly below that. So these stocks will be something that we need to be watching out for.
Got it. All right, thanks so much, Saloni, for getting us those details. Now, the Delhi High Court has on Thursday directed Bloomberg LP to take down an article that alleged that SEBI found irregularities amounting to $240 million at Z Entertainment Enterprises. And we've got Charu joining in to give you more details of that case. Charu, what are you picking up? Morning.
Good morning, Alex. So, as you said, the Delhi High Court has also upheld the trial court order asking Bloomberg to take down an article that alleged that SEBI had found irregularities worth $241 million in Z Entertainment. The company, Z Entertainment Enterprises, had alleged before the trial court earlier that this is not publicly available information. This is not something that has been proved or even accepted by the SEBI. This is just something that they sourced from insider, people, and have published it, which causes a lot of severe apprehensions and attacks on the media company, and hence it should be taken down. After this, the trial court passed an ex parte order. Ex parte order meaning that Bloomberg was not present to give its submission or give its rebuttal to the allegations made by Z Entertainment Enterprises before the trial court. This was done by Saket Court. And after that, when they were not given a chance to put their stance forward, Bloomberg had approached the Delhi High Court to talk about why the article should not be put down. Delhi High Court, however, upheld the trial court ruling and found reason that yes, it should have been taken down in the first place. They have given Bloomberg 3 days to comply with the order. The advocate representing Bloomberg also said that they need more time because the people who are affected by this, people from whom he needs to take permission to file future appeals, are not present in India. However, the Delhi High Court said that enough time has already been provided. That's all on this front. Let's see if any appeal is filed and what happens next.
All right. Thanks so much, Charu, for getting us those details. Now, as we close the show, let me get you a couple of details that are just emerging. Now, we've told you about mutual fund stress tests. This is the first of its kind for the mid-cap as well as the small-cap category, and this is a prompt by the regulator. The latest update has come from Nippon AMC, which is got the largest small-cap fund in the industry with the assets under management of over 40,000 crore, in fact, close to 47,000 crore, if I'm not mistaken. Now, they have disclosed 46,000 crore is the right number. So, they have disclosed that they will take 27 days to liquidate half of their portfolio based on the pro rata method that has been prescribed by the Association of Mutual Funds in India. And they have said that they will take 13 days, about half that amount, to liquidate about 25% of their portfolio. On the mid-cap side, they've said that they will take 7 days, and that's quite normal for 50% of the portfolio, and about 4 days for 25%. Why is this significant? It's significant because if a mutual fund receives significant redemption pressure, that's the amount of time in a stressed scenario that they will take to liquidate their portfolio and give you money. Now, do remember that Nippon has stopped lump sum inflows for quite a while, and it only allows SIPs. There is more on that story, and you'll find a lot more details over the course of the day as mutual funds start reporting these results. That brings us to the end of this particular edition of All You Need to Know. Do stay tuned, lots more coming up over the course of the day. And this is NDTV Profit.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does it say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to India Market Open. It's 15th March and I guess we'll all remember that day or remember today. It's a very, very busy morning. Lots of reaction, traders, investors, news channels, lots and lots of stuff happening. But I think, guys, I think the last few weeks have been about anticipation, nervousness about what the outcome is going to be.
Yeah.
The day is today, but it seems like, is it going to be take a break now that the reactions are here? Will we react negatively? Or will we just say, okay, we're done now, let's move on?
Yeah, well, Brutus and Caesar certainly remember 15th of March. So, yeah,
it's been a day of deadlines.
Yes,
deadlines met.
Crazy.
So electoral bond details are out, number one. Stress tests are out for most AMCs.
A lot of them, yes.
We'll be rating and grading them. Not all have done very well. Some have done relatively better. It's all on, the bell curve.
Bell curve, exactly.
So we'll see who's done well, who's not. Fuel prices have been cut, also widely anticipated. That's happened and, effective from today. I'm just asking now that the decks are cleared. The EC is also, quorum is full. Election dates today?
Yeah, election dates today, advanced tax numbers tomorrow. It's gonna be as busy a weekend as the last 12 hours have been.
Correct. Now the question is, what does all of that mean for you this morning? So a lot of events, we need to break down implications for stocks you may have on your portfolio, on the market sentiment as a whole, and a lot more. So we're going to do that over the show this morning. Let's start with what the global cues are. Global cues are largely mixed, and US markets have actually taken a pause. They have snapped that winning streak because of the PPI figure. That's the producer price index. Think about it like the wholesale price index for the US. So it's come in hotter than expected and by a fair bit. So 0.6% for Feb. Expectation was 0.3%. You've seen that in the way stocks have closed yesterday, and we'll just pull that up for you, including the futures, to give you an idea of what's happened. Even the core figure has been higher than expected. So core PPI, when you remove food and energy, has come in at 0.3% versus an anticipation of 0.2%. That's impacted the bond yields, the 10-year inching up at 4.28 when I checked last. 4.28%. So that pain is going to be showing. Crude is another one that I must mention because crude prices have consistently been going higher. Good time actually for Indian consumers if the government gives a little bit of relief, though it's mostly election linked. So $85 per barrel is where we've reached on the Brent. Two factors: the continuing Ukrainian drone attacks on Russian oil facilities, and secondly, the inventory levels in the US are, lower than anticipated. So that's what's impacted crude. Quick look at how Asia is faring. Did not open too well. It was in the red and continues to show pressure. So, I just want to very, very quickly go through the fund flows before I hand to Neeraj. So if you look at the global cues, not very positive from that end. But the fact is that we had a great day of recovery yesterday, and it is interesting to see who actually bought. FIs continued their selling spree, about 1,300 odd crores. DIs didn't buy too much, 139 crores. Safe to assume that the retail investors came in short covering as well?
Yeah, largely short covering. Just a point though, I think what worries me a little bit is crude price behavior because of what's happened currently.
Yeah.
So we are looking at a month of April and May wherein the US liquidity issues will come to the fore because of all the withdrawals that they've done. A lot of articles around how April, May could be the litmus test. So we have a bit of a liquidity squeeze in the US coming up. If crude prices spike in this period at a point of time when commodity costs for most companies will also start inching up relative to April, May, October, November, December, and sales growth doesn't quite perk up, we are looking at possible commentary of margin squeezes, macro stress if crude spikes up further. I mean, 85 is okay, but what if it does 90, 95, 100 in thereabouts in commentary? So I think there's a bit of an issue around a point of time when the markets are not at their best, as the market showed on Wednesday. So some stress may be coming up. Who knows? Any thoughts?
Yeah. No, so crude will be a big factor. I absolutely agree. But I think domestically right now, the focus is on a lot of stuff going on for us.
Most certainly. Okay, so very quickly the trade setup before we move on to the key talking points today, because there is electoral bonds, stress test and OMCs, all three to watch out for. So the surprise pullback, and I call it a surprise pullback because nobody anticipated what would happen yesterday. So it just kind of thwarts the out and out bearish trade, but caution, most people are saying still advisable. I mean, just look at the put strikes and that shows you how evenly spread the bets are. Yesterday, 21,700 was that key point. Now that's moved to a range of 22,100 to 21,900. Look at those option contracts out there, 1.57, 1.34, 87 lakhs. It's bunched up in a broad range for the Nifty. And I call it the broad range for the Nifty because the Nifty isn't moving much in the last few days. It is mainly the broader end of the spectrum. Banks not participating yesterday was a bit of a puzzle because they showed strength and resilience on Wednesday. There's the expectation of this FTSE rejig inflows coming in. One would have thought that if the Nifty were to be up, banks would lead it. Banks did not, and therefore that remains to my mind a key sector to be watched today and how it behaves. OMCs should correct. I mean, I will talk at length about it, but OMCs naturally would correct today, so that's a sector. And you know, the stress test disclosures, at least the ones that I've seen thus far, the 3 AMCs that we saw last night, not alarming.
No, and they're all in line, except for DSP, which came in at 32 days for small cap. Axis, Nippon and Quant for the small cap fund liquidation, 50% is only about 22 days.
Yeah. So, yeah.
I don't know about only 22 days is a little worrying.
That's a global average, actually.
Yeah.
But
And you have to understand the regulator requires you to have at least 65% in small and mid cap if you are a small and mid cap fund. So I'm not sure how that could improve substantially in a small cap space, right?
No, sorry.
No, my only point was if you compare it to, say, an Edelweiss, you can compare it to an Aditya Birla. So, like I said, on the bell curve, if you have others who say they can do it in a shorter time, does that reflect negatively on you?
Yeah, so I just have 2 quick thoughts here. One, people who invest in a small cap
are aware
fund
of the risk.
Should invest with a belief that there will be a slightly more risk than what will happen otherwise, and therefore anticipate more returns. I mean, probably one reason why quant small cap funds have really shot through the roof, right? They've done really well.
High risk, high return.
They've taken a little bit of risk. Also, just the larger point is that, I mean, the stress situation is when only 10% of the market participation is available to MF schemes. 10%, right?
So 90% is
10%. Right now, volumes are probably 2 or 3 times averages. So yes, you argue that stress test should be accounted for the whole year, what will happen in the future, etc. I'm talking about the current situation since they've released the stress test as of the last 10 days or as of yesterday or whatever you call it. We know volumes are high. We know participation will be high at the current point of time. Versus a 10% stress situation, volumes much, much higher. Somehow I thought that the results were okay.
I just want to take back to what Ajay Srivastav told us yesterday on this show. If they come and sell, who will buy these small cap stocks? Are they the buyers?
Yeah, well,
and that's really the question at the end of the day.
So which is why, but the point being, so if we are looking at 22 days for the entire liquidation, so the 50% of the liquidation, at a 10% market participation, the only point is with the market participation being above normal right now, would they be able to liquidate in a stress situation easily relative to what is being? The answer seems to be a yes. And therefore, people, my limited belief is that people who will be flocking to some of the schemes wherein the number of days taken for liquidity are higher will go in with the belief that I will possibly get higher returns and I'm comfortable with that portfolio.
So I think it comes from a place of warning and telling investors, making them aware of the risk that is involved. It's not past performance, it's the fact that there could be, in a case where there's a liquidity worry, this happens. But also look at individual portfolios. Very rarely will you come across an investor who's got 100% portfolio in a small and mid-cap space. So if there is liquidity pressure, if there is an individual liquidity requirement, you may seek out liquidity from a large cap fund. You may not go after a smaller mid-cap fund. So in my opinion, while this is good to know, I don't think it's going to be damaging in any sense from here on.
At the end of the day, the regulator wanted more information and transparency and awareness, and that has happened. So that's a good thing. Maybe initially for the first set of numbers, there may be a bit of trepidation, but then it will be normalized.
And I think another worry which comes to my mind, which is not from which is not so much from the number of days, is the size of assets. The bigger the AUM, the tougher it is to be nimble-footed, right? So I think that's one thing that market participants need to be concerned and wary about in that sense. When you're investing in a small and mid-cap fund, you don't want it to be too large, because if it's too large, the fund manager doesn't have the ability to go out and sell as aggressively or actively. The other thing on Nippon that was a good sort of point out is they've stopped accepting lump sums all the way back in July. And if you look at inflows into mid and small cap between April and May last year, 70% of flows were going into small and mid-cap stocks. As of Jan and Feb, the numbers dropped to 30% now. So while it looks okay, I don't think it's going to have much of a material impact in that sense on the markets, at least this morning. But we've been talking and we've not had a chance to look at implied Nifty. A quick check on what that is getting up to. It was a great sort of technical pullback for the bulls on the street yesterday. It looks bad actually, 108 points. Neeraj, you want to come on this one? 22,100 I think will be important in terms of support. Look at you guys, you're causing the crash. We are causing the crash.
I'm wearing pink.
Shade of red, a little bit of white mix.
And you also have Bank Nifty weekly expiry. But
with the global markets, just the way they've been.
So there are a few things. There's global markets, maybe stress test, people are looking at it initially with not so much of positiveness. And the other big thing is really the electoral bonds. And we're going to come to that in detail. But Samini, you want to are you done with your trade setup?
Yeah.
So
very quickly on OMCs, there has been a fuel price cut. Unwarranted but not unexpected is what the big brokerages are calling in. Petrol and diesel prices have been cut by 2 rupees as effective from this morning. This comes in well timed just before the model code kicks in. This is going to impact GRMs. The stocks will also be reacting negatively. HPCL in particular will see a hit. Remember, diesel GRMs, marketing margins, have not broken even just yet. So any sort of fuel price cut is going to have a negative impact, a bigger impact on diesel play. HPCL, BPCL, IOC, 3 stocks to watch out for. Brokerages believe it wouldn't be a surprise if the fuel price cut gets revised back upward post-elections. But what's also very interesting to note is while this announcement came in, crude prices were trading at $85 a barrel. So there was no reduction in global crude prices. This is largely election play from what we understand. So unwarranted but not unexpected is the tagline for fuel price cuts. Well, that's one space, one very active space that we are watching out for. But the other factor you want to note with OMCs is brokerages do believe that while this has happened, prices will correct, but they're only going to make them so much more attractive. In fact, in the month of Feb, you saw a whole lot of mutual funds going out and buying stocks like HPCL, even when valuations for the broader markets were being questioned. So the price correction, the supply that will come in will get picked up quite swiftly on these OMCs. Well, moving on from there, the few other names that are on my focus is NHPC and KPI Energy. KPI Green with PSPs in focus. Companies like NHPC have been signing deals with a number of state governments from Madhya Pradesh to Rajasthan to Gujarat. This is the second one in Gujarat with the Gujarat Urja Vikas Nigam. In fact, interestingly, we'll talk to the management on the show this morning to understand what this means for their top line, what this means for business at large. KPI Green as well has bagged a project from the Gujarat Urja Vikas Nigam. So same sort of order space for KPI Green and NHPC. NHPC will be on the channel very shortly, so we'll get a sense of that. But that's what I have, but there are a whole bunch of other and lots of other names that are going to be in focus. Electoral bonds, I don't know what this means for listed companies, but
there are a lot of listed companies in the list. First up, there are a lot of listed companies in the list, but it's not necessary that that's a negative, because these donations have been made over a period of time. They're not very large numbers. The largest numbers are from unlisted players, and frankly, it's not illegal to invest in electoral bonds. It was just that there was an anonymity which no longer exists. Having said that, and we're going to have a more detailed report in a bit of what the implications could be, but just in the stocks to watch list, I was picking up Electra Green. Electra Green because the second highest donor for about 1,200 crores in all is a company called Megha Engineering, which has actually won a whole slate of infrastructural projects, including the metro stations, Ojila Pass. Large player. They've given about 1,200 crores. Now, they have a controlling stake in Electra Green. It's a stock which will be on the radar. I'm not sure if it will react negatively.
Somehow, something tells me it might.
It may. It may.
Very expensive. Maybe that's why.
That too.
Looking for a reason to sell.
I love it how you're looking for the fundamentals. The fact is that,
but Tamna, just come. Actually, let's come on Electra. The number of order wins they've seen. in the last couple of months, and we've discussed this. Execution is going to be a challenge for them, and they've just been
today. The story is going to be going back and matching the date of donation, the buys of the bonds
and the order wins.
So this is a whole different exercise that is going to go on. May have some impact if you have Electra Green. I think be nimble and alert on what's happening with it. Vedanta is the other one only because it's in the top 10 of donors. Again, nothing illegal, nothing to be very upset or scared about, because it's a completely legal way until the Supreme Court struck it down. They've given about 375 crores. Vedanta has been through a slew of I would say headwinds in terms of other regulatory pressures. They're challenging a court order, etc. That's a different story. So Vedanta is one I would watch. Paytm is the other one because again, news. What an evening we've had yesterday. So Paytm has finally got the TPAP license from NPCI for their UPI payments. I would say in a sense the overhang is behind them. The worst is over. 15th is the day when everything that the RBI said had to come into action, and it's all been neatly tied in a bow to ensure that there is no issue for users on the ground. So Axis Bank, HDFC Bank, Yes Bank, State Bank of India have become PSPs. That means if you have a Paytm account, you can continue to do transactions. The backend will be handled, very simply put, by all of these. I would look at Yes Bank as well, because they will now be getting a bulk of the merchants that Paytm has. What does this mean? So there's a Jeffries note which says the NCI approval removes last remaining regulatory challenge, and whenever that big cloud moves, it could be a positive for the stock. Paytm was not doing too badly even through turbulent times. For Yes also it could be interesting. There's already been a hit to payments value and app usage for Paytm. That's as per the Feb 24 data, 8 to 15%. The business model is now moving to a pure payments company. So there will be a re-rating on what really the value of this company is, and they will have to dip into cash reserves for customer retention, which we knew earlier as well. But at least there is clarity now on what is left of 197 communications. So those are the few on the list.
Yeah, just very quickly 2 or 3 more. So watch out for financials. Like we said that today could be interesting. They didn't participate yesterday, but do HDFC Bank and other banks come in to flavor today because brokerages expect about $1.5 to $1.7 billion of inflows due to the FTSE rejig. So watch out for some of the financials in the session today for sure, in addition to OMCs as a pack that remains firmly in focus. Watch out for a couple of these bulk trades. So Sundaram Clayton is an interesting one. While Venu Srinivasan sold, and that's a marquee name selling out or selling some of the shares, but SBIMF bought 7.74 lakh shares. More importantly, Govind Parekh bought about 5.35 lakh shares. As noted an investor in the country as they come, watch out for Sundaram Clayton. Could be an interesting one. Watch out for Gopal Snacks. Quant AMC is the buyer. They bought over 15 lakh shares at about 374 rupees a share. So Gopal Snacks could be an interesting one. Usually Quant's name evokes response. So maybe, just maybe, this one is in focus today as well. So these are a few that certainly stand out. There are some brokerage notes like Morgan Stanley on Paytm is pretty sanguine after the development. So let's see if that one has a bit of a reaction. Tamanna spoke about it. So there are a few that you need to keep in mind when it comes to stock-specific moves in the session today. But, well, the big story, aside of OMCs, aside of stress tests, and viewers, we will talk about the stress test details with some pertinent people a bit later on in the show. But I think arguably one of the biggest and most anticipated things is also the electoral bonds data. And Tamanna, how do we dissect this?
So about 372 pages of a data dump hit the Election Commission website last evening. There are 2 sets of data, right? One is who has bought electoral bonds between 2019 and 2024. The other set is of the key political parties who received how much. So we're going to break all of that down. Obviously, there are too many names, many of them listed companies. We've sifted it as per the top donor. So let's pull up that chart first, and that throws up interesting results. Now, many of these are unlisted companies. Future Gaming is the highest donor, about 1,300 crores, 1,368 crores. What's interesting about Future Gaming is that it is a Tamil Nadu-based lottery and gaming company. Why is this important? Because you will remember that the Tamil Nadu government passed a law in its assembly banning online gaming. And you have Future Gaming donating about 1,300 crores. Now, we don't know who they donated to. We know the timeline, and it's a very consistent timeline of them making consistent donations because they're buying electoral bonds. Well, who got them? We'll have to wait and see. But this is one linkage or coincidence which will be made. Mega Engineering Group is the other one, a total. So it's a whole different set of names. We've collated all of them related to this one group, and that's about 1,200 crores. Mega Engineering Group has some of the largest infrastructural projects in the country across states and central government projects as well. Key ones, their listed sort of associate or owned is Electoral Green, which we spoke about. So Mega Engineering is another interesting play. Quick Supply Chain, 410 crores. Is an important player as well. A very cursory search will show that it is owned by a large conglomerate. So Quick Supply Chain is one. Haldia Energy is the other one, 377 crores. And, you know, there are more on the list. There's MKJ Group. MKJ Group is part of Mega. Vedanta, about 376 crore. SL Mining, the SL Group, also been in the news a lot, 225 crore. And Kevinter Food Park. A lot of these are West Bengal-based companies as well, which have come in. Like I said, the list is long. A whole host of listed players. Some of the biggest names, the Piramal Group, the Birla Group, Kota Group, all of them have donated in some way or the other. In fact, Dr. Reddy, Cipla, Sun, all of them have donated. SpiceJet has. Nothing illegal about donating, nothing wrong about it. So that I want to put up on the table. Now, 1,277 unique entities bought bonds worth 12,155 crores. The BJP received the maximum, around 6,000 crores. So that was top of the line. The second largest party to receive was not the Congress, was the Trinamool Congress, which received around 1,600 crores. So this is going to be interesting because as a regional party, largely in West Bengal, they have the highest second highest number of donations. The Congress has got about 1420 crores. And then, of course, there is a list. The BRS is number 4, DMK. All the parties have received. Again, this is what electoral bonds were for. So at the end of this, you may be asking, what's the big deal? What's the implication? What's the market? And what is everyone going to be looking for? And here's where it gets important. Inferences will now be drawn between order wins and donations. There is going to be a match the following kind of exercise that a whole host of entities is going to do between what were the dates of the electoral bond purchases, what were the dates of the order win, and try and match them to when these bonds were actually gone and used and taken by these political parties. Attempts will obviously be made to establish links between any raids that have been happening and donations. So all of that will go on. The important bit is that these will be inferences because regional parties and locations of donors will be also matched. In which state is this company headquartered? And then you'll try and match them. People will try and match them with the location of the regional party who got electoral bonds. But the fact is you can only make inferences. There is no way to clearly say 2 + 2 = 4 because you know that bonds have been bought. You know that the money has been received, but who gave it to whom exactly will not be known from these data sets, and which is why it will give a lot of fuel to political fires, but may have no real impact apart from that. And at the end of the day, it's not really wrong or illegal to buy these electoral bonds. The time when companies bought them, it was perfectly legal to do, and the anonymity they had was part of the act. All right, what's the implication for the market is the question. I'm going across to Ajay Bagga first for more on this. Mr. Bagga, very good morning to you. Just to understand, is this something that the market is going to be watching and going through those names? Any real impact, you think, for the market sentiment today?
Not much, Tamanna. See, when you're investing in India, you are aware of this pilferage that happens. It happens by the promoters and it happens for paying the Neta Babu nexus. So it is largely factored in. Every now and then we see an infrastructure company coming out of nowhere and then you come to know that they are a front for ex-politician, Y chief minister. Those are well-known stories on the street, and you discount them already. So this is too small, 12,000 crores over 5 years for an economy of the size of India, and for the known corruption in India. This is a very small amounts. It's not market moving. It is a relief that, okay, this is done with, and let's move on. But it is largely factored in. You might get one or two small companies getting hit, but largely these are shell companies. Largely these are unlisted companies at the top end, the lottery guy and stuff like that. They might have some listed entities somewhere which you could see minor correction, but normally the institutional players will either discount it or stay away from such companies, knowing the stories. These stories are well known, and the amounts are very low for an economy the scale of India. And what actually goes into political funding, this is not even the tip of the iceberg.
Yeah. So in the bigger picture, this is a minuscule amount of what political parties actually spend on running elections. So where that money comes from is a whole different story. But Mr. Bagga, just to get a sense of, when there is a anticipation of a big event and is finally behind us, it's also a relief. In a sense, it's positive, because if you look at the list, there are no big names of any big Indian conglomerates. Maybe there are, related companies that are making donations, but there was a lot of speculation about which big names would appear on the list, and you don't really see that. Would that be seen as a relief?
Yeah, definitely. Definitely, it's a relief. And again, I have seen FIs since 94, Tamanna, when they come in, they put that discount when they look at the Indian revenues, because that is the cost of doing business. So in the US, it's above the line. You hire lobbies who are openly paying the PACs for the re-election of the Congress people, their House and Senate, and even right up to the White House. So you go and fund PACs openly, and in India it is done below the line. That's the only difference. But this happens everywhere in the world. And we should not be self-berating that, these numbers. This was one attempt to at least bring it above the line. It has failed now with the court's intervention. Again, most of it goes below the line and we never get to see it. And that will continue to happen, and that's discounted in the prices.
Okay, so that's discounted in the prices. Then in your view, Mr. Bagga, what is the big factor today? Because there is so much news coming in. Petrol, diesel prices have been cut yesterday. Stress test numbers are out. Then you have the electoral bonds hangover now done and dusted with. People are wondering whether the dates will be next. So what's the biggest factor that market is watching this morning?
I think the big move is global, in terms of the US CPI, PPI coming ahead of estimates. Still a June rate cut, the market is hanging on to that. So the next Wednesday Fed move will be very critical, Tamanna, and I think that will keep markets going up and down. Over the weekend, we'll get good advance tax numbers, and that should give some amount of, buoyancy that the earnings are doing well, both at a household level as well as corporate levels. You will see pretty good advance tax numbers. So direct tax numbers will come in much ahead of the budgeted estimates, and that should help. But mostly it's dependent on the Fed, the US inflation. And one key move, which till now I think is not fully discounted, is the Japanese wage number comes out, and if Bank of Japan changes its stance to move from a negative number and a yield control into raising rates, that is going to hurt the carry trade a lot. So I think that has still not got discounted. If something like that comes in, that could hurt flows globally, because a lot of money is raised in Japan, leveraged in Japan, and then invested elsewhere because of the rates having stayed in the negative territory for so long. That will be market moving. We have to wait for that.
Yeah, that is definitely going to be the big one. But thank you, Mr. Bagga, for joining us this morning with all of that perspective. So at the end of the day, it may turn out to be a lot of bother about, not too much as far as the markets are concerned. No doubt, the electoral bonds data is going to have far-reaching effects ahead of a poll season. Electorally, it is going to have, politically, it is going to have, it also gives the ruling party a chance now to say that, look, everyone was enjoying the benefits of electoral bonds. What was, all the hue and cry about? But the fact is, as far as the markets are concerned, this is something that is done and dusted with. So we'll take a very short break at this point, but our coverage continues on the other side. When we come back, we're talking about what to expect from F&O cues and more. Stay with India Market Open.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to Rs 2 lakhs per month depending upon one's work and creativity with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%, significant meaning, 29%, or the idea that it would make them look cool, 18%. Thank you for watching and stay tuned to NDTV Profit for more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit.
Welcome back. You're watching India Market Open. It was a smart pullback on the street, most calling it a technical pullback in yesterday's day of trade, with the Nifty, Sensex and the broader markets all actually ending in positive territory. Well, today is weekly bank expiry, and the cues that we're going to be reacting to are enormous, to say the least. So it's going to be quite a tussle between the bulls and bears, to say the least. That's the Nifty future trade. It's at 110-point premium, is an increase in open interest by 1.5%. On Bank Nifty, which clearly has been struggling over the last couple of days, but finding support at 46,651, which is the 40-day moving average, continues to see a massive jump up in a premium of about 220 points, but percent about marginally lower in terms of open interest changes. Well, in terms of the put call spread that we are seeing this morning, 22,200 is seeing the maximum call interest, call open interest addition, indicating that this is going to be the immediate level of resistance for the Nifty in today's day of trade. That's followed by 22,500 and 22,300. Call unwinding was maximum seen at 22,300, like you can tell, and of course key levels of support remain 22,000 and 22,900. On the put writing side, what we saw was 22,100, so the maximum open addition, indicating that's going to be an important level of support coming in for the markets. That was followed by 22,000 and 21,900. So those are three levels of support that the markets will be seeking in today's day of trade. In terms of a trading range, we're looking at 22,100 to 22,200 on the upside. If 22,200 gets taken out, we will be making an attempt at levels of 22,500. So that's pretty much the open interest picture. The call and put activity focused and largely concentrated in that price band of 22,100 and 22,200. Stocks like MCX, MGL, NMDC and Dr. Lal's labs, Dr. Lal Path Labs, an increase in long built up. You had short built up seen in Shriram Finance and NMDC. In terms of stocks like Ultratech, PI Industries, Adani Enterprise and Sun Pharma, what we saw was short covering in those counters. That's pretty much what we have. Adani, HUL and Sun Pharma, which witnessed a sharp short covering in yesterday's day of trade. So all in all, it looks like it's going to be a tight trading range. Implied Nifty is indicating to a gap down, and it is of course your weekly Bank Nifty expiry, so lots of cues to watch out for. On Bank Nifty as well, 46,600 and 46,500 will be the crucial level of support coming in for Bank Nifty. Well, we have with us Amar Singh Diol joining in now with his top trades. Amar, morning. Thanks for joining us. Amar, before we go into your top trades, what's the call on the Nifty? 22,200 seems like the immediate level of resistance on the benchmark, with support sitting at 22,100. You think that range is going to be respected today?
Yeah, a very good morning. And if you look at Nifty, I would say short term there is a loss of momentum, because if you look at Nifty over the last few trading sessions, we've seen it trading in a range, and on the downside, however, some very crucial support for Nifty is around the 21,850 and 21,900. That's I would say a sacrosanct level, very crucial zone of support. We are above that level by almost more than 200 points. So that's one point. But overall, if you ask me, if you look at the derivatives data, put call ratio also for the next weekly expiry, that's not very encouraging, but that keeps on changing. So it's currently around PCR for the next week. If you look at the monthly series, that's around 1.2. So that's monthly series gives some confidence that there's more of put writing which is happening. So otherwise, I would say it's more of a range play, and we'll have to watch out for some triggers which the markets are actually looking for. Otherwise, it could be more of a range play. If I look at Nifty on the upside at 22,350, 400, and 21,850, 900 on the downside. That's a range. It's a trading range for Nifty as of now.
Amar, let's talk about Bank Nifty because it's respected and held on to that 40-day average of 46,700 in terms of support. And most part of the selling pressure has been absorbed quite well on Bank Nifty. Are you expecting it to break out of this range and move up? I mean, is there a bull trade over there for Bank Nifty? And of course, you've got your weekly bank expiry as well today.
Yeah, so if I look at Bank Nifty, we need to remember that the heavyweight, the constituents, how are they behaving? So because in Bank Nifty, HDFC, if you look at till the time we don't see HDFC trading out of the 1470, 1480 zone consistently, I would say there would be some pressure. If I look at the other major constituent of Bank Nifty, and that's ICICI Bank. So ICICI Bank has also gone in for consolidation. After hitting record highs, it's gone in for consolidation. So these two major, they constitute almost more than 50% weightage. So there the triggers are not very positive. So it tells me that there could be some consolidation. Now, talking specifically about Bank Nifty on the daily charts, there isn't much, I would say, a strong trend. And if you ask me on the support levels, somewhere around 46,400, 500, that's a zone of support. Whereas on the upside resistance around 47,500 levels. So it's more of a range play in both Nifty and Bank Nifty.
Right. Amar, I believe you've got a trade as well for our viewers this morning, and that is a bull call spread on BHEL. You want to take our viewers through what that is and your expectation on the price movement there?
Yeah, sure. So, see, what has happened in BHEL is that this was one stock which has significantly rallied. And now we've seen some very sharp correction. Because if you go back from almost 275 levels, it's around 220 odd levels. So there's been a more than 20% correction in the stock. The stock is at very crucial support zone. So there is a pullback which is expected. So one can look at a bull call spread wherein one is bullish in the market. So for the March series, one can look at buying a 225 call option, which is available at 8.95, and selling a 230 call option at 6.45. So where the stop loss is 0.5, the target is 3, and the lot size is 5250. So having a bullish view in the stock, it's more of a contra view because the stock has corrected sharply. But since the stock is at very crucial support zone, so a pullback is expected. Whenever we are into option strategies, it's very important that we also we are mindful of the time that we are holding the option. So you get an opportunity, you should definitely look at booking profits or exiting the trade. So this is one stock one can definitely look at.
Right. Options largely time sensitive, like Amar says, but recommending a bull call spread on BHEL. Remember what a bull call spread is: one long call with a lower strike price and one short call with the highest strike. So all you're betting on is the stock actually going up. And like Amar said, a technical pullback cannot be ruled out on BHEL after the recent decline that the counter has seen. But thank you, Amar, for joining us today. But back to you guys. It's OMC's in focus this morning again.
Most certainly. And you know, since there is no indication of any excise duty relief, safe to assume that maybe the price cuts will be borne entirely by the OMCs. Yogesh Patil, VP Research at Daulat Capital, with us on the show. Yogesh, good having you. Thanks for joining in. Good morning. Is this a sharp negative surprise, or is this a bit milder than what you might have anticipated?
So, good morning, first of all. And this is a sharp kind of reaction we can see on the stock side. First of all, just wanted to tell you, post these price cuts, OMCs are going to take the hit on their gross marketing margins on the auto fuel. And because of that, the gross marketing margins will get hit by close to 2 rupees per litre. Now, post this price cut, gross marketing margins will cut down to the level of 3.5 to 4 rupees per litre. Looking into the Brent prices, which has already touched the $85 per barrel, at this level, there is no cushion for gross marketing margins if the oil prices inches up from the current level. So this clearly indicates the risk of losing money on the sale of auto fuel, considering that we are already entering into the election zone. So in that zone or period, government will unlikely to rescue the OMCs. They will unlikely to take any kind of a price hike if the oil prices inches up from the current level. So in that scenario, investors will be definitely cautious, and definitely they will take a call on that side.
Sure, let's break this down between petrol and diesel. In petrol, I think most of the brokerages also do believe that it's, while this is unwarranted, it may not be too bad in terms of the timing of it. With diesel, though, I believe the bigger problem is there because their margins are hardly about breaking even. And with this fuel price cut, they're of course going to go into negative territory. So counters like HPCL stand to lose more than the likes of a BPCL, IOC, you'd imagine?
Among the oil marketing companies, HPCL is the most vulnerable to the fuel price cut. The marketing to refining ratio is the highest for the HPCL and then followed by the BPCL and least for the IOCL. So today we will see a major fall in HPCL, then BPCL and then IOCL. So for layman understanding, every dollar per barrel change in a crude prices or product prices, oil product prices like the petrol and diesel, the changes in the gross marketing margins are 50 paisa per liter. But in case of HPCL, as we know, the marketing sales volumes are much higher compared to their refinery throughput. So we will see a kind of bigger impact on the HPCL stock price.
Yogesh, if we do see a cut coming in, I mean, let's not forget that HPCL is already down 13% in the last 1 month. BPCL, of course, not too bad. It's down about 6% and IOC as well has had it quite rough in the last 1 month, seeing a cut of 10%. If we do see a decline anywhere in the range of 5 to 8, maybe 5 to 10% over the course of the next few days, most people believe this becomes attractive, right? Because these valuations are not stretched. Would you go out and buy any of these counters in the current weakness in terms of stock reaction? And if yes, what would top your buying list this morning?
Okay, so the 2 points are there to highlight here. The after correction, definitely it looks like that the investor will enter into the stock. But before entering into the stocks, one need to look into the election scenarios. So the crude has already touched $85 per barrel. A scenario where any $2, $3 per increase in crude prices will start impacting on their marketing segment negatively. So again, that will be a worry in the investor's mind. Is it the right time to enter into these stocks? So I would suggest at least for next 2 to 3 months, which will be a kind of volatile period if the crude price inches up. So I would suggest that not to enter at these levels, wait for a clarity from the side of a government. The government will not again intervene into the prices of petrol and diesel again. Secondly, complete deregulation. I mean, on the paper we have seen the deregulation of the petrol and diesel prices, but the prices were on a freeze since May 2022 and yesterday only the price cut we have seen. So just wanted to get some clarity that the government will not again intervene and cut down the petrol and diesel prices and the complete deregulation of the petrol and diesel prices. If these two things get little bit clarity, then only I would suggest to enter into the stocks at this point of time.
I'm going to be price sensitive in terms of entry point. That's what Yogesh is saying. Clarity from, of course, the government is what's going to drive these counters in terms of buying interest. But Yogesh, thanks for joining in. Great to get some perspective on what this fuel price cut means for OMCs and investors too. Well, that's of course the reaction coming in on OMCs. I think HPCL is probably going to be worsted in today's trade. A big gap down cannot be ruled out.
You know, for the longest time, what I find interesting about the developments yesterday is for the longest time you had a clutch of brokerage notes saying that this government is not going to cut prices before elections because they're confident about winning. It's not going to happen. And well, I think there are some very basic checklists you have to go through before you prep for an election season.
Yeah, the only question is, the only question is if it has a gap down today, is this the bottom? Because it's a token price cut. This is it. Now nothing more can be done. Can the stocks reverse or can this be the bottom? That's the only question, because as Samina highlighted as well, the stocks have already fallen a bit. If there is a gap down further today, at some point
becomes
of time,
a buying opportunity.
Valuation comes in.
I think HPCL may not see that valuation play only because diesel is the problem, but BPCL usually turns out to be lead in terms of OMC play. But I guess we've got our other guests as well for lots of stock reaction.
Let's get Kush Bora in, Avinash Gorakshakar. Exciting morning. Welcome to both of you. And great to have you this morning on NDTV Profit. Kush, let me begin with you. We'll just jump in straight to what your calls would be today, because so many things have changed since closing yesterday.
and where we're setting up for opening today. So I'd be curious to know what would be on your top calls list.
Hi, Tamanna. First, a very good morning to you, to all the panelists and all the viewers. And I just have to, ask, I mean, was this a color coordinated? And has Neeraj already made a mention of that? Is the outfit reflecting the market sentiment? But my calls actually pretty much remain the same.
No, Kush, I agree. If the market falls today, blame it on these two women here.
No, we're cheering. We're cheering for, red as, the color of excitement and energy in the markets today. It depends on which way you look at it. But yeah.
Anyways, yeah. Kush, over to you.
The bulls and the bears. That's the only place I will say the red, the red color looks good. So yeah, not anymore in the market. So look, my calls remain the same. Geo Financial Services, we've been gung-ho about it for a while and has done wonders. We are quite bullish on this from here on. This tip might turn out to be a buying opportunity, from let's say a couple of weeks from now. So 350, 365 are our near-term targets. 325 is where we'll place a stop loss for a trading bet. Siemens is one stock again that we've been very bullish on. This stock hasn't really participated in the downfall in a meaningful way. It's just consolidating that too with a positive bias. So 48.50, 49.50 are the targets that you can look at. 46.50, is a stop loss that you can place from a trading perspective. And even before you guys get there, Swan Energy is one stock that we've discussed extensively and has taken a beating. My suggestion here, if anyone's still holding this, is to continue to hold on to this. Do not sell a lot of these good names in panic, that we're seeing in the market right now. Hold on, your waiting period might get a little longer, but I don't see a reason to sell in panic and get out immediately.
Okay, so Swan, you're holding on to. What would you do with Electra this morning, Kush?
So Electra Green Tech, well, this stock's actually seen a fair bit of volatility. The move's not really been as convincing. However, it's very close to the support zone. 16.50 is the support zone. It's taken support there yesterday and day before as well. So I would hold on to this one and I'll place a positional stop loss at about 16.50. I don't expect a great degree of momentum, coming around, probably some profit booking at higher levels, but I'll hold on to this one with a positional stop loss of 16.50.
Avinash, first calls from you on what is the biggest factor this morning. Is it OMCs getting hit because of fuel price cuts? Is it stress test? Is that a factor at all? Are you going to be looking at the electoral bond fallout?
Yeah, good morning, Tamanna. I think the electoral bonds issue is something which the markets would be closely observing. I think you mentioned about Electra Green. I think, its name figures quite prominently in the donors, to the political parties. So I think, clearly markets would definitely look at this very closely. Although this is a normal activity, I think these names coming in ahead of the election is definitely not a good sign. Our sense is that the markets would like to have more clarity on this. And clearly, I think, the mutual fund stress test is also a very key factor. I think Quant Mutual Fund has already pointed out that they are pretty safe. They were one of the few funds to actually come out with the results of the stress test. So my guess is that, the oil marketing companies are unlikely to move down further because, as you rightly pointed out, a major part of the correction has already happened. And I think this was expected, from the government ahead of the elections. So I think despite the fact that, companies like HPCL could take a more bigger hit, I think companies like BPCL, IOC, I think would definitely figure prominently, if they come down further, I think good bets in the medium to short term because, the consuming sectors like aviation, automobiles, the throughput has increased significantly. And I think most of these companies have benefited from softer crude prices. So I think going forward, there could be a soft dent on their profitability, but nothing so major. But I think the electoral bond issue, Tamanna, could be a key element which could figure out in the early morning trade. And we'll have to see how the market, digests all these numbers because many new names, many prominent names. So I think clearly this is something the markets would like to discount. And obviously, it seems that possibly there could be a minor correction initially, and then probably the markets would recover. But I think net markets would now be looking at the kind of election schedule because the second list of BJP candidates has been finalized. So I think markets are awaiting now the election schedule, which I think will set the tone for the markets going forward.
Kush, the big story is going to be OMCs. Do you have a trade there? If we do see a gap down on a BPCL, HPCL, IOC, would you be brave enough to short it for intraday? And if you're going to go long, maybe for the March series, what prices would you be watching and tracking today?
First up, I think I've mentioned this before as well. I've never been a big fan of the OMC space. They move, in trends and then just, give way. Now, will I go short? Perhaps on something like an HPCL. It's already below its 50-day moving average. I'll be keen to see, where does the, gap down opening, if all it does come in, which is likely, where does it happen? If it happens somewhere close to the range of, 480, 485, I think there's still a room on the downside. So HPCL is one counter that I will have on my radar from a shorting perspective, not so much on IOC and BPCL, but HPCL, that's one stock, that I will have on my radar from a shorting perspective.
Okay, short, interesting. Okay, let's revisit that at 908 when the gap down, I'm presuming there will be a gap down when the gap down is known. We'll revisit this at 908. Let's take a break on that note. We haven't spoken banks, so we'll try and talk about banks. We'll try and talk about Paytm and so many other stocks and news in just moments from now. Stay tuned.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others...
right, quick look at the implied open before we get to the list of stocks that should be on your radar today. And it's looking like a tough day. 102 points down possibly is where we'll open on the Nifty. A confluence of factors could be the reason. I mean, take your pick, right? From global cues to stress test results for mutual funds and a view on what they're doing with their small cap funds and mid cap funds, how liquid they are, electoral bonds. There could be a whole host of reasons. But anyway, let's get you the information you need to make the right decision. Varsha joins in now with a list of key stocks to watch for the day. Yes, Varsha.
Good morning, Tamanna. So few stocks which should be in radar, starting with Genesis International Corporation, where they've received letter of acceptance from BMC to develop Mumbai's 3D city model and map stack. Contract value is at 155 crore. Now Veritas Limited is to be their consortium partner, and this contract needs to be executed within 18 months. Then we have Navin Fluorine International, wherein they've approved additional investment of 250 crore in their wholly owned subsidiary Navin Fluorine Advanced Science Limited, which was incorporated in Feb 6, 2020 for greenfield projects in fluorochemicals. As on March 31st, their turnover was 514 crores and profit after tax was almost 68 crores. And lastly, we have Shakti Pumps, wherein they've received LOA for 3,500 solar photovoltaic water pumping system, and this contract is received under Component B PM Kusum scheme, which needs to be executed within 120 days, and the contract value stands at almost 93 crore.
All right, thanks so much. So those are some few stocks to monitor. Mind you, for Shakti Pumps, it usually tends to react at the whiff of good news. Let's wait and watch if today is yet another day wherein the stock does that. Avinash, any thoughts here on a Shakti Pumps? It's not a very large order, but the stock has had a stupendous rally. For somebody who's invested, stay invested?
Yeah, I think, Neeraj, one can stay invested here because, the order book trajectory continues to be very rock solid. And I think in the solar water pumps, they enjoy a market share of almost 40 to 45%. And the Kusum scheme, which has been formulated by the government, has been the trigger point for the kind of revenue and the growth which the company has recorded. This is a small order, so I don't think it's going to have any significant impact on the overall revenue and profits. But I think sentimentally, I think the stock could open up on a positive.
Okay. All right, the pre-open rates about to kick in, and you'll probably see reactions. None of these reactions can be predicted right now. Let's wait for the rates to settle. All we can say is that OMCs will probably start off lower. Paytm could probably have a bit of a reaction, and the other interesting bucket to look at could be banks. So just get the OMCs maybe very quickly just to see what the initial momentum out there looks like on the oil marketing companies. We'll get that, and of course keep an eye out for the banking stocks as well. Not a major reaction really thus far, but let's give them a chance to settle.
Let's give the traders a chance to short it before it goes down.
Well,
further.
if they can match rates in the pre-open, to be very honest. But yeah, I mean, let's see how it shapes up. But the pockets which had a bit of a bounce yesterday, I think it's important to highlight some of those as well. Kush, yesterday some of the economy-linked stocks came up very, very strongly after correcting viciously on Wednesday. So you had some metal names which had seen some long unwinding come back yesterday. The Adani twins were the top gainers on the Nifty yesterday. So some bit of a bounce in some of the economy-linked stocks yesterday. Anything that stood out for you?
The one thing that stood out was that perhaps this could be a relief rally or a relief kind of a bounce. Most of these names, despite the kind of sharp, up move that we saw, weren't even able to cross, the Wednesday's low rather, or by Wednesday's high rather than, that they had made, or in some cases key averages, that these stocks have traded below. So from my perspective, this was more of a relief rally. We were tracking a lot of names, and this is one thing that came across. So I will wait before I, perhaps consider a buy on dips on certain, some of these names. So for me, taking out certain key levels on these names is a little critical. Yesterday was more of a relief rally, so I'll just wait and watch, for some of these names if this bounce is sustainable or not.
Okay, well, but some of those stocks certainly did well for themselves in the session. Now, I'm just trying to think of what stocks, right? There is HDFC Bank and other banks, and the inflow that might come in today. Could these stocks show a bit of a bump up? I'll watch out for Sundaram Clayton because amongst everything else, Govind Parekh has bought about 5.35 lakh shares, and certain names invoke some response, and this one could be interesting as well. And Gopal Snacks, first day of the listing, Quant MF bought about, I think the AMC within 2 schemes bought over 15 lakh shares at 374. The stock was down yesterday, maybe active today. So a couple of stocks could be interesting.
I was just looking at the stocks on my watch list that I've kept. Railtel. Look at Railtel this morning in pre-open and how it's doing. Pesalo, Swan Energy, Railtel is 10% up. Good day, second day in a row. Pesalo is 8.5% up. Swan Energy, Kush was talking about it with a smile, 4.5% up. Paytm, let's look at Paytm. We were talking about the overhang sort of behind now. At least when bad news is done, it's done, right? So 5% up this morning. A complete re-rating. The business model has changed. Nevertheless, a Suzlon. So some of these very, very initial trends, frankly, just the first few minutes, so can't say much, but at least what can be spotted is more of the same when it comes to yesterday. Not really a change in momentum per se on the market in terms of what we were seeing yesterday. Even an IRFC, etc., is not doing too badly at all. Kush, would you be looking at some of these rail stocks, these core economy and government capex run stocks this morning?
So for sure, something like a Railtel or an IRFC, from a technical standpoint also, they've perhaps broken, below certain key levels. But, if I look at something like a Railtel, 300, 310 was a strong support zone. That's where the stock perhaps, slipped to and is rebounding from there. IRFC also, if you see, seems like on a fairly strong footing, obviously on a relative basis. So here too, I think there are some pockets that will emerge. My only concern, Tamanna, as I just mentioned, is that even if today is the second day of the green shoots that we're seeing on some of these names, whether this rally in the coming days is sustainable or not is what I have my concerns about. Even if that doesn't happen, I think these stocks are off their highs and perhaps warrant a fresh allocation. If someone's looking at a fresh allocation, then not a bad idea to start putting in some money at these levels.
Okay. Well, watch out for some of those. Okay, LTTS could be an interesting one. They've signed an MOU with the government of Maharashtra. They've secured a $100 million program in cyber security. Now, this is interesting, and therefore, maybe this stock too, who knows, may react a little bit. So keep an eye out for this one as well. The ER&D stocks, Avinash Gorakshekar, do you like LTTS, KPIT, etc., or are there better bets to bet on?
No, I think, Neeraj, within the given space, I think KPIT Technologies looks to be quite attractive, from a longer term perspective. Not only do they have a very good order book, but I think the kind of commentary the management has given, I think, is quite reassuring. My sense is that L&T Technologies also should do well. But in terms of the price and the risk reward, I think KPIT Technologies could definitely give a better kind of risk reward if one were to take a 12 to 18 month view. I think this space is a niche space. Margins are good. And, some of these companies, which are in the space, the larger ones like L&T Tech, KPIT Tech, they have got significant amount of order book, which would give them good revenue visibility for the next, say, 12 to 18 months. So I think KPIT Tech looks more interesting. And we have been advising our clients to actually buy this stock on every decline. Very strong business model. And obviously, over the next, say, 12, 18 months, we could see a further re-rating.
Kush, what is the trade amongst defense stocks? HAL had bagged a big order, pulled back also quite well yesterday in terms of trade. As we step foot into today, how would you play BDL, HAL, BHAL? Is there an opportunity there for traders today?
For sure. BDL, I would perhaps wait a little bit on, but the other two names, BEL and HAL, are a very clear, buy on dips for me. The kind of fall that these stocks had seen, even that wasn't as exaggerated. They're taking support at just the right level. For example, HCL is taking support at the 50-day moving average for the last 2 sessions. So I think these stocks are a very clear buy on dips. In my book. So as I said, HAL, BEL, these are the 2 stocks that you should have on your radar. BDL too, but it's slightly delicately poised below certain averages and very close to the support zone. So from that perspective, I will just wait for perhaps for a session or two to watch. But HAL and BEL, continue to stand out and remain a buy on dip.
BDL, HAL and BL, but HAL and BL remain stocks that, of course, Kush is tracking in trade. Well, along with that, as pre-open is showing some signs of settling down. Let's take a look at what's moving. Kush, correct me if I'm wrong, but I think Swan was one of the stocks we've talked to you about in the past. Expected to see another big gap up. Fundamentally as well, there were a couple of big funds that bought into Swan in the month of Feb. The 5.5% uptick expected today, how would you play Swan?
So, Samina, hence, even before you asked, I made a point to speak about it in my opening comments. I will continue to hold on to this one. Sometimes the higher they go, the harder they fall. That's how, this stock has actually played out. Was into overstretched territories. Of course, the fall is quite deep, and anyone who's entered last might feel, the pain here. But as I said, continue to hold on to this one. If you want a positional stop loss and it comes a little deep at 480, but otherwise, I would suggest, continue to hold on to Swan Energy. The waiting period might get a little extended, but I think, the stock will perhaps, eventually get to those 750, 800 levels in the coming months.
Kush, no fresh buys on Swan Energy.
Well, the same thing that I mentioned about a couple of other stocks. Yesterday was a bump up. Today also we are seeing a 5%, gap up opening. My only concern is, whether this move is sustainable or not. And hence, and plus I'm not a big fan of averaging. So I don't really, suggest averaging. And once we're very clear, once we're in the clear that, the rally is sustainable, the worst is behind us, perhaps I wouldn't mind averaging at a slightly higher level also. But just for a day or two, I would like to wait and watch. Who knows, perhaps the Friday effect might also start, playing out today. Some profit booking might kick in. So I'll just wait and watch, perhaps, for a day or two. If the rally does seem sustainable, I wouldn't mind going out and buying at a slightly higher level also.
Right, Kush, and stay with us. We'll come right back to you. But over a half a dozen fund houses have declared the results of the stress test for the small and mid-cap funds. Alex is joining in with more details on that. Alex, what does the data say? It's looking too bad, looking okay?
So it's a mixed bag, Samina. And in fact, we'll have to talk to a lot more people to kind of get a sense of what is good and what is bad. This is a first of its kind stress test. And in case you're wondering what this is all about, this is essentially measured, or it's a measure to tell you how long it would take for a mutual fund to liquidate its stock portfolio. And the method to do that is that you take the 80% most liquid stocks, you multiply the daily traded volume over the last 3 months by 3, and you only take a 10% participation. You calculate how many days it would take to liquidate your entire portfolio of the 50% and the 25%. So that's the context. I have decided to speak about those that are taking the most time to liquidate half of their portfolio, and there are a few names here. On that list, you have DSP Small Cap, which has an AUM of about 13,700 crore, which is going to take 32 days to liquidate half of its portfolio. You have Quant, which is 22 days, which is among the larger players, or rather the ones that are taking the most time, the least amount. You have Nippon India, which is the largest small cap fund, which is going to take as many as 27 days. And you have Axis Small Cap Fund, which is going to take about 28 days. Now, one thing that we need to get clarity on is that this, according to the calculation, relates to the number of stocks in the portfolio and how much time it would take to liquidate those stocks. But then separately, these AMCs are also disclosing how much cash these schemes have. So for example, Axis, which is going to take, 28 days, if I'm not mistaken, to 28 days, has 10.7% cash in the small cap scheme. So these schemes obviously are going to be able to use cash as well to liquidate certain positions. Let me very quickly take you through the mid cap as well, if we can go to the next slide, because that is also going to give you a picture. And broadly, this is a better scenario. Of course, at the bottom of the screen, you have DSP once again, which has the most time. I'm hearing from the AMC that they're going to put out a note very shortly to try and explain some of these metrics. But long story short, guys, this is essentially a stress test. It is something that is a hypothetical scenario. How these things will pan out in reality and whether or not they face a situation like Franklin is another matter. But it's supposed to give investors an idea of how to deal with a situation like that.
Thanks, Alex, for that. And two things out here, viewers. One, for a lot of funds, the number of stocks and the AUM would also play a part in the number of days they would take to liquidate the larger portion of their portfolio. The exception out there is Nippon Midcap, which is lower on the days, despite the fact that they've got a higher AUM, part one. And part two, for a lot of funds, if they're true to label, and which is that in the small cap fund, they do not have many large cap stocks, then it's more difficult to liquidate as well. So that's to be kept in mind. Having said that, very interesting data and more analysis during the course of the show. But we have only 2 minutes left, so it's important to highlight what's happened. Sorry, you want to make a point?
Yeah, no, just the fact that the stress test will be seen, at least initially, with some trepidation. All of this will take time to sink in, that it's not going to happen. There is a very rare chance that you will have up to 50% of redemptions.
Yeah.
But the stress test was put in there, in place, and asked for a reason, to keep them on their toes.
Yeah, I mean, but I don't know. I disagree with the term trepidation, Tamanna. I really don't think these results are too bad. These results are fine. For most houses, they are fine. Maybe one or two odd houses, one or two odd schemes. Otherwise, for most houses, they seem to be fine.
There's only one on that one. There's only BSP that's out of the 20.
And their argument, I have spoke to a couple of guys, and their argument is that if for funds who've got large cap stocks in their portfolio and the true to label fund then comes into play, they are saying that we had more true to label than some of the others. Therefore, we have a larger proportion of these small cap stocks. Now, again, you can slice and dice data.
Which is arguable, right, Neeraj? Because
arguable.
if 65% is the minimum small and mid cap exposure you have, if you have a fund that's 80 to 85%, which is truly small and mid cap, will of course have that struggle. And very few investors would have only one fund or only one sector or only one market cap in their portfolio. So I think going back to the drawing room and taking stock of what your portfolio at whole looks like is more important than pinpointing and getting concerned about the number of days that you would need to liquidate 50% of your portfolio. But like Alex also indicated, this is a case study more than anything else. But over to you, Neeraj. We're gearing up for not too bad a morning, but 22,000 will become important in today's day of trade.
Most certainly. 20 seconds left for the markets to kickstart trade those levels. Important to watch. Both Samina and Tamanna highlighted some of those. We have 20 seconds left. Maybe Kush, very quickly, 10-second answer. That one top stock on your radar today.
Because it's a Friday, I'll give you two. Geo Financial is the first and Siemens will be the second.
Okay, the same stocks that Kush highlighted at the start. He's sticking to them post the pre-open session. We'll come back to our guests post-open, but here's how the markets are starting off. And let's start off with how the large caps are doing. Remember, the implied open was suggesting a very deep gash. We don't have as deep a gash, but let's see if this worsens. For about 80, actually almost in line now, 90 points, between 90 and 110, no difference mainly out there. Banks about 1/3%, so no recovery out there. Yesterday were down, today are down. Mid caps about 0.4%, small caps down about, actually faring a lot better. Mind you, the globe isn't a happy place today, so that's to be kept in mind too. But let's get the heat map up on the screen and show you what's moving and what's not. Well, overwhelming red, by the way. A lot of red, very little green. Actually, nothing in the green worth talking about because it's maybe a few defensives with a couple of Adani twins there, Adani Enterprises and Ports, but hardly anything out there worth talking about. The losing side, BPCL, 3.5% downtick. Coal India, Grasim, Axis. In fact, IT, which made this attempt to make a move on the upside yesterday, has again corrected today. IT is actually not going anywhere. I dare say I don't have too much to talk about. Tamanna, maybe get you in the scene because the large caps are dominated mainly by BPCL, which is down, a Coal India, Grasim here and there, but a lot of red, very little green. Maybe, Tamanna, you could argue a power grid now is building on, and Adani Enterprises after yesterday's 6% up move, another 1% up move, but otherwise, an okay kind of a start.
So, that's what I mean by a bit of wait and watch. People are wondering which way the wind is blowing as more information is coming, because on all the events we've talked about this morning, there is more to be unraveled and seen, whether it is details of who's bought electoral bonds or what the reality of those stress tests are, and we're going to be on top of that. But let's quickly pull up the broader market indicators before we get to specific stocks. I just want to see what's happening with the mid-cap 150 flat. Small cap index and micro cap is also what we can pull up because this has been pockets of pain. Nothing too much on either side, and even the micro cap back will up 0.5% up, but then it had also been cut the most. I'm going to pull up all of your OMCs, and some of them have been addressed by Neeraj as well, but HPCL, BPCL, IOC for one. And only because there is a clear reason for some pockets of pain. Now the question is, after a point, will there be an understanding that this is just 2 rupees and this is it now for quite some time? The larger trend of the government has not been to, pare down retail prices at the cost of these companies' balance sheets. I don't know if that'll happen, but right now the morning's been tough. Electro Green, only because we've been speaking about it. Megha Engineering, its parent, is the second largest buyer of electoral bonds between 2019 and 2024. That stock about 2.5% down. Again, not massively, frankly, with the kind of news flow. Paytm, at the end of the day, nothing great is happening for the company, but the worst may be over. It's been a rescue mission by a clutch of banks coming in for their UPI business. Their TPAP license is through from NPCI. They're going to sort of change who they are. They're now a payments gateway like a Google Pay largely. Nothing more than that substantially, so a bit of remaking, but that stock 5% up because the overhang at the end of the day is over. Swan Energy and Biocon, just the other two that I'm going to talk about. Swan Energy has just been on a roll the last couple of sessions, apart from the day when there was a big hit across the sectors and the broader markets. But Swan Energy, Kush Bora's pick, 7.5% up today. Biocon's the other one. The Biocon Biologics business has been sold. We'll try and get more details on that through the day as well. That came in last evening, 2.5% down. The street's not taken it too well. But Samina, what's on your list?
Well, it's not doing too well or too badly, but Swan Energy, like we talked about, 8% up move this morning. So if you're sitting long on that one, you're probably laughing your way to the bank. Another 8% gain coming in on Swan Energy, and that is turning out to be your top gainer in trade. BLS International, after 20% up move yesterday, seeing another 6% gain this morning. So there's no stopping this one either. 7% almost on BLS International. 197 Communication also seeing a big move, 5% higher. Campus Activewear is trading with a gain of 5%. IRB Infra is up 4% on back of an order win. On total collection numbers that came out. Endurance is up 4%. Macrotech continues to do well. Zomato, Delta Corp, KPIT Tech are not doing too badly. Phoenix Mills, Max Financials are all trading with a gain of 2.5%. So broader markets actually doing pretty well despite all the concerns and worries we had. The street really moving on, and it was a sell. It was really, I guess, sell the rumor, buy the news sort of a play out that we're seeing on the street. Benchmark is well trading close to 22,100, but it is the broader market that was looking stressed, continuing to gain for the second straight day. IRB Infra is up 4%. Like I said, on the sell side, it's another bad day for Tata Investment Corp. After seeing such a sharp move over the last few days, this counter is getting beaten down. Pretty much, it's been the third straight day of lower circuit on Tata Investment. The stock trades 5% lower. OMCs, we've already highlighted those for you, but the losses aren't looking as bad as we'd have anticipated initially. HPCL, which is down 13% in the last 1 month, is seeing a cut of 3%. Now, like Neeraj and me were discussing, the fact remains that these stocks have already sold off quite sharply. So some of this price cut could probably be in the price, and these counters may be getting lapped up now after the recent price correction. Electra, Tamanna has mentioned, Biocon has been mentioned. Apart from that, PB Fintech is down marginally. SGVN, Infosys, Godrej Consumer. So I think I'm taking heart from the fact that there aren't too many losers in the broader markets, and the losses are not very deep.
Real estate is recovering. Real estate is recovering.
So it definitely was sell the rumor, buy the news. I mean, I think all the overhang is done with. We can look ahead and pretty much take a call on technicals and fundamentals as opposed to just news flow that's more macro in nature.
So macro tech, Phoenix Mills, iBulls is just what I want to highlight because, that's the index is about 1.5% up. So in a, I would say, tepid kind of day, at least some movement over there. Even media stocks are not doing too badly.
About time for media.
This is, fundamentally look at it. This is the season for media companies. When you have elections or big events around the corner, that's when, revenues come in.
No, just one other stock which we brought up in the trade setup as well. Sundaram Clayton and Shakti Pumps. So Shakti Pumps, not a very large order, but maybe reacting. No, this is TVS Holdings. There is Sundaram Clayton, the stock, which has gained quite significantly today. So watch out for that one, 6.5% higher for that. And Shakti Pumps is up 5% as well.
Upper circuit on that one. That one's been on a roll, and you've had a couple of big AIFs and PMSs, in fact. And we spoke with Sumit Nagar a few months ago, and he was query optimistic on this one. So that counter clearly doing well, going in from more of a local play to nationwide play for Shakti pumps, and that's playing out well on the counter. Well, all in all, it's actually not a bad setup, and this is a big Friday relief coming in for the street. Kush, any top spots in the last 5 minutes of trade? Real estate, like Tamanna said, is recovering. Would you play any of those stocks for a recovery today?
Oh, absolutely. BLF is something that we've had on our radar for some time. Godrej Properties too. So we look at some of these names on the rebound. So Godrej Properties, if if you don't have a position, now might be a good time to enter. The positional stop loss comes in at 21.30, and the targets could be 22.70, and one that is taken now 23.50 also. So Godrej Properties does look strong. I think one conversation that perhaps I missed at the start of the show was on Bank Nifty. There are more than a handful of factors to suggest that there is a long trade perhaps emerging in Bank Nifty. It's taking support at a couple of levels, a couple of strong levels. HDFC and Kotak are starting to do well. Already there was a bit of underperformance. So I think Bank Nifty, for some brave hearts, is a long from here. The positional stop loss will come in at 46,400, and immediately 47,200 and 47,700 would be the target. So perhaps that's a conversation that I should have had at the start of the show itself.
We'll unfortunately have to call it a day right now with Avinash and Kush, because we need to slip into a quick commercial break. Gentlemen, both of you, thank you so much for taking the time out and being with us. Avinash, thanks for waiting by. Sorry couldn't come for an opening comment, but have to slip into a break. But don't go anywhere, because stress test results are very important. And up next, we have A. Balasubramanian of MD and CEO of Aditya Birla Sun Life AMC joining us live. Stay tuned.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on D&D working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join.
Welcome back. You're watching India Market Open, and it's not doing too bad in terms of D-Street activity. The Nifty is only down about 30-odd points, 22,100. Remember, is an important level of support for the markets. That's also where we saw the maximum call open interest addition. On the upside, of course, 22,200 becomes important with all the put activity limited to that side. So 22,100 to 22,200 is largely the range that the market participants are going to be tracking today. The breadth of the market's also not too bad. There is a slight bias on the downside, but generally speaking, the sentiment this Friday at least looks intact. So no big sell-off on the front line or the broader market space. BPCL, no surprises there, is seeing a cut of 2.5%. The reaction to OMCs is actually not as bad as initially expected. HPCL, BPCL, IOC are all seeing a cut in trading activity today. But like we said, because they've sold off so sharply in the last 1 month, what you're now going to see is all the supply that's coming in is probably getting lapped up for some of these OMC names. Coal India, Axis Bank not doing too badly. HCL Tech, iBank are all trading with a slight negative bias. On the upside, the Adani Group companies are looking good. You've got some of your banks and metal counters that are seeing a little bit of a pullback again in trade right now. On the broader market front, Tata Investment Corp is down 5%. HPCL, PB Fintech, Supreme Industries, Sundaram Finance are some of your top losers. On the gaining side, Swan continues its upward journey, 6.5% higher. Campus Activewear is having a pretty good day. Paytm has hit upper circuit. Capside Infra Projects is up 9%. Shakti Pumps on back of an order win is up upper circuit 5%. Vedanta Fashions is up 5% as well. But Tamanna, it's turning out to be a fairly pleasant Friday, and it wouldn't surprise me if we actually close at 22,200, and that would mean that the next leg of 22,500 again opens up for the bulls.
I think so. I think the next big trigger will be election dates being announced, possibly. That's one of them. And just the way the micro caps are jumping this morning from a Pesa low to a Railtel is also quite interesting. But another stock in news is NHPC. And they're actually speaking with my colleague Neeraj Shah right now. Let's go across and dip into that conversation.
Yep. Thanks for joining in for this conversation, because remember, power has been in the eye of a storm, because while India's capacity additions and the targets are very stiff, there are policy changes that have happened recently when it comes to wind power. There is question marks around the ability of companies to be able to raise the required capacity in the desired time. But what it points towards is a blue sky scenario if everything can turn out to be well, because the policy backing is certainly there. In light of this, let's get in the management of NHPC to talk about all that's happening with them Remember the third quarter results due to one-offs were very, very weak, and maybe a bounce could be anticipated there. But more importantly, the conversation with Mr. P. Goel, who's the CMD of the company, is about what are the kind of capacity additions that he believes NHPC and the hydropower sector can do in the next 2, 3, 5 years. Mr. Goel, good having you. Thanks for joining in. Start off with getting the first thing out of the way, sir, which is this. This is the underperformance that happened in quarter 3 due to Teesta floods. Now, do you reckon a sharp rebound can be seen starting quarter 4 itself? And I'm guessing that most of those losses would be covered as well.
Good morning. Q3 was a unique quarter for so far NHPC is concerned. And due to devastated flood in Teesta region, our generation was down by 27%, but it is not for the future. Our generation for the current financial year will be down by 10 to 12% for the whole of the year, but revenue will not be down in the same range because there are certain provisions in CRC regulations by which our financials are protected. In case of due to low relative water generation goes down, there are provisions to get reimbursement for the low shortfall in generation. In addition to that, our Teesta 5 power station is fully insured through our mega insurance policy, in which our business interruption loss is also covered. So, a majority portion of the lower generation due to devastated flood in case of Teesta 5 will be recovered through insurance contract, and we will be recognizing the differential revenue in the Q4.
You're saying it will be recognized in Q4, and will the insurance compensation happen by Q1? Because that was the earlier belief that you will get it by Q1, FY25 that is.
Yes, we are following the actual base of accounting. We will recognize revenue, but reimbursement of claim in case may happen in first quarter of next FY. So we will recognize the revenue in current year itself.
Okay, you will recognize it in the current year because of the accounting process, even if the actual compensation happens in Q1. Fair call. Now, Mr. Goel, fill us in on the plans for the next 2 to 3 years and slightly beyond, simply because almost every note that I read speaks about how your major capex coming on stream is happening post FY26. So, could there be a bit of an earnings lull for FY25 and 26? And could there be a very sharp uptick post FY26 in your numbers, power generation, revenues, EBITDA?
Our current capacity, installed capacity is 7,071 megawatt on consolidated basis. We will commission our Power 2 of 800 megawatt project in FY24-25 by October 24, and it will increase our regulated equity by 3,300 crore, and our PAT will also increase by 5 to 600 crore. And in FY25-26, we will be commissioning our Subansiri Lower project of 2,000 megawatt, which is the biggest project of as of now of the NHPC as well as country. In addition to that, in FY25-26, we will commission 624 megawatt Kiru project in J&K. And third one is the 120 megawatt Rangis 4 project in Sikkim. So by end of FY25-26, our capacity will be 10,500 megawatt, and regulated equity will be 23,000 crore.
Wow. So, okay, there is Parbati 2, there is Subansiri Lower, Rangit 4 and Kiru. Does all of this mean, and I believe there is also about 1,100 crores of solar capacity coming on stream by that period?
We are working on around 1,200 megawatt of solar projects. Out of that, 300 megawatt in Rajasthan, Bikaner is in advanced stage, and it will be commissioned by September 24. And rest of the capacity in solar will come in FY 24-25. End of 24-25.
Okay.
So, yes.
Okay. So, Mr. Goel, the regulated return from the installed capacity for you, say by FY26, can it grow by about 50% from what it is currently?
Our income will increase by around 60 to 65%.
By FY26, you mean?
Yes. And in addition,
from what you will clock in FY24, the FY26 regulated income will be over by 60%.
Yes. And in FY26-27, we will be commissioning the rest of the projects of around 3,000 megawatt. That will also earn additional regulatory income.
Got it. There is a lot of, it's for wind energy, I know, but I'm just saying there's a lot of talk around this reverse bidding process coming back for wind. So policy changes and what they might do to the business prospects of various entities involved within renewable power. You would have read the recent comments as well around, at least for wind power, reverse bidding coming into play as opposed to closed bidding. Is that a major deterrent, Mr. Goel?
Actually, we are hydro company.
I know. But I'm saying, is there an overhang of policy changes for hydro, wind, solar at all?
Yes, tariff is the issue. In reverse bidding, competition is very tough, stiff, and tariff goes down. So when tariff goes very down, it becomes very difficult to execute the projects.
I get your point. But you will not get impacted.
No. Basically, we are in hydro sector,
right.
But we are doing a little bit in solar and wind also. In addition to capex mode, we are doing certain projects in REIA mode, Renewable Energy Integrated Agency mode, in which we will get 7 paisa per kilowatt as agency charges. And in that case, capex will be from developer side, and our role will be to match the developer and the buyer. And we will get, in this process, we will get 7 paisa per kilowatt as agency charges.
Got it.
We are 10,000 megawatt capacity in this mode in current financial year, and already we have awarded around 5,000 megawatt capacity, and balance is in the process of awarding.
Got it. Mr. Goel, one final question really, and that is around execution risks. Now, a lot of, the targets are tall. Your own targets as well for right now, as well as for later on. I think the targets for FY30 and beyond are also very stiff. Are there any execution risks here? What is the, are the timelines that you're factoring in for each of these capacities coming on stream very tight, or are these realistic?
Whatever capacity up to 27 I have talked about, that is as per realistic estimates. But certainly there are challenges in execution of hydro projects. There are two types of risk. One is financial risk, and other is physical execution risk. So far financial risk is concerned, we are fully geared up. We have sufficient internal accruals, and we are capable to raise the loan from market. But so far physical risk is there, that will remain always there, because we have to work against the nature. We have to go under the earth. So execution risk will remain there. But of course, by adopting the latest technology of doing the work, we will be able to face such type of challenges.
Got it. Okay. We'll leave it at that, Mr. Goel. Thank you so much for taking the time out and being with us, and all the best for all the capacity additions that you're doing.
Thank you.
That's the view from NHPC. Buoyant. A 60% increase in regulated income from FY24 end to FY26. That is the story for the next 2 years, and then capacity additions beyond. It's time for a short break. On the other side, we have a conversation with KEC International's Vimal Kejriwal. They won a large order day before yesterday. So interesting conversation coming up. Don't go anywhere.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which has severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does this say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket,
Welcome back. You're watching India Market Open. Vimal Kejriwal, Managing Director and CEO at KEC International, joins in. Remember, the stock has been in focus, catching a lot of attention of investors and traders on back of big order wins. And of course, let's not forget a spectacular set of earnings that were posted by the company in the third quarter. Mr. Kejriwal, good morning. Thank you for joining us. It's actually looking really good for you. The last 6 quarters have been fantastic. Last quarter numbers have caught everyone's attention. And now you've gone out and bagged another big order to the tune of 2,257 crores. Tell us, what vertical is this? Is this TND or non-TND? Where does this take your order book? I believe there has been an upside risk to your revenue guidance as well.
Good morning, Samida. Thanks for having me. So largely this order is, I think, almost 80-85% is from our transmission vertical, and the rest is spread across, cables and civil. Also, on the revenue side, we have been talking around 20,000 crores, and I think we should be somewhere there, maybe 100-200 crores here or there, I don't know, but we should be close to our numbers, which would be roughly around 16-17% growth to our last year number, which again were at 16-17%. So I think we are doing well on the growth side.
Kejriwal, quarter 4 is historically a very strong order for order wins. And I believe if you can share with me your order pipeline as well, what you bid for, what is the conversion that we're expecting from those order wins, and where will fourth quarter or the start of next quarter stand at in terms of incremental orders?
So I think the issue is that this year it may not be as great as it always is because, and typically what happens is most of the orders come in the last 15 days. Now with the election, code of conduct almost around the corner, whatever has not been
Code of
ordered.
conduct applies every.
So, if you look at yesterday's announcements, we announced, some of our competitors announced, so most of the people got orders from Power Grid and, others. So I think the number would depend upon how soon the code comes and how quickly people, let's say we are L1, like even today we have an order L1 of almost close to 5,000 crores, of which some are from government utilities. So if they are able to process and give the orders before it is announced, whenever it is announced, I think that will impact. We have some. So in all, we have around 5,000 crores, as I said, partly from government, partly from private, and some from international. So we are still hopeful that some more things will come out from non-utility. As far as first quarter is concerned, I think till May end, I don't see much orders coming in from the government sector. But we have bid for a lot of tenders in the civil side and international, and we do hope that things will, start moving at least that side, and we should get some orders.
Kejriwal, can you quantify the order pipeline for me?
So if you look at the tender, I'll say the tender pipeline today is almost 110,000 crores of tenders, which we have either quoted in the recent past, which are not yet opened, or which are to be quoted in the, let's say, next couple of months or two or 3 months. So it's around 110,000, of which around 55, I'll say around 60,000 is from the transmission sector, both India, international, which includes our SA Americas, and the rest is between civil, renewable, and railways.
Right. And what is the conversion in terms of order historically to revenue? If 110,000 crores is what you're bidding for, how much of that will mature into revenue or orders? Historically, I know it's tough to call out what's good looking ahead.
So typically we have been getting around 15-16% of what we bid. Okay. Or I'll say 1 out of 6 is what we typically look at. So out of 110,000, which is there today, hopefully if we win 15%, maybe 15,000 crores should come out of this tender pipeline.
So Kejriwal, I want to talk to you about margins because I know historically margins were slightly under pressure because a lot of those legacy projects were not completed in that sense. Looking ahead, India and internationally, it seems like it's a supplier's market because the orders are coming in thick and fast, and there are only that many players like yourself that are bidding for these projects. What is the view on margins? We've seen an improvement in the third quarter. Is it fair to assume that you would go back to levels of 8% on EBITDA margins, or that looks a little far-fetched over the next few quarters?
Our expectation is that next year, I'm saying for the full year, FY25, we should be anywhere between 7.5 to 8. So it is not far-fetched. Okay. So I think we expect that, anywhere between 7.5 to 8, depending upon, what happens on the supply side and other issues, we should be close to that. And post that, I think next year we will finish all our legacy orders and all. So the year after FY26, I think we are clearly targeting to reach double digit.
And sir, the new orders that you're bidding for are coming in at better margins, you think, or that you've closed are coming in at better margins? So is there an upside risk from 8% going into next year?
It would depend upon which orders get executed, number one. Number two, what you said is right in the sense that there are orders which are bidding at I'll say higher margins. So it's not that, the whole piece is going up. It's, order to order, client to client with competition, what is happening, etc., where the margins get stacked up. But clearly there is an improvement in the margins at which we are bidding.
Mr. Kejriwal, I did read about the fact that businesses roaring in the Middle East. So countries like Oman, Saudi, or adding capacity in some of those Middle Eastern countries. What is your export order book? Is it healthy currently? Big order wins there expected? And also, are those export orders at better margins?
So if you look at our, let me give an overall picture of our revenue. Our revenues this year will be around 20,000, of which around 30% would be outside India. 6,000, 6,500 would be outside India. But if you look at the breakup in transmission, more than 60% of our order revenues come from international. India is higher because of our civil and railway business. So already we are at around 60-70% of our revenues for international come from the overseas market, especially Middle East and Americas. Clearly, Middle East is doing very well. And I think our order book in Saudi itself is more than $500 million. And right now we are all in T&D. We just announced our first oil and gas order in Africa. So clearly we are seeing that international will definitely grow, especially the Middle East and the Americas. But the growth in India, I think is far outpacing all other growths.
It's a problem of plenty in that sense, right, Mr. Kejriwal?
Yes, you're absolutely right. I think, yeah.
Right. I want to talk to you and understand about these supply chain pressures, and I heard a couple of your interviews where you said that there was some supply chain pressures that we were facing, and I do understand that that may not have a direct impact on margins, but it's going to delay projects or delivery in that sense. Do you anticipate delays in that sense, your orders converting into recognizable revenues then in the next couple of quarters? Is there a downside risk there?
So we are talking about a 15% growth next year from the current 20,000, which we anticipate to happen. So that should be roughly around 23,000. We have an order book of around 30,000. We have an L1 of close to 5,000. So typically we have seen that our conversion would be from order book to revenue, or it will be 1.5. So 30,000 crores should translate into 20,000 crores of revenue. Plus, we should have a lot more order wins which will happen during the year, and especially orders which come in Q1 or Q2 will get translated into revenue. See, unlike some of my peers and competitors, we are still not in heavy civil or items, projects which are running into 3 years, 4 years. My projects are typically, all between 18 to 24 months. So I don't see any downside risk to what we are talking in terms of the numbers or order book to revenue conversion. Coming to your question on supply chain, yes, there has been some pressure happening, and I think it's because you also mentioned the problem of plenty, where suddenly we are seeing a lot of orders coming. I've never seen so many orders coming in India T&D. Our India T&D order book and order intake is the highest ever. So clearly there will be a pressure because 2 years back, this industry was suffering very badly. So people had downsized and people had not added capacity, which they are now doing. So our view is that, probably in H2, we should have a easing of supply chain. People are adding capacity. So conductors has been the biggest issue. Now we are adding our own conductor manufacturing. Then I think the other item which has been on short supply has been transformers and GIS, etc., where we are now seeing government looking at relaxing some rules, etc. So I think in H2, the issue should get resolved. There has been a little bit compounding because of the Red Sea impact, where supplies are getting delayed from Europe or to Europe, which I think it's a matter of time, a month or two, it should hopefully get eased out.
Right, Mr. Kejriwal, it is so good to talk to you. And of course, it was great to know that times haven't been better and it's a problem of plenty. I hope and wish you luck. We'll hopefully connect with you soon again, hopefully when the fourth quarter earnings are out as well. But good luck until then.
Thank you for having me. Thanks a lot.
Well, that was the manager of KEC talking about how it's a problem of plenty and they've not seen more orders in their life. That's how great and good it's looking for KEC. But well, I'm going to quickly toss it over to Murli Swaminathan. He's joined he's talking to A. Bala to discuss more about the stress test results.
Thank you, Samina. Let me welcome A. Balasubramanian, MD and CEO, Aditya Birla Sun Life. Good morning, Bala. Thanks for joining us. Okay, so my first question is, how stressful is this stress test for mutual funds?
It's not that stressful, given the fact that we have been working on this stress test discussion for quite some time. One, as an industry body, there is a committee at AMFI, which is comprising of CIOs and equity, head of equity. Have been working closely with the risk management team of respective fund houses. There is a two committee that we run, and every time we look at anything that comes as potential steps on us to take to highlight the risk associated with the mutual funds. As you know, that mutual fund players have been, of course, saying for quite some time that the risk in smaller midcap, given the fact that the price has been quite substantial. Therefore, valuation would have gone out of acceptable level. Therefore, one has to manage the risk. Also, given the fact that huge amount of participation has come in this segment of the market. Therefore, often we revisit the risk associated with such kind of movement. And the number that has been being disclosed today, this has been tested multiple number of times on the basis of what has been guided. Assuming on a pro rata basis, you have to sell if there is a redemption of 50%. Assuming you have to sell on a pro rata basis by 28%. then what the kind of number of days will take to liquidate, which is nothing but a stress test. But in fact, in reality, it doesn't work that way. I think in reality, when money managers liquidate the assets when there is redemptions, first he sells what he uses cash, then he looks at other assets which are sellable, then he looks at one month of the company's basis which he sells. And also this doesn't take into account the price. There are liquidities in the market. At what price you will see the liquidity of the companies will rise significantly. If there is a price fall of say 10%, there is a high probability the volume of the companies traded also will go up by 3-4 times, though there is no evidence for that. But normally happens in a price fluctuation. Therefore, I would say that while it is the responsibility of the industry to highlight some of the risk associated with this kind of portfolios by giving these kind of numbers, but it is not something new to us. It is already being monitored internally by the respective risk management team of the AMCs. So now that it is coming in the public domain in one platform, this is something probably I would say is new to the industry. And it's again first time it's happening. Probably I would say this would be a welcome step in that manner.
Right. Okay. So from an investor's point of view, let me take this. We are looking at 10 days to liquidate 50% of your small cap portfolio. What does it mean for me as an investor?
There's only one number you have to look at. From investor's point of view, no investment is being made on the base of the stress test. The investment is always being made on the base of the segment of the market you make an investment, whether it is large cap, multi cap, mid cap, small cap. And then what is the purpose for which you are coming, which is a long-term investing. I think every investors, after taking into account these stress test numbers, whether he can get worried on the base of this, doesn't need to get worried as long as his investment time horizon is about 3 to 5 years. In general, most of the investors who are coming in the small and mid cap space, they are not looking at short-term gain of about say 3 months or 6. Somebody coming for 3 to 6 months and then looking at putting a large pool of money. Definitely, I would discourage not to choose these kind of schemes, going by the stress and so on and so forth. As long as he has a very clear thoughts in his mind that yes, I am investing money not for 1 year or 2 years, I am investing for the 5 year, then naturally these numbers will look one of the number they have to pay attention, but not necessarily they have to base the decision on the base of this.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than rupees 10,000, while high-end kits range from rupees 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is rupees 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between rupees 1,000 to 2,000, and in Goa, it is about rupees 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of rupees 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to rupees 2 lakhs per month depending upon one's work and creativity, with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%. Significant meaning, 29%, or the idea that it would make them look cool, 18%. Thank you for watching and stay tuned to NDTV Profit for more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. Our guest today is Pankaj Murarka of Renaissance Investment Managers. The case for a chat in today's show is simple. Is the pain in the broader markets likely to continue? Can the stress test actually result in further stress for these mid-cap and small-cap markets? And of course, Pankaj specializes in trying to figure out what are the themes that will be the next 5, 10, 15-year themes and which are not discovered by the market. We try and talk to him a bit about that. Pankaj, great having you. Thanks for taking the time out. Hope all is well.
Good morning, Neeraj. Absolutely. It's a pleasure always to talk to you and your viewers.
Thank you, Pankaj. Pankaj, I'm throwing in a bit of a spanner in the wheels, if you will, because the last few days or the last month and a half has been marked by severe volatility and downsides that have come in at the broader end of the spectrum. Is this the end of the small cap story for the time being?
No, not really, Neeraj. I don't think so. Just to put broader views in context, I firmly believe that we continue to remain in a bull market. Having said that, it's a matured bull market because this March, this bull market is now 4 years old. Bull market started in the middle of COVID lockdowns in March of 20. So what I would like to highlight is this is a matured bull market. In that context, I think, and given the fact that it's a matured bull market and equity as an asset class tends to be volatile, I think that's the nature of the beast. There will be volatility. Last year, calendar year 2023, we've had euphoric moves in mid caps and small caps. So we're seeing some pullback of that. Obviously, there are pockets of markets and more so in mid caps and small caps where there is a significant diversion or gap between fundamental valuation and stock prices, and there'll be a mean reversion. So I think we're going through that. I think it'll be a good and healthy correction in the market that we're undergoing. And I still think that the broader bull market from equities perspective remain very much intact. My view is that we are somewhere mid-cycle in this bull market. So I still think that this bull market has a longer to go.
Okay. Would the bent of an investor like you who is adept at identifying long-term themes which are not known to the markets at large or not discovered well, would the bent of an investor like you be towards larger stocks now, considering that there is a bit of a pressure at the broader end of the spectrum, or not quite?
Yes. So from a relative value perspective, you're absolutely right that we find more value in large caps versus mid and small caps. Just to put in context, what typically happens in every bull market, and this happened in this bull market also, at the start of the bull market, so in March 20, when the bull market started, mid caps and small caps were trading at 20, 30, 40% discount to the large cap indices. Today, we are at a stage where the mid cap index and the small cap index are trading at premium to large cap indices, again, which is very normal in a bull market to happen. So obviously, valuations in mid cap, small caps are extended. From a relative value perspective, we find more value in large caps. Having said that, we find enough number of mid caps as well, or small caps as well, which are far more quality oriented with solid business models, and which will still do well over the next 3-5 years. So we find value on both sides, but on the relative value perspective, you're right that large caps looks more attractive at this point of time from a risk-reward ratio perspective versus mid and small cap.
Okay. Well, one more reason for stress in the mid cap and the small caps, viewers, is several fund houses declaring the results of the stress test. Now, in case you're wondering what that is, Alex joins us with some very quick details of the same. Alex.
Absolutely, Neeraj. So I was speaking to the chief risk officer of one of the mutual funds here just to get clarity on some of the aspects that were unclear. And one of the most important points, of course, is that cash is included in the calculation. The other aspect to remember is that what they're using to calculate this methodology is days to liquidity, which means that the 80% of the portfolio that they're taking, which is the most liquid stocks, how much time does it take for the least liquid of that to complete? So what that means is, suppose you get a day of 56 days to liquidate that 80%. You divide that by half and you get 50%, right? So what that means is that it takes you 28 days to liquidate the half point. I hope that I'm explaining this correctly. What that means is that you can actually have what is called a days to cash, which means that you can sell both your most liquid and your least liquid stock on an ongoing basis, on a pro rata basis, and you can liquidate actually on a daily basis quite a considerable chunk of the AUM. So the chief risk officer was explaining that while on the face of it, some of these numbers might look stark, it may not necessarily present the exact picture on liquidity. They first of all can meet up to 5% in cash, and then on an ongoing basis 2 to 4%, 5% in some situations, they can meet basis selling on an ongoing basis, Neeraj.
Thanks for putting that into perspective, Alex. Pankaj, you've got past experience of being such a large manager in a large AMC. Is this stress test a big nervous development, or is this something that is acceptable?
No, not really. I think it's a good development that the regulator is being proactive and asking fund houses to disclose some more statistical details about the funds so that investors have access to this information, and more importantly, they can take informed decision. I believe because there's been some of these conversations around big bubble in mid and small caps, I think there are pockets of markets obviously there where there could be fraud, but I don't see it being overall at the aggregate level there's a bubble in the indices. Indices can correct, but I don't see them collapsing or being the peak of the cycle or anything of that sort at this point of time. And the other thing I want to highlight is, see, that's the nature of the beast. Equity markets inherently are prone to bubbles, manias, and busts. They happen every decade. You get one such cycles because equity markets are driven by greed and fear. So some of those things will happen because that's the inherent nature of the beast. So I think the incremental information disclosure is pretty good because it gives investors more information at their hand or at their disposal, and probably they can make more informed decision.
Got it. Pankaj, the other aspect is while people are betting on emerging themes, the most sure shot bet seems to be the ability to bet on where the pie is visible, which is the government's focus on capex, maybe manufacturing and pulling all stops out, while private capex hasn't come in. So amongst the safe bets, if you will, valuation taken into account, would you believe that all things considered, it still remains this capex / manufacturing piece, or are you looking at other things being the number one priority for you?
No, so you're absolutely right. I completely agree with you, Neeraj, that we are seeing a very strong revival or comeback of India's investment cycle. Primarily, obviously, public investments, or as you said, the government investments have been very strong. But I see very strong incipient signs of revival of private sector capex as well. And I see post-elections, we should see a very significant rebound in India's private sector capex because corporate balance sheets are very healthy. Corporates' profitability is at all-time highs. Corporates are making huge profits and they're sitting on balance sheets are delevered. More importantly, banks or financial institutions are in good shape and their balance sheets are healthy with strong profitability and low NPAs, which is important because they are the ones who want to fund the capex or investments through the debt by lending. So I think overall we've reached an environment where underlying demand in the economy continues to remain strong. Most of the companies are reaching capacity utilization which are north of 70%, which effectively means they have to start planning their capacity and execute those capacities. And I see that across sectors, sector after sector, in each of the core sectors, I see very strong investments. Also, as you rightly said, this is also driven by a revival of India's manufacturing, driven by China Plus One and PLI incentive, which the government is rolling out across sectors. So I think a combination of all of this, I think India's manufacturing revival story and the capex story or investment cycle story looks very compelling. I am firmly in the camp that all of us are underestimating the potential growth impetus out of revival of India's investment cycle and revival of India's manufacturing. So I think this cycle will surprise us on the upside big time.
Okay, well, surprise big time. We're still in the midst of the bull market. It's nowhere close to over. Reassuring words from Pankaj Murarka. We try and figure out from him what else within this investing landscape is he constructive on in what is turning out to be a slightly volatile period for investing and trading. Stay tuned. We'll be right back.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish Back with Talking Point in conversation with Pankaj Murarka. Pankaj, we've spoken at length about some of the themes that you've liked. Now, the reason why it's important to rehash or highlight some of those again is because valuations may actually have become reasonable in some of the broader market themes for sure. So, post Q3, post commentary, post the shakeout in the mid cap and the small cap space, what stands out as numero uno amongst the emerging themes?
So while, as I said, Neeraj, the whole engineering and capital goods space riding on back on investment cycle continues to remain one of our preferred themes or bets and companies within the sector, because we think some of the fastest growing companies of India over the next 5 years will emerge from that sector. Apart from that, we've been fairly positive on healthcare and IT as a sector, because we think IT is coming out of a prolonged slowdown of the last 18 months, and we see strong signs of revival of IT investments by global companies in the second half of this year, and Indian IT companies should be a big beneficiary of that. So we've turned pretty positive on IT as a sector. We like healthcare as a sector because we think the sector has done well in the last 9 months or so, but we still think that there's still strong growth ahead of the sector, primarily because pricing pressure in US is off the table. We're seeing significant price improvements in US generics market, and which will significantly benefit Indian companies. And we also think financials which have underperformed for a broader part of last year should make a comeback in the second half of this year. So these are some of the things or companies within these themes are what we like, Neeraj, in terms of what we are owning. What we are underweight is actually consumers. we think the economy has gone through cyclical consumer slowdown over the last 12 months, and it got accentuated because of a poor monsoon last year. Probably it will be time to revisit it post monsoons in the second half of this calendar year. Having said that, the sector also had headwinds of very expensive valuations, and on top of that, when you have a cyclical slowdown, which is what we've seen, consumer companies have actually underperformed over the last 2 years. So we still continue to remain underweight consumers as a sector.
Interesting. When you're betting on IT, Pankaj, and you track this so closely, I find it difficult to debate with you at all. But the point is at least the recency of trends. I mean, there's this Naukri job speak IT index which showed the hiring. That is also not picking up. So what gives you this confidence about a change in trend at all?
Neeraj, there is a very fundamental shift that is undergoing in the world, and which is probably we are maybe 4 quarters ahead of the cycle, and that's all driven by this generative AI. I think in my my professional career of 26 years, this is the biggest transformation that I'm seeing is going to take shape in the IT industry worldwide, and will change life for each and every industry and consumers all over the world. Businesses will have to prepare for that, and they'll have to make significant investments to transform themselves to meet the expectations of the consumers as consumers transform themselves, adopting AI solutions. So I think we are at a cusp of a point, maybe probably 4 to 6 quarters ahead, where we'll see the biggest investment cycle in IT sector, which will play out globally. I think this wave of IT spend that we'll see over the next 5 or 10 years, typically IT spending cycles, when you get a new technology, that wave lasts for probably anywhere between 7 to 10 years, which is what I've seen in the past with, let's say, the enterprise wave or the cloud digital wave and so on and so forth. I think this wave of IT spends that we'll see over the next decade will be bigger than any of the previous IT investments or IT spend cycle that we've seen in the last 30, 40 years in the world. So when I look at the IT industry from a slightly more medium-term to longer-term prism, I feel very excited about the prospects of this industry. As I said, we could be probably 4 quarters ahead of the street or of all of this actually translating into business growth for companies, but I think it's certainly coming. Okay. We as investors tend to take a slightly more medium-term, longer-term view. So we like to be 4 quarters ahead of the actual business cycle turning around. So we like to be slightly ahead of the street in terms of placing our investment bets, and then wait for that tide to turn and then reap the benefits of growth in underlying businesses. So which is why it's our DNA to be slightly ahead of business and investment cycles.
Okay, well. Slightly ahead, and sometimes it pays rich dividends if you can identify it well. Remember, Pankaj started off his career as a tech analyst, has studied this space for 30 years now, or maybe more, and therefore understands this space slightly better than what most other people would. Pankaj, take a moment to thank you for joining in today and giving us your thoughts on the show. Much appreciate your time.
Thank you very much, Neeraj. It's a pleasure as always talking to you.
Yeah, likewise. And viewers, thanks for tuning into this edition of The Talking Point.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Mutual fund stress test revealed for mid and small cap schemes, HDFC, Nippon, UTI, ABSL and more under the radar. Meanwhile, Electoral bonds data confirms corporate political party Nexus. BJP receives nearly half of the donations, followed by TMC and Congress. Paytm receives lifeline in the nick of time. NPCI issues NPA-PAP license to Paytm for UPI transactions. And finally, OMCs are under pressure in the wake of recent fuel price hike. Morgan Stanley Citi see impact on margins, but short-lived. the F&O show. It's not looking too bad for D Street this morning. 22,200 is turning out to be an important level of resistance for the treat, but 22,100 is where the support is being found. Sudeep Shah and Sneha Seth both join in with their F&O picks. Sudeep, I'll start with you first. It's looking like a range-bound day of trade. 22,100 on the downside, 22,200 is where there's immediate resistance. In terms of trade, do you think the pullback could continue and hence a strategy on the Nifty would be helpful?
Yeah, good morning. See, what we're seeing in terms of Nifty is that post that fall on Wednesday, there was a pullback yesterday. Now that pullback, but despite that pullback, indices were not able to cross and close above their 10 and 20-day exponential moving average. And once again, we are seeing this continuation of the overall downtrend. So I feel from the current levels, also looking at the way the short positions are being built and 22,000 put open interest, which was the highest. We are not seeing any major additions there. And along with that, 22,000 call writers are increasing. So I feel 22,050, 22,080 now will act as a strong resistance. And on the downside, important support levels such as 21,850, 21,870 will come into question. And let us just not forget that these were the same levels. 29th Feb, the low was 21,860. On 22nd Feb, also the low was 21,870. So these are crucial supports. So we are right now approaching those support zones.
Right. Crucial support zones is what we are currently getting close to. Sneha, how do you feel about the Nifty? What's the trade on the Nifty?
So very good morning. If we see a market, yes, the kind of consolidation we saw at the higher levels, we were expecting such kind of a profit taking. I believe now, if we see the technically on the Nifty chart, there was a rising trend line, and now I believe that trend line is acting as a resistance for Nifty, which is around 22,000 mark. So I believe we may see a correction towards 21,800, 21,700 odd zone. So I would suggest traders to go ahead and add buy put options if they are willing to do it. They can buy at the money put options in case of Nifty as well as in Bank Nifty. Banking index also recently it was showing some resilience, but now considering yesterday's selling and especially the follow-up selling in today's session, here also we are seeing some a correction below the trend line support zone. So I think we may see follow-up selling in these both indices, and anyone who's holding a long position and expecting a bounce back should think of exiting their position and stay light for now, at least if you want to go long. Anyone who wants to trade for an intraday or a short term, they can go ahead and buy at the money put options.
Right. Sneha, you also want to tell our viewers what your top trade recommendations are this morning?
So in individual counters, again, two calls which I have, that is on the sell side. First is TVS Motors. If you see, this counter has been showing strength continuously and was trading above the 20 EM on the daily chart. Certainly, it had a support around 2,100 odd zone, and it is almost breaching those levels. I think we may see a follow-up selling. So I would recommend selling this counter over here with a strict stop loss of around today's high, that is 2,159, and the target expected is around 2,010. Apart from this, I have a sell call on HDFC Bank. Here, if you see banking stocks, HDFC Bank has recently been consolidating, and the resistance is around 1480. So now from those levels only, we are seeing selling coming in. So I believe we can go ahead and buy a put option in this case. 1440 put option in the range of 16-17 can be bought. The stop loss can be maintained around 9, and the target expected is around 31.
Right. Sudeep, what about you? What are your top trades in the F&O space today?
Yeah, so the first trade that I have is on the short side, that is PFC futures short. What we've seen in case of PFC is today there has been an open interest addition and the stock has fallen 5%, and it's a clear short build up here. And along with that short build up, the stock has even broken its 28th Feb low of 387, plus it is trading at a 3-month low right now. So I feel from the current levels, PFC futures can be shorted with 386 as a stop loss and 366 as a target on the downside. The second stock that I have is on a long side right now, because I feel there could be some pullback in a few of the IT counters, and specifically in the last few days, LTTS is consolidating at higher levels right now. So I feel from the current levels, if you see there's some short covering also visible in LTTS. So from the current levels till LTTS holds above 5300, 5305 levels, it could rebound up to 5460, 5470. So this can be bought with a stop loss of 5300 on the downside for a target of 5430, 5460 on the upside.
Right. Thank you very much, Sneha and Sudeep. Unfortunately, we have to cut short the FNO show today, but because there's appointed viewing, we still had to do a few minutes of it. But it's a news-heavy day, but thanks for joining in. On the other side, we put the focus on stress, electoral bonds, and everything. That's the big talking point in the day today.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does it say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Since it was being placed before this court in sealed custody. The request, therefore, of the ECI is that the data which has been filed in this court may be returned to it so as to enable it to comply with the order of this court for uploading all the documents. Full stop. This request of the ECI has not been opposed either by Mr. Kapil Sibal or then Senior Counsel or Mr. Prashant Bhushan, then Counsel. Mr. Vijay Hansaya will dissolve. Full stop. We accordingly issue the following directions. (1) The Registrar Judicial of this court shall ensure that the data which has been filed by ECI in pursuance of the interim orders of this court is scanned and digitized. Full stop. Upon the process being complete, this may be preferably carried out during the course. It may be carried by during the course of the day tomorrow, by 5 p.m. tomorrow. Full stop. Once the above exercise is completed, the original shall be returned to Mr. Amit Sharma, then counsel appearing on behalf of the ECI. Full stop. ECI shall then upload the data on its website within a period of on or before, day after.
A copy of the digitized may also be given, so it will not take time.
A copy of the, yes, fair enough. A copy of the scanned and digitized files shall also be made available to Mr. Amit Sharma so as to obviate the replication of the process of scanning and digitization. So we'll pass another order.
Would your lordships consider issuing notice to SBI? They may have something to say.
Why do we have to? They should be here when the matter is going on.
No, I'm sorry, my lord. Please. They filed an application which is disposed of. They are not parties.
But really speaking, we can take exception to what they have disclosed because they were duty bound.
I'm not appearing for SBI.
The court can pass an order.
Lordships may hear. I'm not here, my lord, for political.
What is the operative direction in clause?
My lord, may I mention, my lord?
It says SBI shall submit details of the electoral bonds purchased since the interim order of the court dated 12th February till date to the ECI. The details shall include the date of the purchase of each electoral bond, the name of the purchaser of the bond, and the denomination of the electoral bond purchased. Shall include. Doesn't mean it will exclude.
SBI. Your lordship's order is clear. What your lordships meant, my lord.
Allow me, sir. Allow me. SBI shall submit the details of political parties which have received contributions to electoral bonds since the interim order of the court dated 12th April till the date of the ECI. SBI must disclose details of each electoral bond, details encashed by political parties, which shall include the date of the encashment and the denomination of the bond. So this is an inclusive order. It shall include all details.
Lord, so would your lordships see BNC?
And your lordship had said that the reason
B and C of your lordship's original. I'm not appearing. I'm assisting. I feel, my lord, SBI needs to be.
The order of this court, the judgment of the Constitution bench required SBI to furnish to the ECI all details of the electoral bonds purchased and, as the case may be, purchased or as the case may be, redeemed by political parties, including the date of purchase. What are the other?
Yes.
Date of purchase.
Name of purchase.
Name of purchaser. Purchase which have received.
And the denomination.
Date of purchase.
Name of the purchaser. And the date of purchase / redemption. Full stop. It has been pointed out, it has been submitted that SBI has not disclosed the electoral bond electoral bond numbers. What is it called? Is it called the unique identification number, or is it called the?
It's called the unique alphanumeric number on each bond.
The alphanumeric number of the electoral bonds. Full stop. The solicitor general submits that since he is not appearing for the SBI, a notice may be issued to SBI. Full stop. We direct the registry to issue notice to SBI, returnable on Monday. We'll keep it on Monday. Very well.
Keep your flags.
A copy.
My lord, may I mention, my lord?
Mr. Agarwal, just a moment. Don't interfere. A copy of this order shall be forwarded by the Registrar Judicial on the Standing Counsel appearing for SBI.
May I request, my lord, one thing?
Mr. Kapoor.
Sanjay Kapoor.
May I request, your lordships are keeping this on Monday. We are guests among us. This mentioning can wait, my lord, till Monday. I hope, my lord, I can convey myself, my lord.
There we agree with us. There is something to be said for what the solicitor said.
Mr. Agarwal, would you like to mention this on Monday?
My lord, I sent yesterday one request to Honorable Lordship for sumoto.
Credit us with reading our files and correspondence both. Would you like to mention this on Monday, Mr. Agarwal?
But I would request him to mention is fully aware. All of us will request him to
we join.
Your lordship may permit me to file proper application, but I was not a party, my lord.
Please respect the sentiments of your colleagues.
All of us are jointly requesting you to mention on Monday.
Keep your guys.
Great titles. Obliged.
All right, so the Supreme Court there was hearing a plea from the Election Commission asking for a return of documents that they had given to the top court in a sealed order. Said documents had all the details of receipts of electoral bonds, or what political parties have encashed right from the start of the electoral bond scheme in 2018. Now, what the Election Commission has published on its website so far is from April 2019 onwards. All the information before that was given to the Supreme Court in a sealed order. Now, the Supreme Court's original order had asked for the Election Commission to put all the information in the public domain. The Election Commission went back to the Supreme Court and said that we can't put all the information because we gave you the original documents in a sealed order and we don't have a copy because of secrecy. The Supreme Court now has said that we will in turn give you all of those sealed documents, but only after a digital copy is made. So the original papers can be returned to the EC after making a digital copy for it. At the end of the day, does it make a huge difference to what has happened in the electoral bonds case? Not really. We'll just have more information on exactly how much value of bonds were encashed by various parties. It's not had too much of an impact on the market. The market has turned in the last half hour to 40 minutes or so. The Nifty down nearly 157 points at this stage. Even the Sensex over 0.5% down. IT stocks are hurting the most. The entire IT index is about 1% down. And look at how public stocks, public sector enterprises have turned the Nifty PSE index nearly 4% down at this point. So you've seen a change in mood since the opening of markets quite clearly. Now what's dragging down government-owned companies or public sector companies is definitely the OMCs. Yesterday, the government announced that there would be a fuel cut of 2 rupees for petrol and diesel. It was anticipated ahead of the polls, though there were several brokerages which said that they don't think it's likely. It has happened, and you're seeing HPCL, BPCL really suffer for it. Indian Oil as well, HPCL down about 7.5%. Even a BEL, NHPC, NBCC, everything that was up this morning has seen a fair amount of pain. I want to just pull up top mid-cap losers to get a sense of how widespread this is, and look at the mid-cap index as well, because now you are seeing a turn in sentiment in the broader markets, and it's not just the PSUs, the energy pack as well. Even PSU banks are not doing too well at all. The Nifty feeling a spot of pressure at this point. Yeah, that's the Nifty PSU Bank Index, top losers among them. And you'll see Punjab National Bank, Punjab Sindh Bank, Central Bank, all of them are doing fairly badly. Only Indian Bank up in the green. I want to look at some of the other sectors. Let's pull up the small cap, mid cap and micro cap indices and look at what's happening there at this point, where the pressure is really coming in from and what the top losers are in these particular indices where you've seen the mood completely change. Look at that graph. So you've seen a drop of about 1.5% across these categories, led by the OMC stocks, but that's really more of just a sentiment turn. Now, a whole host of factors which are coming into play this morning, and as we said, if you joined us for India Market Open as well, the market is taking some time to understand what the real reason is. So let's just quickly pull up the heat map and take a look at where the pain points are coming in on the index, on the Nifty at least, and why we are seeing that kind of a cut coming in. Not really, bounce back from its lowest point of the day, but yeah, a sea of green over there. Bajaj Finance doing okay. Bajaj Finance, UPL, both doing okay. Bajaj Finance at least was one of the names that was donating to electoral bonds, but we've not seen too much of an impact there. I'm just going to quickly pull up Electra Green Tech. Electra Green Tech was in the news today because it's Mega Engineering, which has a sufficient or a majority stake in it, is the second highest donor or purchaser of electoral bonds. That stock now has taken a tumble off its lows though, but 4.5% down. We're going to take a very short break, but stay tuned. Updates, news and a lot more market action on the other side.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the spurge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032 while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than rupees 10,000, while high-end kits range from rupees 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is rupees 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between rupees 1,000 to 2,000, and in Goa, it is about rupees 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of rupees 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to rupees 2 lakhs per month depending upon one's work and creativity, with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%. Significant meaning, 29%, or the idea that it would make them look cool, 18%. Thank you for watching and stay tuned to NDTV Profit for more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide?
And welcome, you tuned into. Hello and welcome, you're watching the Small and Mid Cap Show. I am Mahima Vachrajani and with me is Harsh Sayata. Well, before we move on to the management that we're going to speak today, that is NCC Limited, a quick check on how the markets are panning out to be. Well, if we talk about the benchmark indices, the benchmarks are a bit under pressure. Nifty is around 0.8% down and Sensex is around 0.7% down. If we talk about what is bringing down the Nifty? Well, of course, the first name that stands out is an OMC, which is BPCL, after the Ministry of Petroleum and Gas cuts ₹2 in both petrol and diesel. Then we have Coal India, NTPC, and again ONGC, which is pulling down the Nifty today. If we talk about the advance decline ratio on the Nifty, well, only 8 advances and 42 declines. But the pressure is seen more in the broader markets. Harsh, clearly the broader markets are not doing well today.
Well, yes, absolutely. The sharp reversal that you see on your screen on the advanced decline clearly indicates
that the broader markets which were in the green and were doing fairly well, 0.5% higher in early trade, have now completely slipped. We are 1.5% down on the Nifty mid cap. We are 1.2% down on the Nifty small cap. And the breadth of the market is looking quite weak. Not as weak as we were at day before yesterday. That was another day, but weak nonetheless. The advanced decline is quite weak. When I'm looking at the top losers, the key drags, HPCL, BHEL, GICRE, Apollo Tyres. So the breadth in terms of sectors quite diverse in that sense, and therefore no real one particular sector which is leading the declines per se. In terms of even within the Nifty small cap space, there are a few gainers, something like a Campus, something like a Swan Energy, Jamna Auto, Reddington are all up in trade, not doing too badly. In fact, Reddington is now above the 200 mark, not doing too badly at all. And among the losers, you have the likes of RITES down 5+%, Nalco down 5+%, Tata Investment on lower circuit down 5%, Engineers India. So a lot of PSUs taking the brunt in trade today. Let's pull up the Nifty PSE index and let's just pull up sectors very quickly if we can to try and understand. There you go. So the Nifty PSE is where the pain is, along with Nifty Energy and PSU Bank. So the PSE pack is really facing some amount of pressure, and that's probably one real big pain point currently in the market. We'll of course cover more on that, but let's quickly try and go across to construction firm NCC. That one's in focus today. Hyderabad-based company saw a good rise in their Q3 numbers, both on revenue as well as PAT. Slew of order wins tempered in Q3 in comparison to first half. First half was extremely strong. And we have with us Neeraj Sharma, who's the head of strategy at NCC, to try and break down some of those numbers and try and help us understand where the company is currently and where it's expected to go going forward. Neeraj, Q3 in terms of order wins may not have been the best when I compare it to H1. Now do you see order pickup happen only post-elections? Is that how one should look at it?
That's right. But I would prefer to answer this question a little differently. It is possibly not correct to only look at a quarter. We have to try to see things in its totality. When we started this fiscal, the order inflow target that we had shared with the street was 26,000 crore. And as we speak, we have already booked about 87 to 88% of that number, which is 22,715 crore to be precise. And we are quite comfortably placed, to really hit the number that we had shared with the street, that is of 26,000 crore. So it is possibly, see, the order win in a quarter or in a month is really a function of, the actions that our clients take, in a normal course of business, we continue to, submit a lot of bids. But at the end of the day, it is the call that client has to take, when the client intends to really decide. But I do not think that, this is really a discouraging news, because we are quite on target to hit the order book number that we had shared with the street.
Right, Neeraj. Mahima this side. You said that 26,000 is achievable. Where do you see this, first thing, where do you see this entire remaining 26,000 order book coming from? The gap, of course. And how confident are you to achieve this, and in what segment are you expecting this order book to come from?
Primarily from three big segments, the buildings, the first one, the second one is transportation and electrical division. These three divisions are the divisions that is, expected to contribute to what is really left, which is very small number really. What is the difference, 22,715, let us say that, it is very close to 23,000 crore. So what really remains to be bagged is 3,000 crore. So we are quite comfortable, to answer your question specifically, to achieve this number.
Sure. And with regard to, sir, your execution timelines, 56,000 odd crore, 57,000 odd crore is where your order book currently stands at. How do you expect execution to play out? Because you're already seeing very strong revenue growth. Can that kind of number continue?
We are quite hopeful. We are quite hopeful, This number really, if you take into account, we have, made some announcements in the last month, that is month of February, that is 1,476 crore. If you really take that number into account as well, we are very close to, 59,000 crore. So we are comfortably placed. The execution also has been quite strong. The numbers that we have shared with you, that is 9 months performance, we have already, surpassed the number by at least, close to 35%. So we are very much, on track to really achieve the revenue guidance that we had shared with the street, which is of 20% growth.
Sure, sir. A slight connection problem, and while we fix that, just going to quickly take you through some of the numbers that NCC has clocked. Revenue growth was around 34.5% for Q3. EBITDA also up by a similar number, and margins absolutely flat, just below the 10% mark. So we'll have to try and understand whether margins at all will improve. So that's one. The other piece also is where does this revenue number go? So Mr. Sharma, what I was trying to understand from you is if you can put a number to this, do we expect revenues to go from roughly 20,000 crore FY24 to around maybe say 30% in FY25? Is that the kind of growth one can expect?
See, FY25, we have really not worked that number out. Give us some time. In a business like ours, that is project business, we start talking about the next financial year only after completion of, the last year. So we still have, about 2 weeks left of this financial year. Then we will start that exercise. What happens is, we are only talking about a lot of projects, 150, 160 projects. So after completion of a financial year, we try to look at all these projects in a very objective manner and try to see what is the possible contribution from each of the projects for the next financial year, that is FY25. And then we seek the approval of the board. I would be happy to share that number with you, let's say, in the month of May. Give us some time. I don't have the number ready with me.
Right, Neeraj. Point taken. Neeraj, about your debt. Your debt on 31st December was around 1,400 crores, and you plan to achieve to have the debt reduced to 1,000 crores by FY25. One, where does your debt stand at currently as of March, and how do you plan to reduce this to 1,000 crores?
Ma'am, we have not shared about the target debt for the FY25. We have not really shared any number for FY25. All that we have shared and all that we are talking about, number for FY24. We have already shared a ballpark number that is, 1,300 to 1,500 crore.
Sure. Okay. So I take your point. And with regard to your margins, they've hovered around the 10% mark. Expect that to continue going forward, or as you scale up, because you're ramping up so quickly, will margins also start to move up? Is that something that one can expect?
See, it is the considered view of the management that, we try to focus on the margins. There is no point in just delivering a growth, growing the revenue without the margin. So, as we move forward, we are quite hopeful of, maintaining this kind of margin as well.
Right. And regarding your smart metering part, you have an equity investment in the SPVs, which is estimated around 100 to 150 crores. Are you looking for more such orders in terms of SPV metering, and are these margin accretive?
Absolutely, absolutely. We have bagged 3 smart meter projects. 2 projects are, in SPV, and 1 project has been awarded directly to the parent company, that is NCC Limited. And the market is very big when we talk about the smart meters, and we have already bagged sizable, amount of this kind of project. So we are quite hopeful as and when an interesting opportunity comes up, we would be more than willing to participate.
And with regard to execution of smart meters in terms of delivery, when will that start, and how will that contribute to your revenue mix in terms of percentage?
Sure. The smart meter, the 3 projects that we have bagged, these projects are sort of, annuity kind of project. What happens is in these kind of projects, firstly, we have to construct, we have to, deliver the project. The timeline for that is 27 months. Once all the meters are, installed, then what the client calls O&M starts. So, this project is expected to be continue for about a decade's time, 10 years time.
Sure. And the mix in terms of how will it contribute to revenue?
As we speak, this total, the total contribution from what we call electrical T&D is close to 22% of our order book. The 8,000 crore value is really from the smart meter.
Okay.
I'm talking about the total value of the project.
Okay. Thank you so much, Mr. Sharma. That's a good perspective with regard to NCC. Thank you for joining us. Of course, we'll connect back with you in May for better guidance on FY25. So we'll do that. Thank you for this one. But we'll slip into a very short break. More on the other side. Lots happening with regard to the mid stocks, and we'll have an analyst on the other side to discuss more on this one.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phrases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Welcome back. You're watching the small and mid cap show. Well, since the small and mid cap stocks have been under pressure this week, we have with us Dhananjay Sinha, Head of Equity Research of Strategy and Economist at Systematics Group. Welcome to the show, Dhananjay.
Hi.
Hi.
Tell me.
Yeah. So my first question to you is that, you know, the mid cap 150 has fallen around 5% in the past 5 sessions and the small cap 250 has fallen around 7% in the 5 sessions. What do you make out of this correction? Is this the right time to buy the small and mid cap stocks?
So I think the important thing here is that if you look at last 1 year, I mean, the mid and small cap segment, and also I would say not just the mid and small cap, but also I think the PSU pack, etc., have actually given a fairly strong returns. I would say almost like 50-60%. So basically, what is happening is that there does seem to be a certain concern of a certain froth with respect to the valuations and the kind of risk that retail investors would be running is something that the regulators are concerned about. And I think SEBI has been very proactive in terms of taking measures to arrest this kind of a bubble. So I think at this juncture, I would say that it is quite unlikely that the regulators will relent from the current level of current levels. So they would want to see an orderly transition towards a more saner market situation. So I would say that one should actually refrain from taking risk at this juncture because I think it will unfold over a period of time. Because I would say we don't know what is the kind of exposure certain institutions or certain large investors would have taken, how much is the leverage money that is being pushed into the mid and small cap segment. We don't know that. So I think there is a possibility that the severity of correction that is there might actually accentuate as we go forward. So I would say in terms of valuation, the mid cap and small cap had gone almost like 50% higher than Nifty or the benchmark large cap indices. So I would say that markets would actually gravitate more towards valuations, especially in the large cap segment and specific sectors and stocks, etc. So definitely at this juncture, the illiquidity premium in the mid and small cap is quite compressed. So I think certain amount of unwinding will continue to happen in the near future.
Got it, Mr. Sinha. Harsh also joining in. I want to try and understand. So you are expecting that valuations will correct a little bit more going forward. How much are you expecting in terms of a correction for it to start looking decently valued for you?
So, I mean, very difficult to give a number. So basically, the small caps typically should typically has higher illiquidity. So if the small cap is trading 50% higher, or let's say it has corrected a bit, let's say about 40% higher than the large cap, it should actually be trading at discount ideally, because the large caps are typically more liquid. So essentially, why people typically buy small cap is because they expect faster growth in smaller companies, and so the thing is, there is a certain growth premium for the small cap, but there is a illiquidity risk with respect to small cap, and hence you should actually, in a scenario where the liquidity tightens, and it's quite likely that the premium should fall at least closer to one level. So I think there can be a considerable correction out there. I would say one has to look back into history to gauge what had happened earlier. So if you look at the demonetization, the GST episode, you had large liquidity coming into the banking system, and that funneled into the market through the mutual fund routes, and the valuations also surged earlier. So if you look at 2018, you had the NBFC crisis, and that funneled into a sort of a bigger correction, the small cap thing at this juncture. I would say NBFC is one space that RBI has been tightening, also the banking space. So I think the RBI also would want to reduce the liquidity flow and the leverage that would be happening. And in the current situation, it is not as much the mutual funds route that has actually fueled the bubble. It is basically the retail investors directly doing so. So I would say that the premium that the small cap and mid cap are getting at this juncture is still fairly high.
Right.
So I would say that illiquid stocks can actually correct quite a bit.
Right, but Mr. Dhananjay, how much more do you expect these mid-cap and small-cap stocks to fall, one thing? And which sector do you think will experience the most pressure amongst all these sectors?
So I think, you see, there is no fundamental reason why valuations had gone up. So every day, stocks were rising by 5%, 6% or thereabout. So the thing is, this is a froth all over the place. I would say whichever segment that have actually gone up very sharply, I would say there will be more correction out there. So, it's very hard to tell, at a broad level, because individual stocks have actually done well. It's not very macro and not very sector specific. I would say if I look at the sector specific fraud that I have seen, it's largely in the PSU space, PSU banking space in particular, if I have to really categorize it that way. But it is far and wide, I would say. It's not. It is agnostic to a particular sector.
I take your point, sir. So I want to squeeze in one last question very quickly. Sure. Where are you seeing a pocket of value? Because there are some sectors which are only SMID sectors, where I can only play that sector through SMID. Say, for example, sugar. Where do you see a pocket of value in SMID?
So the thing is, you will have a contagion effect on good stocks as well. You might actually see value creation happening in this level, or in this current episode of correction. So I would say, chemical is one space that I would look for. I would say pharma is another space that I would look for. I think the small cap IT sectors are also correcting. I would say that is where I would sort of look for value pick as well. So these are some of the things that I would sort of look at. Export oriented, the capital goods segments could also do better. So one can look at that as well. I think those are the things I would say.
Right. Well,
I would look at. Yeah.
Right. Right. Thank you so much for speaking with us at NDTV Profit, Mr. Dhananjay. We'll definitely speak to you in the coming weeks for stock-specific action. Well, that's all we have on the show for now. Stay tuned for more news and updates on NDTV Profit.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit. Good morning. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Alex Matthew. And this show is all about answering all your stock related questions. So you can write your queries to any of our social media channels or on the WhatsApp number that's flashing on your screen right now. You can also write to us on the YouTube live chat and we'll be tracking that and we'll take your questions from there. But before we jump into the questions, let's quickly take a check of the markets and where they're currently at. If you look at the benchmark indices, they're in a bit of a weak state. Started off on a bit of a positive note today, but as we speak, it's down about 0.8%. Now, there is, however, more pain in the broader end of the spectrum. If you look at the Nifty midcap index, that's down about 1.3%, 1.5%, and Nifty small cap also down over 1% as we speak. Let's also look at some of the contributors in the Nifty 50 index and see what's dragging the index down. Now, the biggest loser today on Nifty 50 is, if I'm not wrong, there's more pain in the PSE index, and among losers, we have the biggest loser as BPCL, which is down over 6% in trade. Now, there's Coal India that's down 5%, NTPC down 4%. Among some gainers, we have Bajaj Finance that's gaining over 2% in trade, UPL, ITC both above 1% as we speak. So that's where things currently stand. Let's also take a look at how the sectors are faring, and I think there's a lot more pain in the PSE space today. If you look at the PSU Bank Index, that's also down 2%. But the pain point today, Alex, is the oil and gas. Now you look at the Nifty oil and gas, and that's down over 3% as we speak. Now this comes on the back of
the cuts in the petrol and diesel prices, and it's an interesting time because we're perhaps a days away from the introduction of the days or the dates for the general elections to be announced. In fact, let's get our guests on that note. We've got Vineet Bolinjkar, who's the head of research at Venturous Securities, and Ayush Mehta, tech research analyst at Nirmal Bang. Thank you so much to the two of you for taking the time this morning. Vineet, I'll come to you straight away. We've been waiting for well over a year to see any movement in the prices at the pump for petrol and diesel. We're talking at a time when Brent crude is currently at, what, $84 to the barrel. It doesn't seem to be moving too much out of that band. So perhaps to a certain extent, one could argue that there was headroom for these oil marketing companies to change the prices, but that hasn't happened. Now that it has happened, what are the implications for these companies and investors?
So, in my opinion, this is just a short-term blip where we are seeing the markets sell off. But we believe that, over a period of time, the markets will gain back again. Primarily because, the constitution of their business is rapidly changing towards greener fuels. And we hope that, this will benefit the market, these stocks quite a bit. So right now, while the trend is down, and it is not specific to these stocks, it is the entire across the board selling that is happening, and they're not being spared either. But we believe that, going ahead, you should be buying these stocks on dips and wait for the market to bottom out. It has been our consistent view that around end of this month is when we will see the market kind of bottom out and start resuming the uptrend again. So to that extent, buying into these stocks at the end of this month is a very good time period to enter these stocks.
But Vineet, you're talking about both, which of the three are you talking about? I would assume you're talking about the three big ones, IOC, BPCL, HPCL. Which one would you pick?
My preferred pick is BPCL.
BPCL, okay, fair point. It is time, in fact, actually, you know what? Why don't we also take a check on the technical, since we're talking about the end of the month, where at the midpoint right now, Ayush, if we're talking about BPCL and perhaps also a view on IOC and HPCL, what are the technical indicators to watch out for, and what price would be great to accumulate at?
So if we talk about the charts of all these OMCs, let's start with BPCL. So BPCL has given a breakdown of its 20-day moving average and it's currently trading below the Bollinger Band's lower band. And so the support point here is 560, which is the 50-day moving average. It hasn't tested in quite some time now. So I think 560 would be the point where BPCL would stop falling. And let's talk about IOC. IOC has given a breakdown of that 50-day moving average, and IOC is looking much more weaker as compared to BPCL. So I think IOC, the actual accumulation zone would be around 140 levels. And let's talk about Petrol. So HPCL. So the ideal buying zone for HPCL will be in the range of 425 to 430. So that is also it's around its 100-day moving average. So I think that would be an ideal buying zone for all these three stocks.
Point. Queries, and in fact we've got quite a few that have already come to us on WhatsApp. I'd encourage you, if you are just tuning in, to check out that number on your screen and send us a question. We've got the first question coming in from Ravi Kumar, and it's a question on Nelco. He's bought, I think, if I'm not mistaken, no, or rather he's asking, since it has fallen from the highs, should he look at buying at this current juncture? It's currently trading at 705, and if we pull up the chart, perhaps we'll get a perspective of how much it has fallen from the top. But Ayush, on the technicals, would you suggest a fresh entry right now?
So if we talk about Nelco here, it is currently trading at around 705, and it has fallen from almost 885 levels. It is actually at the support zone currently. 705 is the support zone for Nelco. I think some positions can be added at this current level by keeping a strict stop loss of 680. And the targets we are looking here is approximately 785.
All right, got it. Next up, we have a question from Chandra, and they're talking about the counter Schaefer India. They've bought the stock at 3,085 levels. This is slightly elevated if you compare it to the current price. That's somewhere around 2,900 rupees. Yes. Vineet, from a one-year perspective, would you suggest staying into the stock?
Yes, definitely. So, it's a industrial consumable, and we think that the manufacturing sector is on a tear, and these consumable stocks should definitely benefit from the trend that is playing out. So it would be very interesting to keep holding on to this stock.
Fair point. I'm going to take the next one from, okay, Chandra is already done. We're taking the Girija's question. She's talking about HSCL. She's holding 50 stocks or 50 shares at 59 rupees. Shall she continue to hold or sell is the question. The stock is currently trading at significantly higher than her buy price at 310. I do not know when she bought this stock. Ayush, on the charts, how does it look?
Well, it's a trade-to-trade script, and from quite some time we are seeing a selling pressure in this stock. So I would recommend to book your profits and exit from this stock and look for a better opportunity in different stocks.
So let's extend that just a bit. If you are assuming that she sells today, what kind of stocks should she look at in this market, both for the short, medium-term strategy?
If you ask me, in chemical space, then Sudarshan Chemical is looking good at current levels. It has formed a base of approximately 545 levels, and it has been trading higher since then. And 575 is the new breakout zone. So I think Sudarshan Chem can be bought for a target of 625 in the short term, and for the long term also it can be kept for a target of 700 to 750 as well.
All right, got it. Next up, we have a question on Azad Engineering. This one's from Shri Kishore Sharma from Bihar. And they say they already have bought into the stock and have bought at the levels of 524. It's doubled from there. Now, from a 3-year perspective, Vineet, would you suggest holding on to it or maybe take some profit off the table?
See, it's a new listing, and it has given very handsome returns to the investor. So I would suggest booking part profit and carry the remaining quantity, so that he can benefit from the free shares that he gets, sort of, because it's almost doubled, right? So I believe that Azad has a good track record of performance, and it will definitely do well, but it's always good to take profits.
Okay. Satya has got this next question and asking about Bata India and whether or not it should be accumulated for the next 1 to 2 years. Vineet, what do you make of this? Because we haven't really spoken about footwear stocks in the recent past. Should Bata be bought?
If you're looking to buy into footwear, I think Bata is one of the best stocks there. It's not done too much over the last couple of years. But definitely, if you are looking for an exposure into the footwear stocks, Bata is definitely the top pick out here.
What does one bear in mind then? Not necessarily going into the earnings numbers and all of that, but what metrics should one watch on an ongoing basis if we're talking about Bata and buying it at this point?
So I think you should just track the revenue growth and the margins, and these would be the important metrics to track at the current levels.
Next up, we have a question from John Joshua from Chennai. Now, Ayush, let's take a technical check on Hindustan Unilever. Now, would you suggest, since there's some pressure in the stock building in, would you suggest accumulating at this juncture?
We are seeing quite some profit booking from high levels of approximately 2,700 and the stock is trading at 2320, where the charts are not yet positive and the stock is in the lower band of the lower channel. So actually the ideal zone would be around to take a first investment into this stock will be around 2280. And if that is broken, then we can expect a further downside towards 2200 also. And that can be the buying zone. That can be the ideal buying zone for the long term.
All right. We have to slip into a very quick break, but we've got several questions which we will take after that break, so do stay tuned.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does it say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching Ask Profit. And the next question that we're going to talk about is from John. This one's on Reliance that he bought at 2,900 rupees and TCS that he bought at 3,975 levels, Ayush. Now, would you suggest holding on to this from a shorter term perspective? What are the charts showing on both of these counters?
I feel Reliance should be holded because it's taking the support of its 50-day moving average is around 28, 50, 55 levels, and it is currently trading like near that only. So I think we should definitely hold Reliance. The stop loss we have to maintain here is 2,800. If we talk about TCS, so TCS is looking good at current levels, can be holded, and I feel the target coming here is 43.40 in the short term. And the stop loss we have to maintain here in TCS is 4,150.
Fair point. I want to add to that list, and we're talking about HDFC Bank next, and Sujay from Kolkata has got this question. So just in the span of the last 3 minutes, we've spoken about 25, or will be speaking about 25% of the Nifty 50. Vinit, this question is for you. Sujay from Kolkata is asking about HDFC Bank. 1,450 is his buy price. So, I mean, more or less where the stock is currently traded, not at the low point of the recent times. He's looking at just the next 6 months, but I'm specifically taking this question to you because a lot of people are talking about how this is a great value buy looking at the legacy of the bank. But the question remains about how it's going to turn around its fundamentals.
So, I believe that this is a trial period for HDFC Bank, this quarter particularly, what the numbers they reflect. Because they have guided towards, focus.
I think we've just about lost the feed on from Vinit, but I will take the same question to Ayush. Vinit was talking about the challenges. Okay, Vinit, if you're back, you were making a point on the challenges that they're faced with on the bottom line.
So the challenge is on retaining profitability, and if they're able to manage to do that, and the growth slows down. So somewhere the market will give it a little bit of respite, because then from the next quarter onwards, once the growth has stabilized, their liability franchise has picked up, it is expected that then the growth story will pan out. But what I would I am not very positive on holding on to this stock for some time. You're not losing much money. So, it's better to exit this stock and get in at lower levels, or look at some other better franchises like ICICI Bank, which have got a sure short case of growth going ahead.
All right, got it. Next up, we have a question from Amit, and we're talking about Nestle and Astral. Now, Astral, apologies for that. Now, this is for the shorter term, from 3 to 6 months perspective only, Ayush. Would you suggest buying into these two stocks at this juncture from a point of view that you're going to sell off or will be able to sell off at a profit in the next 6 months itself?
Let's talk about Nestle first. Nestle charts are very positive. We have initiated a buy call on Nestle and we have recommended to our clients as well. So we feel Nestle is definitely good and can definitely be bought at current levels. And the first target we are looking here is 28.50, which is approximately 250 rupees from here. And let's talk about the other stock, Astral. So Astral, we have seen some profit booking from the higher levels. I would not recommend buying at current levels because the breakout of this stock will come at 2050, which is its previous base. So once it crosses above 2050, then the position can be added for Astral. And the first target we are looking here is 2150.
Okay. All right. The next counter is that we're looking at is Zomato, and Mohit from Ludhiana is asking this question. He's bought at levels of 112 and he's looking at a time horizon of for the next 3 years or thereabouts. Vineet, lots been said about the prospects for companies like Zomato, but the QSR space not doing particularly well. Of course, this is related to food, but not really in the service of making the food. Would you say that you can hold on for the long term? What are the prospects according to you?
No, I think it's an excellent pick, and one of my personal top picks. I quite like this stock. And I believe that this stock over the next 3 years can deliver some fantastic gains to the shareholder. The reasoning is very simple, is that, the delivery business is like a proverbial 1 in a million who can get it right. Zomato is one of them. And with the franchise setup and using the same to build onto the, the dark store space through Blinkit, I think they've achieved remarkable success there. Even we were doubtful if it would turn around quite quickly, but they've managed to do that. So I believe that from here, the going is extremely good for Zomato, and one should just hold on to the shares.
Right, got it. Next up, we have a question from Karthik from Chennai. This one's on the counter Adani Enterprises. Now, he's already bought into the stock at 3,200 levels. Now, this from a shorter term perspective. Ayush, would you suggest holding on to it? He's currently at a loss. Or should he exit at this juncture?
Well, I would recommend to hold it for some time now. The stop loss for this stock is placed at 3025. 3025 is a very important zone for this stock. If that is broken, then stocks should be exited. Although there's a trendline breakout on the daily chart, since the markets are not performing well, I think that's the reason the stock is under pressure. So I think he will be able to exit from the stock with a profit, but the stop loss should be maintained here.
All right, standard disclaimer that's on your screen that NDTV is a subsidiary of AMG Media Network, which is a part of Adani Group. But thank you so much, Vineet and Ayush, for joining in and for answering so many questions for us. And viewers, thanks for tuning in. If you are not able to take your questions today, we'll definitely try and take them on Monday. But stay tuned, lots more coming up on NDTV Profit.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to Rs 2 lakhs per month depending upon one's work and creativity with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%, significant meaning, 29%, or the idea that it would make them look cool, 18%. Thank you for watching and stay tuned to NDTV Profit for more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Good afternoon, welcome. You're watching Hot Money. I'm Harsh Saita. We're going to quickly take you through where markets are at. Before I bring on Gaurang Shah, who's the head of investment and strategist at Geojit Financial. But quickly onto markets, we're seeing markets slipping. We're making new lows almost every hour, as you can see from that graph, down around 0.9% now as we speak, below the 21,950 mark. We've clocked a day's low of 21,934, so very close to that day's low as we see it. In terms of where the broader markets are, down around 1.5 to 1.7 odd percent, both the Nifty mid-cap and the small-cap indices facing some amount of pressure in trade. In terms of the advanced decline, at the start of trade today, we saw some bit of positive in markets, but that reversed very quickly, and it's been a one-way street since. Now we are staring at a 3:1 in favor of the declines. We have 42 stocks of the Nifty 50 in the decline. So the breadth of the market is looking extremely weak. In terms of contributories, let's pull up the list of contributories and what we'll see. ITC Bharti Airtel saving some amount of face there, but outside of that, you're seeing a flush of red across the board. Infosys, Reliance, HDFC Bank, Axis Bank, the bigwigs are pulling their weight on the index, and all of them are therefore dragging the index, which is down roughly 200 points as we speak. Gaurang, the correction this week, and firstly let me have Gaurang Shah on board. Gaurang, the correction this week has been swift. What should one look at in terms of markets now? How are you viewing it? Is this a possible buying opportunity?
Thank you, Harsh, for having me on the show, and good afternoon to all of you also. I think we were in conversation last week also, and this week on Monday, starting this week on Monday, we had given out an outlook on the market, and our view on the market is that this choppiness and volatility is only going to get higher as we go closer to the general election, and during the election until the time we have the results done and dusted, the choppiness and volatility is going to be quite higher. Not to forget, we were trading at all-time high. Post that, we had the unfortunate sell-off in mid, small cap, micro cap, based on the statements made by the regulator. And of course, this morning we were reading reports that there are a number of fund houses who would want to liquidate their holdings in the small, mid, and micro cap universe. So the sell-off is going to get intensified as we go forward in the small, mid, and micro cap universe. Large cap, our sense is that there is value. If you have the choppiness and volatility coming into the market like we are witnessing today, and of course we witnessed it day before on Wednesday also, then my sense is that you should possibly bring out your shopping list, focusing on the large cap sector dedicated. Don't put all your money at one time. Phased out step-by-step investment would be a very disciplinary approach, which we always recommend to our clients and investors. And possibly you will have some kind of stability in the next couple of months once we have seen the election and the outcome of that election.
Sure, Gaurang. Gaurang, I'm going to take a quick question before I start moving to stock-specific action. Mid-cap, small-cap end has been, somewhere there has been plenty of chatter that there is overvaluation. Your quick thoughts, views at this juncture?
I think the pain is going to get intensified. Let me be very honest, Harsh. And the selling is going to get a little bit elevated given that reports that we are reading since morning of fund houses wanting to exit. This is not the first time. History is witness to small, mid-cap, micro-cap universe that whenever there is correction coming into this universe of the market, there is no exit route for retail investors because the stocks get sold up till the time it gets sold off. So, we are not saying that we cannot paint the entire sector with the same brush and color. There are certain fundamentally strong names in the mid-cap and the small-cap universe. But you need to be extremely careful and you need to have an elevated risk appetite in case if you want to venture into that.
Sure, point taken. Slightly more longer term approach possibly with regard to small caps, mid caps. But let me quickly switch focus. OMCs are seeing a bit of a sell-off. In fact, the Nifty Energy Index, if we can pull that up, top sectoral loser in trade today. And the constituents will reflect that, largely constituents being OMCs. They're trading with deep cuts. Fuel price likely the reason for those cuts. Mihika joins us to give us that perspective on what this means for the OMC sector at large. Mihika.
Yeah, all the three OMCs are trading in the red, and this is mainly after the Ministry of Petroleum and Natural Gas announced that there would be nationwide price cuts in petrol and diesel retail selling prices by ₹2. Now, this is the first price revision since May 2022, so it's almost been 2 years now, and the new prices were effective as of 6 o'clock this morning. And now what the price cuts does is impacts the gross marketing margins of the Indian OMCs. According to brokerage calculations, for petrol, the gross marketing margins for the OMCs are in the range of 5 to 7.5, but for diesel it's from between as low as 1.4 rupees per litre to 6.3 rupees per litre. So what the price cuts does, it impacts the margins. So while petrol may stand healthy, if the diesel marketing margins are in fact trading around the 1 to 2 rupee range, they could go into negative territory. However, we do have MK where it says that FY24-25 estimates will stay intact and they expect cuts to be applicable till the elections end. We also have Citi that said that the integrated margins, which is refining and the marketing segments, will be healthy, and the EPS FY25 EPS estimates for the three OMCs would range into the 10 to 14% range.
Got your point, Mihika. Thank you for that perspective. Now, Gaurang, when I'm looking at the 6-month returns of some of these stocks, IOCL 85%, BPCL 73%, HPCL 98%, and if we can pull up the graphs for that, when I asked Gaurang this question, the run-up has been sharp, Gaurang, and what can we make of this now? The risks are materializing when it comes to pricing. How do you view this? And is this probably the last of the price cuts, because post-elections likely prices could start going up again?
So Harsh, I think give me 30 seconds more to reply to this. I think couple of months back we had some source-based news, though it was not confirmed by the government official, that the price was going to come through to the extent of 10 rupees per litre for petrol and diesel. Nothing happened at that time. Now, this late last evening and early this morning, we had the news that 2 rupees per litre on petrol and diesel. What I'm trying to say is that there may be scope from the government to give one more price cut, which may lead to a little bit of pressure on the oil marketing companies, undeniably. How much of and this is from the central government, how much of the pass on comes in from the state government, respective governments in different states, we need to just wait and watch. In terms of impact, yes, it will definitely have an impact on the profitability, depending upon what kind of inventories are held by the respective oil marketing companies. But let me give you a disclosure. As a brokerage house, we remain positive on all the three oil marketing companies, that is HPCL, BPCL, and IOC. Maybe these are the casualties during times of election that have to face the price cuts pressure in terms of profitability getting affected.
So are you saying it's temporary and therefore you're expecting a bounce back in terms of prices post-elections? Is that how one should read into what you're saying?
Well, I won't put it in specific words, but, and it all depends, Harsh, where the crude oil prices are. And of course, the rupee-dollar equation, because whatever we import, barring countries where we have a rupee-denominated trade, it's a different thing. But from countries where we import and we have to pay in dollars, so you have to keep your eyes open on both these factors, crude oil prices as well as rupee-dollar equation. If crude oil prices remain somewhere $80 on the Brent and $75 on the NYMEX, then I don't think we have to worry about in terms of pricing going up or down. I think there'll be a more stable kind of pricing. But till such time, I think we'll have to face the unfortunate situation for the oil marketing companies. Maybe there might be one more cut. God knows how much the quantum was going to be. But post that, I think there should be stability.
Fair point. Possibly one more cut. Not sure what kind of pain still awaits them, but looks like a possible upside post-elections. But let me quickly switch focus. Biocon, acquisition by Eris, slump sale of one particular subsidiary which sells branded formulations, which is their branded formulation business. Varsha here with more, because we saw this stock go up yesterday, Varsha, and we are seeing a correction now today.
Yes, sir. So as you rightly said, so if you see, shares of Biocon fell over 5% in trade today. Now this is on the back of its subsidiary Biocon Biologics India branded formulation business to be acquired by Arif Life Sciences for rupees 1,242 crore. Now the transaction value represents an accretive multiple of 3.4 times revenue and 18 times EBITDA. Now if you see, this acquired business includes portfolio in insulin, oncology and critical care. Now as per company, this collaboration is to unlock value from its legacy business of branded formulation built over past 2 decades. But according to Street, this decision to divest from core therapies such as diabetes and oncology and immunology has been necessitated by the elevated leverage. So if you see, as of today, Biocon's group level net debt stands at almost $1.1 billion, which in every con call Biocon says that they want to reduce their debt. Now, notably, if you see, Biocon Biologics, Baslog and Insugen are the largest Indian brands, having market share of almost over 10%, and the addition of these 2 brands makes up almost 100 crores of revenue. So this deal would enable Eris to have 30,000 crore injectable market. Now yesterday we saw stock go up 8% after this news, but today we are seeing pressure on the stock.
Sure, fair point. Gaurang, how would you read into this sale? Biocon selling roughly 1,200 crore worth of its assets. Would you read into this as a positive for Biocon, given that they are giving commentary that they want to reduce their debt in any case?
So this is one stock, Harsh, which has been a painful one for us, at least, because we have a fundamental buy call on Biocon on a long-term basis. But even during the pandemic time, when the entire pharma sector was up and buzzing, this was an underperformer, and from those levels it has in fact come down further. So and earnings has been a little bit of disappointment, and that's the reason why we've seen an underperformance from Biocon. Now this sale possibly could be a strategy in terms of focusing on core business. Invested a lot in terms of R&D. Some products are out, some products are lined up to be out once they get an approval. But a lot needs to be done in terms of earnings performance for Biocon, for the investors or shareholders of Biocon to get a meaningful return. So it's a disclosure, but it's a painful one.
Sure. So what should one do at the moment, Gaurang? You're seeing the stock down roughly 50% from the 5-year top. 20% is the negative, 20% is the 5-year return, absolute return on the stock, not even not a CAGR return, absolute return negative 20%. What should one do? Continue to repose faith and allow the business to turn, or should one now start to feel that this is taking longer than what one would anticipate?
Well, Harsh, first of all, 5 years is a long time. And there are times when, investments in stock market test your patience. So for all those investors who have patience and plenty of patience, we have, as of now, we have an accumulate rating on Biocon, and our price targets are somewhere close to about 300, 325. I hope I'm right on that. My memory serves me right. So you need extreme amount of patience with Biocon in terms of performance to come through.
Extreme amount of patience, but a possible 20 to 30% upside from here. Thank you for that, Gaurang. Stay tuned, Gaurang, as well as viewers. We're going to slip into a very short break. More on the other side.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl, created in 1967, is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
Well, the sell-off seems to be continuing in markets. Welcome back. You're watching Hot Money on NDTV Profit. You're looking at the Nifty 50 with seeing a cut of around 0.9%. We're very, very close to the day's low, just about 10 points from the day's low as we speak. Let's quickly look at the broader end of the spectrum as well, because there is a bit of pain there. We're looking at the Nifty mid-cap, which is down around 1.4 odd percent. The Nifty small cap also down by just about that much, around 1.4% down on the Nifty mid and the small cap indices. In terms of sectors, let's look at the Bank Nifty and pull up the constituents there. You're seeing the Bank Nifty also down 0.9%, largely in line with the Nifty 50, except for Fed Bank and Bandhan Bank. You're seeing pretty much all banks on your screen, all in the negative, but the pain largely is in the PSU pack. Look at the likes of a PNB, Bob, SBI seeing sharp cuts across the board. You also have some pain in the private sector side of things. Kotak, IndusInd, AU also seeing declines of roughly 0.5 to 1.5 odd percent. So that's where the pain is as well. The top sectoral loser by far is the Nifty Energy Index, down roughly 4% in trade today. Tons of pain there. The PSE pack is seeing accentuated pressure as well. This is the Nifty Energy Index in front of you, nearly 10% down on HPCL now. And the Nifty PSE also pretty much having similar constituents. You're seeing Bharat Heavy Electrical seeing 8% down, BPCL expected, Oil India also there, BEL also down, REC, PFC, all of them seeing a ton of pain, at least in trade today. Let's also pull up the Nifty Auto Index, because that one's down around 2% as well. So you're seeing pain in large parts of the market. Where is there no pain? Probably the defensives. The Nifty FMCG just about trading flat, slight positive bias maybe, but outside of that, really no respite across sectors and across broader markets as well as frontliners as well. I'm joined by Neeraj. Neeraj, pain across the board?
Yeah, safe to assume, because it's visible that there is just a deep crack that we're seeing, not just in PSUs which were down, but across the board. I mean, for the Nifty Auto to fall the way it has from the highs clearly suggests that yesterday's fall has now been digested as a bit of a relief rally or a dead cat bounce, which has gotten sold into. I think having a technical expert at these times would also be helpful to just try and understand what are the charts saying. So I'm sure our teams are trying to get in a technical or a derivative expert too, but we'll try and get in fundamental experts as well to just try and understand.
Yeah, we have Gaurang with us, Neeraj, as we speak. Gaurang, still some pain that we're seeing, especially on the PSU and PSE side of things. I want to try and understand from you what your views are with regard to PSE, PSUs at the moment.
So I think sectorially, Harsh, you can look at the stocks, whether it is PSU banking, whether it is selective PSU power-related stocks, power generation, power transmission and distribution, selective names in the defense pack, railway-related PSUs. It's not like the growth story is over with a correction of 5-10%, whatever we've seen. And this correction, mind you, Harsh, has come in after stocks have rallied 100, 150, 200%. So if you are investing in stock market, I think you should have elevated risk appetite. Otherwise, you should rethink your strategy in terms of investing in asset classes. So it's not like the growth story is over. They have run up. Maybe some additional pressure would be there. And my sense is that unless and until the last leverage hand in this particular short to medium term investment kind of thought process is out, you might see this correction maybe deepening a little bit more. But there is value in terms of long term investment.
Okay, Chakri Lokpriya also with us. Gaurang, thanks for that view. Chakri, good afternoon. Thanks for taking the call. What's your sense? I mean, the pain continues. Yesterday was a bit of an aberration. Can this deepen further?
If you look at the market, basically, the way where everybody's talking about stress tests, and stress tests are usually done when they talk about value at risk. It is the drawdown of a single fund. Now, when stress tests are done, like they've been done for the whole market, overall market, in reality, what would happen is if everybody goes to sell, as it's been happening for the last couple of days, then there is a one-sided pressure. So fundamentals are less important and technicals take over. So, and that we are seeing that happen in the current marketplace, but many of the stocks which are down a good 20-30% in the last few sessions are actually looking good, because the growth is intact. In 2018-19, when the market, when the regulator changed the definition of large, mid, and small cap, it led to a big sell-off. So right now, again, there is this uncertainty whether another change would come about. I hope there is not, and because the fundamentals of the companies are strong.
Okay, Gurmeet Chadda also with us. And Gurmeet, when I look at the top 10 losers, top 11 losers are PSUs. Suffice to say, PSUs are taking the biggest hit, but it's not that others are spared. Just about 6 stocks on the index in the green as well, and the top losers losing anywhere between 3 to 7%. A bit of a repeat of Thursday of sorts. Suffice to say that upsides are capped for now and downsides are open, or not quite?
Neeraj, I think what is happening is, I think the market will now, so once you have a rally where 92-93% stocks go up, and the trigger obviously is stress test, but that's not the only reason. There are more reasons, including some names coming where a particular set of investors, without taking names, were taking positions. There's a bit of an unwinding happening, and if you see, unlike earlier corrections which happened 2 months, some of the stocks aren't really coming back. So the market will now differentiate between earnings-backed stories and just the Me Too stories, where the things are just going up because all PSUs were going up just because PSUs were getting re-rated. Not all PSUs have undergone a structural change. So my sense is the market might now, the money might flow in the near term to more defensive names, and with the with regulators being very clear. I think there is a broader sense of a cleanup happening, in NBFCs, in some pockets, in SMEs, in some pockets of stock market. And when these kind of things happen, the market then, rushes to, perceive safe, like IT, like pharma, some of the names where, there is valuation comfort. And in the near term, my sense is there is some liquidity which was chasing small and mid caps will also dry up. Even the fund houses would be more keen on, maintaining some cash levels, maintaining more liquid mid caps. So I think the larger part of the market would be more towards large and large mid caps in my view. And this is very near term. This is not anything to do with the long term. And as Gaurang said, I mean, if you've seen 70-80% returns in the index itself, and if it takes back 10-20%, I think it's completely normal. It's happened before. It happened in 2018, and it was much larger than right now. It's happening right now as well. I think it's just that the market will get differentiated now.
Sure, thanks for that, Gurmeet. Chakri, if I can come back to you, trying to understand, is there any part of the market where you feel there are buying opportunities at this point, where you would probably start to deploy? Any thoughts on that?
If it's a retail investor, it's best that they stay on the sidelines. So it's only the large institutional houses where we need to buy in phases. That's when you would probably look to go at. But, there's one bigger distinction to be made is if there is a large cap fund, mid cap fund, and a small cap fund. And those funds definitions exist for a reason. So if a small cap fund also starts buying large cap, then everything becomes a multi-cap fund. So I think, that distinction is in a state of flux. So I think stay on the sidelines and before it's, again, the respective classes of funds are deployed.
Sure. At the moment, advising us to stay on sidelines. Gurmeet, your views, anywhere you're seeing value at this point to try and nibble into some sectors or spaces?
Absolutely. As I said, a lot of good names are also falling where the run-up has been matched by the EPS growth. If you see, so there are pockets in IT, in my view, especially mid-cap IT. I was speaking to a few headhunters. The hiring is coming back. They're very early signs, and probably a lot of it will reflect. So we are looking at some mid-cap IT names like KPIT, where there's been a 20% kind of a correction. The likes of Persistent and large-cap IT, maybe selectively looking at something like HCL. So we're looking at some IT names. We are trying to see if we can get some good names in railway and PSUs where there's been a sharp correction post the run up. So So we are trying to do some value hunting there because in our view, the 5-year, 10-year story in terms of order book, in terms of structural changes in that particular PSU remains intact. We are also looking at some names in auto ancillaries where the demand, the auto numbers are still strong, and the story in terms of more content per car and premiumization playing out. The likes of Sandhar Technology, and Uno Minda, Sona BLW. So we are looking at a few select names, and I think for some time, I think banks might find favor over NBFCs at large because RBI now it is really tightening the noose on. There was a regulatory arbitrage, or the market thought NBFCs had over banks. I think that is diminishing, and some quality NBFCs may come back. So you're getting some very good names at much relatively lower valuations, even in housing finance and NBFC space. So better money is made when there is pain, and I think we should all remember that. And I think it's just part of every bull market. Corrections are also sharp. So I am the view. This is going to be sharp and swift.
Sharp and swift. Well, swift is welcome. Sharp may not be. By the way, just the last set of questions to both our guests. But before that, breaking news. The poll date announcement, Lok Sabha election dates will be announced tomorrow, I believe at 3:30 p.m. I tell you, if we're thinking of how Wednesday and Friday were active and news flow heavy, advanced tax plus Lok Sabha election dates, we have a weekend which is packed with activity. I can assure you that. Now, Gurmeet, a repeat question to you, then a final question with Chakri as well. OMCs have corrected quite viciously already. This 2% rupee, 2 rupee cut has brought them down to their knees today as well. Is there value here, or could there be further cuts in the next ensuing 2 months in the run-up to the elections which might keep investors at bay?
Neeraj, to me?
Yes, Gurmeet.
Yeah. So I think, OMCs, you've got to be more tactical. There's too many variables at play here. I would rather look at the energy basket more than OMCs in PSUs. If I have to look at, I think power generation, the likes of NTPC, something like Power Grid, where you have, early double-digit P, 4-5% dividend yield. NTPC also has, ordered 3 more thermal plants other than the renewable energy portfolio. Power Grid, we know there is a 5-year pipeline of more than 2 lakh crores worth of transmission line. Also, if you go a little, go to the names which are into, let's say, transformers, insulators, wires, etc. So we find more value in the energy value chain amongst if I were to take, not strictly comparable there, and some of the PSU banks. In my view, a lot of the banks like SBI, Bank of Baroda, the larger ones, I think there is a structural change happening there with IBC, with management focusing more on, digitization. So I think I'd rather look at that pocket and maybe selectively at defense and railway pockets rather than the OMCs right now.
Okay. Fair call. Gurmeet, appreciated that. Chakri, one final question. So I think Harsh asked you about pockets that you look out for. Just wondering, does IT feature in that list? The market may move towards large caps and defensives. Maybe there are early signs of hiring. Does IT become a sector that you should actively look at, or you could actively look at?
Yeah, IT probably you can start nibbling at because the US is closer to the peak of interest rates, and probably June they'll start cutting, etc. And because of that, order inflows could start resuming for the Indian IT companies. Against that background, the valuations have corrected. They stayed that way for the last treaded water for the last several months. So I think this is an incremental story, but IT is probably closer to the bottom, and one can start nibbling in.
Sure. Thank you so much, Gurmeet, Chakri, for giving us all of that perspective. Of course, we continue to see some pressure on markets, quite a bit of pressure on markets, Neeraj. But with that, we're going to have to close this one because we're out of time. More on the other side. Stay tuned to NDTV Profit.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on D&D working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let me welcome A. Balasubramanian, MD and CEO, Aditya Birla Sun Life. Good morning, Bala. Thanks for joining us.
Yeah.
Okay, so my first question is, how stressful is this stress test for mutual funds?
It's not that stressful, given the fact that we have been working on this stress test discussion for quite some time. One, as an industry body, there is a committee at AMFI, which is comprising of CIOs and equity, head of equity, have been working closely with the risk management team of respective fund houses. There is a two committee that we run, and every time we look at anything that comes as potential steps one has to take to highlight the risk associated with the mutual funds. As you know, that mutual fund players have been, of course, saying for quite some time that the risk in smaller midcap, given the fact that the price has been quite substantial, therefore valuation would have gone out of acceptable level. Therefore, one has to manage the risk. Also, given the fact that huge amount of participation has come in this segment of the market. Therefore, often we revisit the risk associated with such kind of movement, and the number that has been being disclosed today, this has been tested multiple number of times on the basis of what has been guided. Assuming on a pro rata basis you have to sell if there is a redemption of 50%. Assuming you have to sell on a pro rata basis by 28%, then what the kind of number of days will take to liquidate, which is nothing but a stress test. But in fact, in reality, it doesn't work that way. I think in reality, when money managers liquidate the assets when there is redemptions, first he sells what he uses cash, then he looks at other assets which are sellable, then he looks at fundamentals of the company's basis which he sells. And also this doesn't take into account the price. There are liquidities in the market. At what price you will see the liquidity of the companies will rise significantly. If there is a price fall of say 10%, there is high probability the volume of the companies traded also will go up by 3-4 times, though there is no evidence for that, but normally happens in a price fluctuation. Therefore, I would say that while it is the responsibility of the industry to highlight some of the risk associated with these kind of portfolios by giving these kind of numbers, but it is not something new to us. It is already being monitored internally by the respective risk management team of the AMCs. So now that it is coming in the public domain in one platform, this is something probably I would say is new to the industry. And it's again first time it's happening. Probably I would say this would be a welcome step in that manner.
Right. Okay. So from an investor's point of view, let me take this. We are looking at 10 days to liquidate 50% of your small cap portfolio. What does it mean for me as an investor?
There's only one number you have to look at. From investor's point of view, no investment is being made on the basis of the stress test. The investment is always being made on the basis of the segment of the market you make an investment, whether it is large cap, multi cap, mid cap, small cap. And then what is the purpose for which you are coming, which is a long-term investing. I think every investors, after taking into account these stress test numbers, whether he can get worried on the basis of this, doesn't need to get worried as long as his investment time horizon is about 3 to 5 years. In general, most of the investors who are coming in the small and mid cap space, they are not looking at short-term gain of about say 3 months or 6. Somebody coming for 3 to 6 months and then looking at putting a large pool of money. Definitely, I would discourage not to choose these kind of schemes, going by the stress and so on and so forth. As long as he has a very clear thought in his mind that yes, I am investing money not for 1 year or 2 years, I am investing for the 5 year, then naturally these numbers will look one of the number they have to pay attention, but not necessarily they have to base the decision on the basis of this.
Right. So the stress test in reality comes into play only when there is a big market crash. Am I right?
Basically, I think in the risk management practice, I always say 1/100th of the event happens, then what will happen to your portfolio? So, and what will happen to the economy, right? There's always a discussion which Nassim Taleb always keeps harping on it. And at the same time, from market point of view, if there is a significant fall, if there is significant redemptions, so the assumption that is being made as we see inflows coming in, we also seen a period of where the redemption also comes. But given the fact the size of the market is becoming larger and the inflows actually is much larger than the outflows, and so far that's been the trend. this is only an indication that one has to just pay attention. If the trend reverses, whether there's been a risk associated with these kind of portfolios, if it exists, then what kind of risk one should pay attention. That is what I think it is all about. This test is talking about it. Also, the stress test number is derived on the basis of your portfolio will be liquidated on the basis of the pro rata basis. Say, as I mentioned earlier, normally when money managers liquidate, he doesn't go only with the pro rata, he goes by that moment, whatever the quantum of redemption could be there, to the extent he sells, he can choose from anything that he has in his portfolio. That's something one has to just keep in mind. And second is, we also look at another column where we are given more information which is related to how the portfolio is constructed. In the sense that how much is the large cap, how much is the small cap, how much is the mid cap, then also how much is in cash. All the four components are given. They also give you a sense in terms of how the portfolio risk, in addition to the stress test that you have to look at it, how those numbers also should be taken into account from an investment decision being taken point of view. But again, coming to the same point that investors' point of view, it's a better decision that we are giving. At the end of the day, need not be necessarily this information should be used for the purpose of taking your decision, as long as your investment is actually for a longer term time horizon.
Right. Okay. So one more important question. So as a fund, when I invest in a small cap fund, my aspiration is to make bigger returns than in a large cap fund. Now, your challenge would be to make sure that you meet my aspiration, number one. Number two, you also have to meet the stress test. Now, in such a situation, what is the percentage of cash that you would keep? Would you keep cash because there are no investment opportunities, or would you keep cash because the investor will come and redeem?
I think normally this will be largely done by fund manager to fund managers, the view that they take, because view can vary from one to other. And second is, what is the portfolio objective that has been defined in terms of overall asset allocation. And second is, up to what extent they can take money in these schemes so that they can manage the portfolio much more effectively without getting caught into any of the companies which could probably having some of fraud in that. That's something which may come as part of the overall portfolio management styles and the risk management that one has to follow. But having said that, one should also remember, I think if you look at the small and mid cap as an index,
the farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, Farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does this say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Well, you're probably wondering about the stress test results of mid-cap and small-cap mutual fund schemes, and in order to help you understand, we've been doing multiple conversations through the day. This next conversation will help clarify it further. I'm joined by Anil Ghilani, who's the head products at DSP Mutual Fund. Thank you so much, Anil, for taking the time. Now, I look at your liquidity stress test result, and for your small-cap scheme, it stands at 32. For 50% of your portfolio, and 16% or 16 days for 25% of your portfolio. Now, if I look at it and compare it to some of your peers, perhaps just on the face of it, it looks a little high. Can you help us understand this number?
Sure, thanks. I think I'll try to explain. The way in which the stress test has been conducted is that we assume that, let's say 25% of the portfolio is coming up for redemption on one day, and if one has to look to exit or sell that portfolio. And our portfolio at DSP, we believe to have all our products true to the label. So from the beginning, our DSP small cap fund has got zero exposure currently in the portfolio to large cap stocks. While from the perspective of some of the, maybe you mentioned other competitor funds, there could be some allocation, some exposure to large caps. So what happens is that if you have larger exposure to large caps, then the number optically would look little bit smaller. In our case, let's say we have always been true to the label. We have maintained that the investor should get the type of risk and return exposure that is stated in the product. Hence, we have maintained zero exposure to large cap. We feel that the way in which our portfolio is constructed and the way in which our investor profile is there. We have since quite a long time been, proposing and recommending that SIP should be the most appropriate mode for investors to access our scheme. Because of that, a lot of our investor base is very widespread. So we feel that the quantum of the allocation which would come for redemption into the portfolio on a given day typically would be very low. This number is in line with the guidelines prescribed that we need to disclose a number, that 25% of the portfolio going out in one day as a redemption or 50% of the portfolio coming up as a redemption. What would be the number of days taken? So like you mentioned, it comes to 16 days.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to Rs 2 lakhs per month depending upon one's work and creativity with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%, significant meaning, 29%, or the idea that it would make them look cool, 18%. Thank you for watching and stay tuned to NDTV Profit for more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks.
Welcome to this special show. I'm Tamanna Inamdar. Now, over the last 12 hours or so, we've all been inundated with data of electoral bonds, something that the market and, of course, political watchers were anticipating. I'm going to break down what the big takeaways are of all of this data which has come in, which really enlists 1,277 unique entities who've bought the electoral bond. So let's pull that up. We've sifted through all of that data to bring you the details that matter. The number one donor is a company called Future Gaming, Coimbatore based, who has donated about 1,368 crore rupees. Remember, this is between the years of 2019 and 2024. This is a Tamil Nadu-based gaming company. Interesting because it's run by someone who calls himself the Lottery King and has had faced raids by IT, ED, investigations by PMLA. Donating to exactly whom, we don't know yet, but at a time when at least his home state in Tamil Nadu had banned gaming. Let me come to Megha Engineering Group, another interesting company, the number two donor. And what we've done is we've collated all their group companies from all of their data and put it together under this one header, because donations were made by this one group under different names as well. What's striking about them, of course, apart from the big infrastructure projects they've bagged across the country, and very prominent ones at that, is that they have a majority stake in a listed company called Electra Green. They are at number two in the amount of donors at 1,232 crores. Number three is a Kolkata-based group of companies called MKJ. If you've gone through the list, you will see Keventer Food Park, etc. It's all part of the same group, an affiliated group. They are a realty company into infrastructure, and they're at number three at 573 odd crores. But there are quite a few. There's Quick Supply. You'll see this name. Very cursory glance at the MCA website will reveal that they are owned by a very large conglomerate. Haldia Engineering at 377 crores, part of the Sanjeev Goenka RPG group. Vedanta at 376 crores is also on the list, as is SL Mining, part of the Aditya Birla Group, at 225 crores. So these are some of the prominent donors. Now, we know the companies that have bought electoral bonds, and frankly, there are many of them that I have not named, simply because there's a whole list of some 1,200 individual entities. One way or the other, this is not saying that they've done anything wrong. Electoral bonds were perfectly legal till the Supreme Court struck them down. The question is who got it. Now, the BJP has more than 50% share of recipients of these bonds. They are, this is data of who is encashed, which of the parties have encashed how many bonds. So the BJP at 6,000 crores, Number 2 is the TMC, the Trinamool Congress, Mamata Banerjee's party at 1,610 crores. Then you come to the INC, the Congress party at 1,422 crores, followed by the BRS, the party that runs the government in Telangana, at least before the last elections. Of course, they lost the elections. Biju Janata Dal, Naveen Patnaik's party, DMK, MK Stalin's party, and then YSR in Andhra Pradesh. So these are the major recipients of these donations. Now, what we don't know so far is which party got electoral bonds from which company or donor. The Supreme Court has now asked SBI to also provide the unique identification number which comes with each bond, and that will enable those who really want to match these two sets of data and figure out who gave money to whom. So what are the implications then in that case? Why was this such a big deal? For one, inferences will be drawn between order wins and donations. What do I mean by order wins? A lot of companies on the list are in the real estate sector, are in the infrastructure sector. A lot of people will be checking when did they get crucial order wins, from which governments, was it center or state, when did they give bonds, and when were those encashed. All those data sets will be collated. Attempts will be made to also establish links between raids and donations. You're probably already seeing this in a lot of headlines of were these companies which have donated at the receiving end of any ED raid or IT raid, etc. Regional parties and location of donors will also be matched. So if there's a Kolkata-based group which is buying a lot of bonds, the inference will be, will the party that runs the West Bengal government, did they really get a lion's share of that? The fact is, and here's what's important, as of this moment, it's nearly impossible to definitively link any kind of quid pro quo, that someone bought an electoral bond, a corporate or an entity, and gave it to a particular party for a certain reason. And that at the end of it is why there was a shout and a move for transparency on this. Now, having said that, how do we take this further? Will this be a huge issue ahead of the elections? Will this have an impact on the way political donations are made, and what does it mean for corporates? To speak more on this, I'm joined now by Amitabh Tiwari, political analyst, Shankar Iyer, political and economy analyst, and Jagdeep Chokar is with us. He's founder, member and trustee of ADR. Now, ADR is crucial because they are the key petitioner in this case, one of them, and it is on the details you've provided and their petition that the Supreme Court eventually did end up scrapping electoral bonds. So, Mr. Chokar, let me begin with you. Thank you so much for joining us today on NDTV Profit. I want to understand if the mission you had or the purpose that you had by demanding that electoral bonds not only be scrapped but that the data be made public, has that been achieved with what we've seen in the last few hours?
Well, let me clarify a few things before I answer your question. Number one, the Supreme Court has not said that the unique identification number should be revealed. The Supreme Court has said they will hear that issue on Monday. That is number one. Number two, when we filed this petition in 2017, we were not, and even now, we are not interested in any election, any party winning election or losing election. We had done it because we thought this was a further impediment to the transparency of the political funding process. The political funding process in 2017 was not great, but the electoral bond scheme made it worse. So to answer your question, our objective in filing that petition, where our only request was that the scheme of electoral bonds be declared unconstitutional, that request of ours has been fully honored by the Supreme Court, and we are totally satisfied. What the Supreme Court has done, it has gone beyond what we had requested it to do. In order to get the order more effectively implemented, it has given this direction to the State Bank of India and to the Election Commission of India to make this data available to the public, which we welcome, and we appreciate the Supreme Court for taking this extra initiative. And given that the data which is available today, even without the unique identification numbers, the amount of light it has thrown on the, for want of a more polite word, I have to say, on the murky dealings between business and politics is very clear for anybody to see who's interested to see this. But yes, the strict quid pro quo that you mentioned will not be possible. And even if we get the numbers, which I hope we will, we may be able to say a corporate A gave X amount of money to political party X to B. But again, whether there was a quid pro quo, it is never possible to establish 100% quid pro quo. This has to be an inference. And as they say in Hindi, दो और दो चार ही होते हैं, 4.2 या 3.9 नहीं होते.
दो और दो कभी कभार 22 भी बन जाते हैं if it comes before an election season.
आप तो उसको 22 ही बनाएंगी, 44 भी बनाएंगी, कोई बात नहीं. But no, I am not referring to you. I am saying people who believe, and rightly so, that unless a clear-cut cause and effect is established, the thing is not believable. In such matters, this is not scientific research like physics, mathematics, etc., where unarguable and unquestionable cause and effect relationships are mentioned. This can only happen by inference in such cases, and it is for everyone to take their call as to whether it is a useful thing or not. We think it is useful, and we will pursue this further.
Okay, so you can never make any direct inference, but there will always be an attempt to figure out what the reason was or what is happening. The key point that Jagdeep Chokar made, it's blown the lid of what happens in terms of the relationship between corporates and politicians. My question to you, Shankar Iyer, is so what's the big deal? The world over, you do have corporates who are donating openly. As citizens, corporates are also, corporate citizens. Is there anything wrong in donating to a political party? The question was, why did it have to be anonymous?
So here we have to go back to the history, and Mr. Chokar and ADR have been fighting this issue for a long time. The issue is that in the US and elsewhere, corporates do donate to political parties, to candidates, to special purpose vehicles in the US, but all of that is declared. So if corporate A donates to Mr. Trump and Mr. Trump does a policy that favors corporate A, there will be question. There is at least a question. What we know in India is that there has always been a transactional relationship between people with money and the political parties in India. Earlier, that transaction was conducted in cash. This government instituted an idea that made it possible for corporates to do it directly through their bank accounts without having to declare. Now, the fig leaf that the government provided was that this would lead to enmity, blah, blah, whatever the things. So the question what has this done? It has made us aware of a lot of things that you, me, and every other voter always suspected. So that there is a relationship that is not clear, that is fuzzy. The second thing this has done is that no attempt now to camouflage why this bond was necessary and all will hold ground, because the Supreme Court's order is such a scathing indictment of the idea in itself. It also establishes, just like the privacy case in Aadhaar established, the right of people to know who is funding and what could be the consequences of the funding. As far as the data goes, Tamanna, you see that there is I don't see a party on that list which has not held power or which is not in power. So to me, that is a telling statement. We may never be able to know which bond purchased by which bondholder led to what benefit or advantage to the bondholder, whichever party. But there are some interesting things here. This is an economy where 10 years back, we spoke about coal scam, 2G mining, 2G scam, all this stuff. And I noticed that in a lot of the resource-rich states, there has been some amount of bond purchase and delivery.
Yeah.
Whether it actually converts into anything, I don't know. We'll have to wait to see whether Mr. Chokar gets some of the data, and maybe somebody will do a forensic on that. The second part that strikes me is that there are quite a few LLPs that are, I presume, limited liability partnerships, which have donated. And that to me is an interesting phrase. The other thing is that I wonder whether the speculation in the media about people who were under probe or investigation having bought bonds, maybe that is something that the judiciary might take note of, because this is, in a sense, an interesting allusion that is being made about people who were raided or who had action of financial investigating agencies against them. It's interesting in the sense, will this make politics more transparent? I just want to park one piece of information, is that while a lot has been done for candidates to declare their expenditure, for ministers and MPs to declare their assets, we don't know where the candidate gets his or her money to spend in an election. The source of funds is not known, whether it is for an assembly 40 lakhs or whether it is for parliament 90 lakhs or whatever the limit be. The second part is, while ministers and others are declaring their assets, we don't know the source of their income, which has led to the growth in assets.
Right.
We can see in the asset declaration that several people who have been fruitfully unemployed have assets against them.
Right.
Interesting to look at.
Fruitfully unemployed. That's interesting. You know, trust Shankar always to come up with the great catchphrases. Well, Amitabh Tiwari, the question is that does this make a difference to anything? In real terms, where does the impact lie? So in the markets this morning, we saw, we pulled up a list of companies who had appeared on the list of political donors. No real impact, to be honest, in any real terms. Will this have an impact in the run-up to the elections? Now you'll have poll dates out. And is this going to be a negative for any party? That also seems quite unclear, isn't it? So what is really the outcome of all of this, in your view?
So it has blown the lid off, as Shankarji used the term, essentially of which party or rather which corporate or individual is funding political parties. However, we see many names. I mean, they're not very known names. Some of the names you will see are shell companies who don't even have revenues of the amount which they have donated to corporate parties. See, electoral bonds is a very small proportion of the total amount of money which is spent by political parties and individual candidates in the campaigns. This is the data for a 5-year cycle, almost 18 to 23 or 19 to 24. In a 5-year cycle in India, 1 Lok Sabha and 30 Vidhan Sabha elections take place. As per a think tank CMS, in 1 Lok Sabha election 2019, 55 to 60,000 crores were spent. And since I have been in political campaigns and anything, it amounts to 100 crore per Lok Sabha seat, almost. It's not a way off number. Now, we can safely assume that in the 30 Vidhan Sabha elections, a similar amount is spent. So in any 5-year cycle of elections in India, 1,10,000 to 1,20,000 crores of amount is spent by political parties and individual candidates. And the amount of electoral bonds, what we are talking about, this totals up to 12,000 crores. So the electoral bonds funded 10% of the entire political campaign expenditure of parties and independents. So it's a very small amount, number one. Cash still rules. Cash is the king. Now, when the main assumption was that it was a disadvantage to parties which were not in power, the chart which you showed clearly shows that BJP got 50% of the electoral bonds funding and the rest of the parties got 50%. Now, right. Who's who of the political parties of India are there on the list? Which means everybody got it. Of course, why do corporates pay donations to political parties? I mean, We are all not very naive, correct? So 50% of the money is received by BJP and 50% by parties who are ruling in the states. If you add this number, it is almost 50-50. So now for opposition to make a charge, I'm talking about the political impact here or the impact of elections, that only BJP has received benefit is entirely not true or not correct. BJP can come back and say that all parties who are in power in states have received money, including Congress, which is in power or was in power in 3 to 4 states earlier.
No, so that's an interesting point. So the sting has been taken out of the electoral bond issue as, a political hot potato just ahead of the elections. Now, the rest about quote-unquote murky dealings between corporates and politics in the country, the price of doing business, etc., will and can continue to be an important discussion. I'm going to have to take a break. And I want to really thank Amitabh Tiwari, Shankar Iyer and Jagdeep Chokar for joining us here. Very short break. On the other side, we come back and tell you more about the first name on the list, the largest donor to political parties. Who runs Future Gaming? What is it all about? All of that after this break.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Peeta Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can.
So who is the biggest donor of electoral bonds? It's someone called Santiago Martin, calls himself the lottery king of India. Started his business at the age of 13. This company is on in 1991. It functions in 13 states with over 1,000 employees. Let's move to the next page because that's where it gets interesting. He actually has faced, this company has faced investigations from PMLA, IT, and ED. They're in construction, textiles and hospitality. But of course, the big business is the lottery business. A lot more details like this will come out over the next few days on the electoral bonds. But for now, for the voters of this country, at least there is transparency. That's all the time we have on this special show. Thank you so much for watching. But stay tuned. A lot more coming up on the other side on NDTV Profit.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit. My name is Alex Matthew. All through the day, we've been bringing you updates from mutual funds across the country and what they're saying about the latest report, which is the stress test, the first of its kind stress test related to mid-cap and small-cap schemes. This was a nudge by the regulator on the back of what some felt was froth building up in the system. And to a certain extent, the attempt was to help educate the investor community about certain risks that they might have been ignoring. But there are several of these reports out there. How should you as an investor in these schemes read them? We're going to break it down point by point. And who better to explain it to you than the Chief Investment Officer of an AMC? We are in fact joined by Trideep Bhattacharya, the President and CIO Equities at Edelweiss Mutual Fund. Trideep, thank you so much for taking the time.
My pleasure.
And pleasure having you in the studio. Let's talk about the first measure, which I think has gotten the most attention, which has to do with liquidity. In fact, let's pull up the first aspect of this on the wall next to us so that Trideep can explain how this is. So this is not the original document, Trideep, that you've shared, but this is a part of that. I have represented it. So can you explain it to us?
Sure. So first of all, thank you very much for having me on your show. But let's get to the point. Basically, what we have done in the sensitivity analysis is assuming, first in this part, assuming that there is a liquidity event or there is stress building up in the market. In such circumstances, generally what we have seen is volumes kind of tend to spike up, which is why you have the 3x volumes.
Yes.
And the participation tends to be low, which is why there is a 10% participation rate. Assuming that those two conditions hold true, how long will a fund take to liquidate 50% of their holdings if it's a mid-cap fund, and how much time will it take to liquidate 25% of its holding likewise. So for mid and small cap, these two categories, this analysis was actually done. And let's say our case, if you look at it for the mid-cap fund, it'll take about 2 days to liquidate 50% of the portfolio, assuming these characteristics hold true, and this much for about 1 day for 25% of the portfolio.
That's very quick, right?
Yeah.
So, and the reason I point this out is, viewers, in case you haven't seen it, there are a lot of schemes that have shown the data for this very liquidity scenario, and it's nowhere close to a single digit. In fact, for some of the schemes for the small cap category, at the 50% portfolio liquidation level, it goes up to over 20 days, in certain cases 32 days as well. So Tradeep, help us understand what a good value is. Is there a good value? Is there a benchmark? Because we're talking about ultimately small caps where there are constraints with regard to liquidity.
Yeah. So first of all, this is a very good measure by the regulator to increase the transparency in the system. And to that extent, it's a welcome move. But at the same time, it could create some confusion as well. We'll probably come to that in a bit. But I think the first thing that we need to understand is, as compared to industry average, where does the fund really stack up? So if the fund is on the lower side, for instance, you would be probably on the far low on the lower side. Then as an investor, that gives you additional comfort that in a rainy day, I could get my money as soon as possible. If you're on the other extreme, that it takes about 100 days or even more than kind of meaningful amount of days to get 50% of your portfolio out, then you should consider basically that when things don't go right, will I get my money back in time? Assuming you are a big investor for a fund. So those are the two. So basically what I'm saying is, operating in and around the extremes, particularly on the as compared to average, is what the investor should be aware of, and the distributor should be aware of, that while recommending the funds or investing in these funds, where do they stack up on the liquidity spectrum? I think the middle is fine. The extreme left, which is extremely high, low liquidity, people should be careful about.
So, but and the last point on liquidity, and then we'll move to concentration. Sure. Do you think that the basis or this situation, this hypothetical situation, where you seeing 25% of redemption, it's never happened in the history of the mutual fund industry, and that includes 2008.
Correct.
Is this a little too conservative?
Yeah. So this is where I was talking about the confusion earlier. So from an investor standpoint, and for the investors who are watching this show, this is a good disclosure to have, and a sensible decision making should prevail. But to really think that as an individual retail investor, can he get the money in? He'll most likely get the money out in case he wants to get it done. Even in extreme circumstances, 25% of the portfolio liquidity, particularly if you are a 5,000 fund, happens very rarely. So, if at all. So this is this should be seen in the context of sensible analysis.
Yes.
Not reacting to the extremes is the point that I would say.
Yeah. So don't go out and willy-nilly sell all of your mutual fund holdings in small and mid-cap funds. But let's talk about concentration, which is the next header, and that talks about several aspects. That talks about, on the investor side, who are your biggest investors? Are you facing concentration risk as a fund there? And it also talks about the asset side. Could you talk us through that?
Sure. I think the top 10 investor category is an important metric to keep an eye on. Now let's assume that you have a fund where the top investor is about 25% of the fund value. Now it may not be a rainy day, but if that investor decides to exit at one point in time, then he would face some of the conditions that we discussed in the previous slide.
Huge redemption pressure.
Exactly. So that would create trouble. Hence, having a top 10 investor concentration of just about 1.5% is particularly good. Even I would say up to 5% is a decent number to kind of start with.
And on the asset side?
Yeah. So that's one way to think about it, which is on the investor side. Then we come to the portfolio management side, which is core of what we do. And this is where how we construct the portfolios make an impact on how much days it takes to liquidate. As you can see that, what we have achieved here is not because we hold a ton of cash or we own whole bunch of large cap stocks in our portfolio. It is fairly kind of well spread across market cap, but still the ratios that you saw, which is 2 days for 50%, holds true. So it's got to do with what type of stocks that you hold in the portfolio, and that I would leave with investors is the ultimate risk management strategy. The stocks that you own ultimately decide that on a rainy day, as you can see today, is that some of the stocks are outperforming. Owning some of those stocks ultimately is the best way to manage the portfolios.
So some have said that it needs to be true to label, and therefore it has to have a certain amount of allocation, but then you have to switch it based on what you think is appropriate in the time in terms of liquidity as well.
Correct. That is true. That is true.
So, okay, so let's talk about the next one, which is volatility. Now, we have these measures which we often discuss on several shows, and we have talked about this in the past. And incidentally, even the next slide, which has to do with a valuation, we talk about several of these aspects on an ongoing basis. But how would you describe the volatility metrics that you have shared?
Yeah. Now, this is slightly technical in nature, so let me explain.
Sure.
In very simple terms, when we talk about portfolio annualized standard deviation, which is a statistical term, sorry for the uninitiated, you should see this as a measure of risk. So, and standard deviation is a measure of risk, and that tells you correspondingly how much return you should anticipate. So, distributors and advisors would first look at what is the annualized standard deviation and say, okay, place it on the risk spectrum, how high it is. Ultimate, our holy grail is if we can manage the portfolio, not taking significant deviation from the index, but still outperforming the index in a meaningful way. For example, over 10 years, our midcap, this is of course disclosed data, our midcap fund has outperformance of close to 200 basis points over 10 years with managing the standard deviation in a range. So that is what we call as Sharpe ratio, one divided by the other. That a high Sharpe ratio fund is the best fund to own. And the final bit that I would come to is the beta. Now, this in a way tells investors as to where the portfolio is going to stack up better. So on days like this, a portfolio beta of less than 1 holds true in the sense that, we will be probably falling lesser than the broader market.
So if the index falls by 1%, you fall by 0.9 or 0.78.
Correct. So on the days when index falls by 5%, particularly in midcap, which happened yesterday, these numbers are particularly comforting for investors who are maybe risk averse and who think that my portfolio should fall less. So a less than 1 number is particularly good.
Okay. And not very often that you see, or rather not very often, I would say that in certain situations there are managers that choose to be more aggressive.
Correct.
And so therefore they tend to deviate on some of these measures. But the last aspect is the valuation picture. And of course, if you own an individual stock portfolio, then you're looking at this on an ongoing basis. And of course, the manager of your fund is looking at this on an ongoing basis as well. But let's break that down. In fact, if we can pull that graphic up. Let's talk about some of these aspects, right? You're talking about a trailing price to earnings, but I would think that you also look at the forward to try and gauge where these stocks are heading to really break this out for us.
Yeah. So this still is one half of the picture till here.
Yeah.
So there are two things that we do: the price we pay and the growth that we get.
Yes.
So the one half of the equation is the price that we pay, which you can see here in terms of the valuations. Now, if you compare this with, let's say, large caps have more valuation support than mid and small caps.
Because of the way they've run over the last 1 year.
Correct. But what they don't have is the growth, which is meaningfully higher for mid and small cap as compared to that of the large cap. So as a ultimate investor, what you are trying to do is balance between the two. You don't want a very conservative portfolio, you don't want a too aggressive portfolio. And that's where a balance is achieved when you have a portfolio PE, which is more in the mid-20s overall, that is in sync with the benchmark PE overall. So if your benchmark PE is similar as that of portfolio PE, broadly, you are not taking more risk than that of the benchmark, but still you are able to deliver better returns.
So, but having said that, and I see that your measures are, or your readings are more or less where you're comfortable with, there are some that have purported that there is a little bit of a stretch, if I can call it that. Some have used the word froth in the valuations. What is your own opinion in the broader market?
My sense is that within mid and small cap space, there are pockets of irrational exuberance.
Yes.
And hence, when you picked up earlier the mid-cap portfolio, or we have with well spread, we have some part of the allocation in the large cap domain as well. So it's better to be selective in mid and small caps rather than completely ignore the segment. Because if you ignore the segment, you are ignoring basically the growth story, which is the story of India overall.
Yes, and the last part is the portfolio turnover ratio, which is how often you're churning your portfolio, correct?
Right.
So what does this tell you? Because some people have a strategy that is analytics based, that is technical based, that is quant based, that requires a higher turnover ratio?
Yeah, I think ultimately the higher the turnover, it basically increases the cost of the product that you have inherently. Okay. Because every cost, every trade that you do incurs trading costs. So the lower the number, the better it is. The simple way to think about this is basically 1 divided by this number is the average holding period of the stock that you have. So if it is 0.5, then overall I hold an average stock in the mid-cap fund for about a year. And from a mutual fund perspective, for investors who think about conviction-based investing, who think about long-term investing, this is a very good holding period to really think about. Likewise, when you have 0.26, that means we are talking about more than a year kind of holding time frame. That tells you that the bets that we are taking, we wanted to, or we let it roll, or we let it play over a course of more than a year. And hence, we are not doing short-term trading-oriented behavior. So these are actually very, I would say to a certain extent, sophisticated, but very good indicator for the investor to make a more nuanced and more sophisticated decision as to which fund to go for.
Okay, closing comments on the entirety of what we've discussed today. What should an investor glean from this, and how should it affect their decision making?
Yeah. So first of all, I would say that this measure is a positive measure, given that it increases the transparency. The more we are transparent, more it increases the confidence of the investor overall. The second thing that I would say is look for the extremes. When the industry average liquidity is, let's say, X number of days, if there is a fund which is way to the left, which is very illiquid, then one should think about allocating more carefully. But otherwise, as long as we are in the middle part of the curve, or maybe like our funds that are there, which are on probably extreme positive side of the curve, the positive side till the middle is just about the way to operate.
But that has to do also with the size of portfolio.
That's also got to do with the size of the portfolio, the management style, and various different factors that go into. So this can't be the only factor based on what you could judge, but one of the factors that you should keep in mind when you are allocating portfolios as well.
Fantastic. Pradeep, thank you so much for taking the time.
Pleasure.
And I hope that this clarifies a lot of the doubts that you might have had. Of course, this was breaking down Edelweiss AMC's or Edelweiss Mutual Fund's risk report, but we are going to talk about the industry as a whole and how you should read the numbers for the industry. That's coming up after a very short break. Do stay tuned.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, Farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy,
Welcome back. You're watching the Mutual Fund Show, and we have broken down the latest risk report or stress test report of a mutual fund scheme. We were in conversation with the Chief Investment Officer of Edelweiss AMC. But now let's widen the scope and talk about the industry as a whole and mid-cap and small-cap funds by and large. I'm joined now by Mohit Kang, CEO at Moneyfront, and Kirtan Shah, who is the Managing Director at Cretan's Family Office. Thank you so much to the both of you, as always, for taking the time. And, you know, it's interesting. We've broken down the numbers, so let's holistically take a view. Y'all have looked at the numbers. I'll come to you first, Kirtan, on this. What did you make of it? Does it change your decisions at all when you're advising your clients?
Alex, thanks so much for having me. Very honestly, I don't really think these numbers are material enough in any sense. And I'll tell you why. It's because, look, these numbers are extremely conservative. There are 3 points that I really want to highlight, which I don't think are which don't give you a very practical insight on these numbers. First, how are you calculating these numbers? You are saying that you will multiply the volumes by 3 and then divide it and then take only 10% of it and then do the stress testing. Now, I'm not sure whether these numbers or the way we are looking at this is driven by anything that has been done in terms of backtesting, whether these numbers are on the volume front fruitful enough or not. Second, very importantly, I think what is important for us to understand is that when there is a stressful situation, right, is the liquidity really going to be there the way we are doing these numbers? I don't really think so. And the most important thing is that if you remove the most illiquid 20% of it, then the redemption is done on the basis of the most illiquid stocks, which means that even if I have cash or large cap in my portfolio, this calculation is assuming that I will remove or sell the most illiquid stocks first, and then I will move downwards. That's not how you practically do it, is because practically you would want to first sell out your cash, then the most liquid assets, and then the illiquid assets. So I think even if these numbers are really looked at, it does not really give you a very practical insight, in my opinion.
Okay, fair point. Mohit, some of these schemes, I'll name a few. DSP, 32 days to liquidate about 50% of its small cap portfolio. Axis, if I remember correctly, 28 days, despite the fact that it has about 10% cash. And a couple of others that have elevated number of days. But do you change your investing strategy purely based on this?
Hi, Alex. Thanks for having me on this one. Look, so honestly, I concur with Kirtan on quite a number of fronts, which he was mentioning. We don't change our strategy. Look, when an investor is getting into a mid or a small cap segment, per se, they are aware of their risk profile. And in fact, it's a conscious call being taken jointly by the investor and the financial advisor that you're getting into a small cap where liquidity is tight, right? This is the riskier part of the portfolio, and investors have to be well aware of that entire thing. Now, the second point on this one is when you're looking at these numbers, just the number of days taken to liquidate 50% of the portfolio doesn't mean anything. You have to take a very holistic view on the entire data. And I'll just give you a small example out here. If you just check the composition of large cap, mid cap, and small cap holdings across all these funds, you'll get a very real life story out there. For a fund who's taking 30 odd days or 30 plus days, it is perhaps possible that he's actually being true to label. And the composition of small cap is really very high, is significantly high. And I've seen that in quite a number of cases since morning today, that people who are showing days above 30 days, they actually have very high composition in small cap, much above the 65% stipulated composition. They have almost 70-80%. In some cases, I have seen a fund with over 90% allocation in small cap and the number of days being greater than 30, right? So if you are a true to label small cap fund, you will take more days to liquidate your portfolio. That goes without saying. On the contrary, if you are a fund who runs with 65% small cap, but have almost 35% or 30 odd percent in large caps, then obviously your portfolio is going to be more liquid, and which is very evident in the number of days which is being mentioned by some of the fund houses. So that's the second part of the story. The third part is also you have to concurrently look at the turnover ratios. If you're churning the portfolio too often very fast, that again doesn't give me enough confidence, because then you could have flipped the portfolio many times across and moved it between different market caps and hence kind of manage the days. So again, this has to be looked in a very comprehensive manner. Just the number of days doesn't tell me any story.
Got it. Just a small point then on how much exposure, and unfortunately we have to get a very quick answer from you, Kirtan. If you've got over allocation, we've been speaking about this for quite some time. Perhaps at this time, because of the kind of cracks that we've seen over the last couple of days, perhaps that's because of what we're talking about right now, the stress test that might have gotten a few people a little antsy, a little wary. Should you look at reallocating right now or continue with your original allocation?
I think you should continue with your original allocation unless it's changed meaningfully. Let's say more than 5 or 10% of the original allocation. If that's the case, you rebalance it, or else I think you should continue. All of these things are noise over a period of time, and probably if you have 8-10 years of investment horizon, most of these things won't matter.
Anything to add, Mohit?
Concur with Kirtan on that one. I think you're getting with your risk profile into this thing. It's a known risk, right? And you have to stick with it. Number of days of liquidity, honestly, I don't think so is a big enough criteria for an investor to change his risk profile or an asset allocation.
Fantastic. And what I will also do is I'll have both the gentlemen over at some point to maybe give us a refresher on the various ratios that you need to watch out of, because those are going to be disclosed on a fortnightly basis now, so investors have more data to look at, and the advisors also at that. Thank you so much to the both of you for taking the time and for speaking to us on the Mutual Fund Show. That brings us to the end of this particular edition. Do stay tuned, lots more coming up over the course of the day, and this is NDTV Profit.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is rupees 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between rupees 1,000 to 2,000, and in Goa, it is about rupees 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of rupees 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to rupees 2 lakhs per month depending upon one's work and creativity with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%. Significant meaning, 29%, or the
Well, you're probably wondering about the stress test results of mid-cap and small-cap mutual fund schemes, and in order to help you understand, we've been doing multiple conversations through the day. This next conversation will help clarify it further. I'm joined by Anil Ghilani, who's the head products at DSP Mutual Fund. Thank you so much, Anil, for taking the time. Now, I look at your liquidity stress test result, and for your small-cap scheme, it stands at 32. For 50% of your portfolio and 16% or 16 days for 25% of your portfolio. Now, if I look at it and compare it to some of your peers, perhaps just on the face of it, it looks a little high. Can you help us understand this number?
Sure, thanks. I think I'll try to explain. The way in which the stress test has been conducted is that we assume that, let's say 25% of the portfolio is coming up for redemption on one day, and if one has to look to exit or sell that portfolio. And our portfolio at DSP, we believe to have all our products true to the label. So from the beginning, our DSP small cap fund has got zero exposure currently in the portfolio to large cap stocks. While from the perspective of some of the, maybe you mentioned other competitor funds, there could be some allocation, some exposure to large caps. So what happens is that if you have larger exposure to large caps, then the number optically would look little bit smaller. In our case, let's say we have always been true to the label. We have maintained that the investor should get the type of risk and return exposure that is stated in the product. Hence, we have maintained zero exposure to large cap. We feel that the way in which our portfolio is constructed and the way in which our investor profile is there. We have since quite a long time been, proposing and recommending that SIP should be the most appropriate mode for investors to access our scheme. Because of that, a lot of our investor base is very widespread. So we feel that the quantum of the allocation which would come for redemption into the portfolio on a given day typically would be very low. This number is in line with the guidelines prescribed that we need to disclose a number, that 25% of the portfolio going out in one day as a redemption or 50% of the portfolio coming up as a redemption. What would be the number of days taken? So like you mentioned, it comes to 16 days.
So I will get into the nature of the scheme in just a bit, but do you think that from the point of view of giving an investor a perspective or an insight into the liquidity of the portfolio, that this is a fair test?
Certainly. So see, the stress test has certain parameters which have been decided and disclosed upfront. So investor or the advisors who is guiding the investor knows the clarity of what we mean by this, that, okay, this means that X percentage of the portfolio, 25% or 50%, with certain criteria will be liquidated in this number of days. So it's very clear cut, and it will be helpful to get the understanding in a right way.
So when we talk about the small cap scheme, and right enough, you have 87.6% allocation towards small cap at the end of February, and about 6.9% allocation towards mid cap, and about 5.6% allocated towards cash. Now, would you say that upfront, if you have such a redemption scenario, the first port of call is cash, and then
certainly,
you're more liquid?
There will be cash.
Yeah.
There will be cash, there will be large caps in certain securities, in certain ways. Even within small caps, there would be certain stocks which are more quality names, which are comfortable quality stocks. So these will be first to get liquidated.
So then, despite that, I was trying to understand, because I've had certain conversations about this being a days to liquidity calculation, and there being a days to cash calculation as well.
Yes.
Which, as I understand it, is how much of your portfolio can you liquidate on any given day, given the parameters, same parameters, if you assume 10% participation, etc., and you have how much of your portfolio can you liquidate? Is that also a measure that will be useful to help to understand the liquidity of the portfolio?
See, that is very difficult to quantify. Because on an ongoing basis, that keeps changing based on the securities held and the redemption which comes. But yes, safe to say that very large component of the portfolio can be liquidated on a daily basis,
When you say a very large percentage, what kind of a percentage can that range between?
No, I'll rephrase. What I mean is that, basically, here it assumes that 25%, very large percent of the portfolio comes for redemption in one day. That itself is a thing which we need to be very clear, that 25% of a single scheme coming for redemption is a large portion coming to market for selling. On an ongoing basis, what I mean is that if suppose small percentage keeps coming, today suppose 0.5% of the fund came for redemption, tomorrow 1% come for redemption. So that would be very comfortable and easy to be liquidated.
Yes.
We have typically speaking seen that our top investor is about 0.2% of the fund. Our top 10 investors all put together is hardly about 1.25, 1.5% of the AUM. Around 70% of our investors are less than 2.5 lakhs, amount of investment. So widely spread, when the amounts come for redemption, there could be a better, smoother cycle.
That's a fair point. All right. Thank you. And that's the purpose of this conversation as well. Anil, thank you so much for joining in and giving us that perspective.
Thank you very much.
All right, viewers. So that was Anil Ghinani, a representative of DSP Mutual Fund. And that's one mutual fund and how they view the small cap and the mid cap space. But we are having multiple conversations through the day. You'll find all of that right here on NDTV Profit.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvandas Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Hi, thanks so much for tuning in. You're watching NDTV Profit, and we're talking about the stress test of mid-cap and small-cap schemes. And to help you understand how to read this and how mutual funds are taking it, I'm joined by the Chief Investment Officer of a fund house that has a very popular scheme, one that has been growing very quickly over the last several months, and that is Quant Mutual Funds, Sandeep Tandon. Sandeep, thank you so much for taking the time and for speaking to us about this latest development. We are going to show some of those aspects of what you have shared in that report. But at the onset, I want you to give us an idea of how you read this liquidity measure. Do you think that it is an accurate representation of the liquidity risk in the portfolio?
So let me answer in a very simple manner. First of all, for whatever reason, this narrative got built that it's a very important report card is coming on 15th of this month, okay, and people are watching very closely. So this is the absolutely incorrect narrative, because reality is very different. As a money manager, it is bound to our responsibility and it's part of our analytic exercise that we do track these liquidity measures very closely. Okay. In fact, whatever data regulator has asked is good. We actually internally capture much more data points from a risk perspective, because we as a house, we always say we are in the business of risk management. Returns are byproduct. Risk is something, it's not only us, globally every money manager will look at. Okay. What regulator has asked is to share some more data points, okay, which most of the mutual fund anyway calculate on regular basis. Okay, it's not like it is not published. Like we as a house in our monthly fact sheet, we do disclose lot of such data points. Okay, and it's very important to understand that without SEBI asking us, we are anyway giving this data points. What SEBI is bringing is they are bringing more transparency in the system, saying that these are additional, and these are not additional measures, which a lot of people are. These are additional data points, which every fortnightly you have to update on your website. Okay, anyway, mutual fund practice it, so it's not a big deal. What is very important, what regulator is trying to ask, saying that the small and mid has rallied very significantly. The mutual fund has a fiduciary responsibility of public money, and the trustee should look into it. Okay, what we are saying, we are asking all of our investors and distributor, please assess your risk appetite. Please assess your investment horizon. Okay, if you have a high risk and long-term investment horizon, please remain invested in mid and small. If you want to increase, you should increase your exposure, but you should have a clarity. But if your risk appetite is not very high and you think you have made good amount of money, you don't have that long-term horizon in now going forward, then please, why we are advising, we are not saying you move out from the capital market because market has peaked out, the equity market has peaked out. We are saying you switch either to large cap based on the risk profiling. We generally encourage people to shift to the flexi cap, because as a money manager, we get highest flexibility in terms of timing the market or the asset allocation, whether it's a mid, large or small. So it's just a additional data point. I don't think one should stress out at all with this stress. Somehow market got stressed out and people got capitulated and a lot of wealth got wiped out, large market cap got wiped out. And this is something we as a house, we always try to pacify, because there's nothing like that which has happened. There's no event which is played out. Just calm down. It's an important additional disclosure data, nothing more than that.
Okay, fair point. So two aspects there with regard to the calculation of liquidity, and then we'll come to certain aspects that you pointed out in your note to investors as well, which I thought was quite interesting. One, I was speaking to one of your peers, and what they were pointing out is that what this is doing is it's looking at days to liquidity, and there's a measure called days to cash, which is, as I understand it, how much of your portfolio you can sell on a daily basis. If you look at both in conjunction, Sandeep, do you think that that would present a better picture of how you would deal with significant redemption pressure?
See, first of all, the what regulator has asked for the data in terms of certain format, they have assumed that you can't sell more than 10% of the equity. Okay, so it's a very conservative approach of showing in how many days it will take. First of all, you have to understand that at least in my 33 years of career, I have never seen that all the schemes of the particular mutual fund is wiped out completely. One particular segment is face redemption completely. It never happens. Okay, what they want to showcase that whether your portfolio is liquid or not. So some of the data points they have given, it gives you some. It does not give you totality about liquidity. It does not give you totality about the quality of the portfolio construct. What it gives you some measures about risk and some measure definitely about the liquidity. So it's a step in right direction. What is important for us to understand that is that you have to assess the risk appetite and the tenure which you are looking at. And it is a theoretical exercise for us to believe that entire industry, all small and mid cap will be unwinded in one day. Okay, it never happened. It will never happen also. Okay, so what a lot of people have started now I think our worry is that the people have started calling us and saying that, let's say our mid-cap scheme can be unwinded in 6 days or 3 days, that's a great, assuming. So people are saying, oh, now my redemption will happen in 6 days.
Oh,
if your small cap will happen in now 22 days, so you will redeem in 22 days. Okay. So that is the misconception which is getting. So what happens? The regulator tried to be transparent in certain manner, but a lot of narrative getting built. The investor, it has created more nervousness in this thing. In fact, that's the reason I generally don't go on so many channels in a day. I'm going out this time because we want to educate people. That's the reason we written a very detailed note about it. There is no problem. Understand? Is just additional data point in your interest. It is being disclosed. Nothing more than please calm down. Don't get panic. No such event has happened.
In fact, that's the reason why we reached out to you as well, Sandeep, and I'm glad that you agreed to speak to us. On that note that you were just talking about, you spoke about valuations and you spoke about your methodology and the fact that, please correct me if I'm wrong, if I'm saying this wrongly, because I don't have it in front of me, but you don't see excesses in the market. Sure, there are a few pockets where there is, but it's not widespread. Can you help us understand how you see the space right now, particularly the small cap space?
See, let's look at the India as a country first and then come to small and mid. So you get some answer there. So what is very important, and this is something we always try to explain, we as a mutual fund or quant as an analytic house always talks about that don't look at anything in isolation. Okay, that's first point. When you look at an isolation or what we call it's a unidirectional or one directional approach, you don't get answer. Let's say example. Okay, I'm giving example. People have been talking about the valuation Indian equities has been rich for a while. Okay. Now market isn't correct. You leave last 2-3 days, but in last this phenomena is going on for last 1.5 hours, years. People are talking, expecting correction, and then we'll give you example how 2018 was euphoric, how 2007-8 it happened, or 2000. These are all postmortem analysis because you are looking at just valuation. Yes, valuations are high. First of all, not stretch. When euphoria happens, when you look at multi-dimensional way of looking at, when your liquidity is extraordinary, risk appetite is extraordinary, and valuations are extraordinary stretch, and that's the classic signs of euphoria. In today's context, only 1/3 of the market data points are stretched a bit. Other 2/3 data points are not at all stretched. And hence, in a totality, when we look at, there is no euphoria in the Indian equity as compared to what happened in January 2018 or what happened in October 2007 or January 2008. I'm just talking about last 10. 2000, India was very tiny, so no point comparing India 2000 and 2000 was a more of a NASDAQ event, not as a global event. But 2007-8 was a global event and 2020 was a global event. Now with that background, if I have to look at India risk appetite as compared to 2007-8, it's very different. We barely managed that crisis. Today, India as a perception of the India is one of the extraordinary globally, both in absolute and relative. Absolute, we have done extremely good job. Relative, we have done even better job when you talk about the relative to China, relative to US, relative to developed market, relative to Europe, and even relative to emerging market. Okay. So now look at the background that India has been so constructive. Okay. India risk appetite is rising. India liquidity is increasing. Indian capital market depth and breadth is also improving. It's very important to understand that, whether if Indian capital market depth and breadth is rising, which means number of stocks coming to F&O, number of IPOs, QIPO, NFOs coming, so there are various sources of avenues also to deploy your money. Okay. So it's not like market is only I am growing, but market is not growing. Then I have a liquidity problem. Okay. I have a deployment problem. But whole space is growing and India is so uniquely poised, okay, in terms of economic activity. With that background, if I believe that this is a theoretical exercise, one fine day, all mutual funds, small and mid will be unwinded, how many times it takes? It's like a RBI asking this question, how many times banks will take to unwind their banking exposure or the entire thing? How many times ROC start asking how many times it will take to unwind a company? Right. We have to understand. Don't miss anything. We mutual fund, insurance companies, all these banks are going concern. Okay. Yeah. Their continuous business. Business is also growing. Investors are also growing. Savings are also growing. So it's not like Indian saving has stopped completely.
Absolutely.
So nobody is coming.
Fantastic. Sandeep, thank you so much. I couldn't have put it better. And in fact, I'm sure that a lot of our viewers will be given a little solace based on your words. Thanks so much for taking the time.
Thanks a lot for calling us.
All right, do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the portfolio management. Well, delayed start on India market close, but well, it doesn't change the fact that the markets are reeling under pressure. Almost seems to be a Wednesday redo of sorts, because the Nifty is still down 0.78%. This was about the fall that we had for a better part of Wednesday's session, but the pain at the broader end of the spectrum was much worse. So if you look at the mid caps, small caps, 0.5% for mid caps, but the market breadth and the small cap index, okay, actually small caps is not, but the market breadth is still looking wobbly. And some of the financiers, power financiers or otherwise, have corrected quite strongly in the session today. So the market breadth is still a bit patchy. Keep that at the back of your mind. Bring up autos are sulking as well, and we'll do an extended conversation on autos with both Tushar, my colleagues Tushar and Sajid, coming in and talking about the EV policy as well in detail. Tamanna, I'm sure will throw some light on that as well. But get the heat map up on the screen just to see what's happening within the index. The number of advances to declines I don't think has changed much on the index. The participants may be a little, because while BPCL still remains the top loser, there is M&M giving it company, Hero MotoCorp giving it company. So autos have come into the losers list. And on the gaining side, Airtel 2%. So it's gained well through the day. UPL, HDFC Life, ITC, so some bit of flavor of a couple of defensive names out there, with the likes of ITC, HDFC Life and TCS being in that list. But clearly, while the broader market indices, Tamanna, may not show pain, individual pockets are sulking big time.
I'm just wondering, Neeraj, if you're preparing for your first Tesla, since the EV policy allows you now to get a Tesla in India. So fingers crossed.
A loan from you.
Oh, obviously, I think once you buy the Tesla, people will ask you. Just another interesting thing I noticed, let's keep the heat map on just for a second, because I've been tracking the story all day. At least 5 names, I won't mention which ones, 5 names in the top green line are donors to political parties. Their names were in the electoral bonds. If anyone was wondering what the impact was, doesn't seem to be too bad. At least 5 of those names are there. Let's pull up the individual stocks that we're tracking this morning. Yes Bank is one of them. Yes Bank has had business updates. The MD says deposit growth is at 18% for FY25, not bad. They're also talking about, the MD has also been clarifying on reports, media reports of stake sales by SBI and LIC, saying that they don't expect current investors to exit. So a bit of positivity there. Now, I just want to talk about the auto pack because of a couple of reasons. One is the new EV policy, which incentivizes 4-wheelers, but before that, you also had a new policy to replace the FAME incentives that two-wheeler EV makers were getting, and that was not seen as much. It's barely 500 crores. So you've seen Bajaj Auto under pressure, Hero Moto under pressure. I'm just going to pull up a TVS as well to see what's happening there. Tata Motors and M&M to see the impact of the EV policy and perhaps a Tesla entry into the country. So all of that in the red. Autopack is having a tough day. Frankly, if you extend that, so are tires. So that's the kind of day over there. The other set of stocks we must talk about and which have dragged the market down through most of the day are the OMCs. Neeraj referred to some of them in the heat map, but let's pull up the BPCLs, HPCLs and IOCs of the world, which are definitely, dragging down the markets. On the face of it, think about it, it's just about a 2% rupees to, not 2%, rupees to kind of a drop on petrol and diesel prices in terms of a fuel cut, but you're definitely having a huge impact. So that's BPCL. Can we pull up HPCL and IOC to see if that's possible, because these have been the big losers. HPCL, the biggest of them, yeah, still about 7% down. So that's one story. The other one I want to talk about is Biocon. Yeah, you see IOC now about 7.5% down. Biocon and Eris. The acquisitions in focus. Eris is buying Biocon Biologics business, and it's being seen as negative for both. Biocon actually down over 5% today. So yes, a bit of pain, but I would say a recovery from the lows. Markets off their lows right now, but a lot to discuss and unpack in today's show. Neeraj, and so much has happened through the day, including clarity on when poll dates will be out.
Yes, like we said, Tamanna, it's going to be a busy weekend for you. And it's not turning out to be otherwise. But let's talk about what the charts might be suggesting and derivatives might be suggesting. Also, fundamentally, while Chakri Lokpriya came in when the market was just starting to sulk, we get him again to try and understand how does he feel about the medium-term picture. So Soni Patnaik and Chakri join in on the show. Both of you, thanks so much for taking the time out. Soni, let's start off with how do you view the charts today? Because quite unlike, and I was mistaken, but quite unlike what happened on Wednesday, small caps are behaving a lot better despite the intraday scare.
Good afternoon, Neeraj, Tamanna, and to all the viewers, and thank you so much for having me on the show. I think, yes, I think not a lot of movement today in Nifty, but it's quite important to understand two levels. One is that it's still holding the crucial support of 21,900, 21,800. That band is a very important, crucial support going forward. Any break below this level, we can witness major correction towards 21,500, 21,400 also instantly. So I think that's one important level to watch out for. On the upside, definitely, I think, bulls would have had, any move or any close above 22,050, 22,100 would have favored bulls more. They could have just had the confidence to step up again and retest 22,500. I think that's looking a bit weak and dicey as of now. However, we'll still look at the support levels as long as 21,900 and 21,800, that support band is getting defended. It may consolidate, but there's not a lot of upside that can be seen until and unless it does not give you the closing above 22,200.
Okay. In light of that, Soni, what are the stocks that you're recommending for the session today?
The first would be Bharti Airtel. It's giving you a fresh breakout, good lifetime, option breakout. Also, you can see above 1,200 levels. And from current level, one can buy, keeping a stop loss of 1180, targets of 1215, 1260. And the second stock would be HDFC Life. So HDFC Life has been constantly defending the important, crucial support of 600, even when markets were quite choppy. So I think that's a good bounce back. We can see HDFC Life keep a stop loss of 600, can buy from current levels, and target of 660, 670 can be seen. And just to add a disclaimer that we've also advised both of these stocks via call options. For HDFC Life, we've recommended 650 call option. And for Bharti Airtel, we've recommended 1220 call options, both with the same view to our GM clients today.
Chakri, good afternoon. Let's start with your take of what's been happening with PSU stocks. Again, the seesaw continues, and even now you're seeing a bit of pressure over there. Anything that you'd pick up right now, or you just really be a bit nervous about what you're seeing?
Good afternoon. I think the fall in the last few days, many of the PSUs are down like a good 20-30%. If you look at the power financiers, Power Finance, REC, both of them are down. They now trade probably at about 1.2 times book. And mind you, India growing, electricity and all that good stuff, which means it's a long-term story. And so if you look at it on a FY26 book value, they trade at about 1 time book. So if one is brave enough, because these are very highly owned stocks and therefore there is a lot of selling pressure. But I think this is the time to nibble in. And again, for instance, the large companies, NTPC, one of the largest companies, growing very fast. The price to book value is fairly reasonable for the company for this growth, and it's also corrected a lot. So I think I'd start nibbling in these companies.
Okay, so you'll start nibbling in these companies. Interesting. Chakri, just one quick question. The poll dates being announced this weekend, do you think any impact that we could see on Monday in terms of a renewed momentum to this group of stocks, your rail, defense, PSUs, PSBs, etc.?
If you look at the an order announcement over the last few days, even yesterday and the day before, the order momentum is continuing, which is a positive for whether it's railway, defense, or the PSU stocks. I think the election dates, give or take a week or two, is largely known. So I don't think that's going to be much of a surprise. So if anything, I think once the selling subsides, I think it's time to look because the number of names have corrected.
All right, stay with us, Chakri. Stay with us, Sony. Now let's talk about OMCs. That's definitely stock or stocks of the day. They've traded with deep cuts on the news of fuel price becoming cheaper by just 2 rupees, but the cuts are quite massive. Mihika joins us with more. Mihika, what's the house view out there and why have this pack of stocks really suffered so much?
Yeah, well, OMCs were in focus for today since the start of the day after the Ministry of Petroleum and Natural Gas did inform that fuel rate cuts nationwide will be cut ₹2 per litre for both petrol and diesel. And now mind you that petrol and diesel retail selling prices have not been cut since May of 2022. That's almost a 2-year hiatus of no changes, and the prices were effective from 6 a.m. today, which is March 15. Now what the price cuts do, it impacts the gross marketing margins of the companies. Now, according to brokerage calculations, the marketing margins for petrol are in the range of 5 to 7.5 rupees per litre, whereas for diesel it's in the range as low as 1.4 per litre to 4 per litre. So now what this basically does, while petrol margins do take a hit, but they still stand in the positive range. But the 2 per litre rate cut on the selling prices, if the diesel prices are in the range of 1.4 to 2 per litre, diesel margins could be going into negative territory. However, brokerages are still positive from a long-term perspective. MK says that FY24 and 25 earnings estimates are intact and they've made no changes, and they expect cuts to actually only be applicable till elections end. And then we also have Citi, which says that the companies will maintain healthy integrated margins, which are refining and marketing margins. However, the FY25 EPS estimates for all the three stocks would be impacted by 10 to 14%. And one key risk is the crude prices. Now, crude prices have been on the rise. In the past week, they've gained about 4%, even though they did open lower in today's day of trade. However, any increase to the crude prices could, cause more pressure on the margin. So that's a key level to watch out for.
All right, Mihika, thank you so much for that. Chakri, let me start with your take. We've been discussing in the newsroom whether this is the bottom for OMCs because, well, it's a 2 rupee cut. Is it going to get worse? Only from the perspective of the fact that this government has not been too, well, open-fisted in kind of cutting rates on the petrol pump or the retail prices. They've been quite conservative about it. So the feeling is that maybe this one cut before the elections and that's it. Would you concur that this is the bottom for some of these stocks?
If you look at OMC companies over the last few years, they've traded around each of their book values. And whenever a cut like this happens, with the uncertainty that oil prices can go up and down, and will these companies have the flexibility to revise their prices up or down, which is kind of not known. So in that background, what you then do is say, okay, then we'll trade it around the book value. And given that these companies are at that number, so there's not much upside given the uncertainty, even though they're technically fundamentally very weak stocks. I mean, fundamentally very, low valuation stocks. But given the uncertainty around the gross marketing margins, which can tend to go to losses, given the current cut, I think I would stay away from it.
So, you would buy or would you stay away?
I'd clearly stay away from the OMCs.
Got it.
Simply because the diesel margins can tend to negative. Even if the oil goes up by a couple of dollars, then clearly diesel margins will be in the red.
Okay. Well, let's take a break on that note then. Quick break. We come back and talk about autos in length.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does it say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today.
All right, you're watching India Market Close, and you know it's really been one of those weeks where you feel it's TGIF. Quite a lot has happened this week in terms of news flow, and the momentum continues. The big story this afternoon, broken just a few minutes ago, is that the government has approved its new electric vehicle policy to promote India as a manufacturing destination for EVs. But that's not the only exciting part. It has also allowed entry to Tesla. Tushar and Sajid join in to break it down. What does it mean for listed companies, for the space? Tushar, take it away.
So thank you so much, Tamanna, and good afternoon to you and Neeraj. So essentially, India has paved the way for the likes of Tesla to come in India, set up its manufacturing plants and sell in India. So how it has done it is actually by reducing the import duty for a certain number of units for a certain number of years. So if you look at the key details, a customs duty of 15% will be applicable on vehicles worth $35,000 and above for a period of 5 years. So this 15% is the same as the CKD levels that CKD, that is completely knocked down units, currently enjoy. Remember, CBU, the completely built up units, attracted an investment of and customs duty of 70%. Now that's down to 15%, something that works in the favor of Tesla. OEMs that are going to set up EV plants must invest a minimum of 4,150 crores, but there's no cap on maximum investment. OEMs have a total of 3 years to set up an EV plant in India and about 5 years for domestic value addition. What domestic value addition means that about the local sourcing of components that has to go into the manufacturing of each electric vehicle. A localization of 25% has to be achieved by the 3rd year of manufacturing and 50% by the 5th year of manufacturing. For more details on how this impacts Indian companies, how it means for global OEMs, Sajid, please tell us.
Yeah, thanks, Tushar. The basic thing is that there is a couple of numbers that we need to be aware of. One is that with respect to the kind of manufacturing that can come in the first 3 years. The second one would be the kind of investment. So a minimum of $500 million is what the government is proposing, that anyone who wants to come into India for manufacturing and sales of EV, they have to invest minimum of $500 million. The cars have to be minimum 29 lakh rupee valued, so that they are eligible to it. So any car which has a value of more than 29 lakhs can can be sold through this policy. Plus, there is they have put a small cap of 40,000 EV units initially. So that also, in some sense, helps in protection of some of the domestic manufacturers who are getting into the EV space. And the 3-year period which has been given is basically a preparation time for the incoming player to gauge the market and and look at the scale at which it wants to go through. But at the same time, it also provides the ecosystem, which is the EV ecosystem within the country, to develop, and so that they can reach 25% in 3 years in terms of localization, and then 50% within 5 years. So overall, it seems to be, despite a lot of automakers pushing back, the government has gone ahead and come out with a policy which basically gives an advantage to anyone who wants to make India a manufacturing hub. Neeraj.
Okay. Well, guys, what are the challenges to your mind that could come in for local companies? Because today it seems that the established auto companies have clearly taken the chin on the back of this. From the highs, the auto index is down significantly.
That's right. If you look at from the company's point of view, or from the ecosystem point of view, you are seeing a build-up of ecosystem for electric vehicles in the country. You are seeing battery manufacturing happening in India. You are seeing all the accessories as well as electronics being manufactured in India. Many of those companies are Indian companies who are supplying to global peers, so they have a big opportunity coming in terms of the scale at which they can provide to many of the manufacturers. From the point of view, the Indian manufacturers, they have 3 years to prepare themselves and scale up their operations so that they have a good foothold in this market. Remember, it's only vehicles about 29 lakhs that will be permitted to be sold in the market through this process, unless they become more localized in Indian market. So for the first 5 years, you're not going to see much of a competition coming in, and the domestic players will have a much better advantage going forward. But over a period of, say, 10 years or so, then you have a better play coming in. So Tesla, which is coming into the market, yes, the brand is good and people recognize it, and there may be many buys for it. But I don't think it will dent the Indian players like a Mahindra or a Tata Motors, who have a good plan in place to set up EV. And for that matter, even Suzuki, Maruti Suzuki, because it is 25 and 26, that's when they're going to bring in their EV as well.
Yeah, but just speaking about Tesla, what do you guys reckon? This is, in a sense, a victory for Tesla and Elon Musk, isn't it, Tushar? Because they wanted to come in. They said, give us lower duties. The entire auto industry was up in arms, saying that, secure the domestic market first. And they said, Tesla always argue that we're a cleaner technology, so you must give us that incentive. Effectively, that's what's happened?
In a way, you can say that because Tesla was pushing for a lower import duty for the longest time. It was one of the primary conditions, as per reports, that this was the bone of contention among the discussion that was happening between Indian stakeholders or Indian government officials and Tesla officials, that reduce the import duty will bring the cars in. That has happened, but we have to also remember that even after the 15% import duty, a Tesla which costs about $45,000 in the US will be still about, say, a crore at least. But that's, again, it's a good luxury electric vehicle to have. We already have those vehicles in India. A Mercedes sells a 1.5 crore electric vehicle in India. The Hyundai or Kia sells 60 lakh cars in India. So Tesla now at least comes in that same ballpark of luxury electric vehicles. So it works for them. The likes of Tata Motors and Mahindra, so to say, are sort of still insulated because they work in a different price band altogether, which is up to, say, about 25 lakhs at this point of time.
Just to add there, Neeraj, if you remember, Maruti recently went and acquired the Suzuki Gujarat plant. That's a plant which is supposed to come in with the EV as well. And Suzuki will be coming out with an EV in 25. So, there is a possibility, and Maruti has already, put in its, plans with respect to the investment that is going to make over the next 4 to 5 years in this market. And we may see Suzuki also be one of the players who is coming into the market with an EV, and where, they have a lower customs duty or, import duty which is coming in, and they will be playing a big player in the market in that sense.
Well, for the consumer, it's great. More options coming in the EV space, especially in the passenger vehicle space. Thank you so much, Sajid and Tushar, for breaking all of that down. Soni Patnaik and Chakri Lokpriya with us. Soni, let me get a quick technical view from you on some of these plays. The auto index is down. The individual stocks are also hurting. I just want to pull up the index and its components to get a better sense of where the pain point is. And let's pull up the Nifty auto components as well. TVS Motors sharply down with 4% cut, M&M, Hero, all of them hurting. Soni, anything that you like at this point, or you'd go short on?
I think, Maruti, if you look at it, still not, it's still holding above its crucial, important support level of 11,200, and the stock has not corrected as in comparison to its peers. I think Maruti has still a chance. It can test 12,000 levels also. So from current level, in fact, it's quite a favorable risk-reward ratio. Keep your stop loss at 11,200. Can buy at current levels. 11,800 be the first target. Above that, 12,000 can be the first target. So I think this stock can definitely outperform the rest of the stocks.
Okay. Chakri, what's your sense? Does this create a flutter, or you think the auto companies will manage?
Neeraj, I guess you and Tamanna, all you guys can buy a Model S.
We wish.
Do you have an NBFC or a bank which can give us a loan, Chakri, without collateral?
Let's find one.
I would say, aapke muh mein ghee shakkar.
Absolutely. So if you look at the market, basically now we have, all the Indian listed companies, Marutis of the world, and M&M, they have largely cars, passenger vehicles, which are far below the cutoff point of that 29 lakhs. So which means their market share is unlikely to be hurt because of a Tesla coming in. And as far as the guys above the 29,000, they're largely the imported players, the Mercedes, the BMW, who all have their own electric vehicle versions. So, it's not the Indian listed companies which are going to be impacted. So if anything, M&M also does not fall in that bracket, does not have luxury. As far as Tata Motors is concerned, they have Jaguar Land Rover. Now, Jaguar is working on its electric vehicles, which will probably be released in a year or two. So I think that way Tata Motors is protected. So largely, I think the Indian auto industry remains unaffected by this move. The auto ancillary companies, the Samvardhan, the Motherson, Sumi, Sona Comstar, all these companies, Lumax, these are the companies who will actually benefit, because over the next 3 to 5 years, when the localization bit has to be met, these ancillary companies would benefit from that.
Okay, stay on. We'll just be back in moments from now and try and get you some BTST ideas from Sony on the other side of the break. Also talk about some of the key movers in the session. We've discussed OMCs and autos. I think we'll move beyond transportation just on the other side. Stay tuned.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to Rs 2 lakhs per month depending upon one's work and creativity, with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%, significant meaning, 29%, or the idea that it would make them look cool, 18%. Thank you for watching and stay tuned to NDTV Profit for more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids
up IOC, there is a comment which is coming in from the IOC chief at an event where he has said the fuel price cut won't impact profits. This is the IOC chairman. He also goes on to say state companies are losing money on diesel sales. IOC has taken a sharp knock through the day, mild, very ever so mild recovery that I'm seeing over there. But you know, the other big, I think, event or set of data that the market has been watching very, very closely is the stress test results that have come in today. And really, it's been an Agni Pariksha of sorts for the mutual fund industry and a focus on what would happen. And I thought it was interesting, Nirajan, you know, we've been
Debating.
We've been debating, that's right, about it all day. You've been saying kuch nahi, kuch nahi, kuch nahi. But the fact is that when I'm seeing a mutual fund with a 10-day turnaround and then another one with a 20-25 plus day turnaround, there's some even more than that, then there is going to be a judgment call.
Yeah, I mean, to my mind at least, and all of them are good fund managers. Maybe in my mind, there are first amongst equals. And unless the turnaround is way too off,
we should pull up that chart while we're talking, which shows all of them all together to give an idea of what we're talking about. This is a stress test. If these mutual fund companies have a 50% 25 or 50% redemption, how many days will it take?
Yeah, for the small caps in particular, the numbers are very high. The mid cap one is okay. But the small cap one, if producers will pull that is where the litmus test, if you will, could be. But again, maybe just maybe depending a lot on the fund manager who's managing the money, because the returns will probably come there, and as long as the numbers are not way off. And remember, in some cases, the numbers would also be high because the AUM is just so high that it just takes that much time. I guess that's the case with Nippon India. At 46,000 crores of AUM in small caps, you will naturally take that much longer a time. At least that's what I feel. So
yeah,
I have SIPs in some of these. I think I'm continuing them.
Yeah, of course. I mean, I'm just saying, when you relatively see a 60-day figure, like for SBI, so okay, you have a Nippon with a large AUM, then you have an SBI with a 60-day figure and not as large an AUM. So at least you're giving information.
Yeah, good information.
It's good information. I mean, these might not be, it's not like a test that you fail or pass. Let me say that. It's a stress test, but not necessarily one where the result means that you failed or passed. So our colleague Alex Matthew earlier spoke to Quant Group Sandeep Tandon for more on this and perspective of their own numbers. Take a look.
What they want to showcase that whether your portfolio is liquid or not. So some of the data points they have given, it gives you some, it does not give you totality about liquidity. It does not give you totality about the quality of the portfolio construct. What it gives you some measures about risk and some measure definitely about the liquidity. So it's a step in right direction. What is important for us to understand that is that you have to assess the risk appetite and the tenure which you are looking at. And it is a theoretical exercise for us to believe that entire industry, all small and mid cap, will be unwinded in one day. Okay, it never happened. It will never happen also. Okay, so what a lot of people have started now, I'm thinking our worry is that the people have started calling us and saying that, let's say our mid-cap scheme can be unwinded in 6 days or 3 days, you know, that's a criteria. Assuming, so people are saying, oh, now my redemption will happen in 6 days. If your small cap will happen in now 22 days, so you will redeem in 22 days. Okay. So that is the misconception which is getting. So what happens? The regulator tried to be transparent in certain manner, but a lot of narrative getting built. The investor it has created more nervousness in this thing. In fact, that's the reason I generally don't go on so many channels in a day. I'm going out this time because we want to educate people. That's the reason we written a very detailed note about it. There is no problem. Understand? Is just additional data point in your interest. It is being disclosed. Nothing more than please calm down. Don't get panic. No such event has happened.
You know, I'm very keen to know Chakri and Soni's view on this whole stress test debate that we've been having, not just in the studio. I'm sure a lot of our viewers are wondering, you know, what you make of it. Chakri, let's start with you first. can you justify, say, a 60 days, a 23 days, a 24 days? Let's just talk about small cap funds for now. Based on the size of AUMs, even that doesn't really fit sometimes.
It's good to step back and look at the overall picture, which is when a stress test happens, it's usually for the value at risk for a single fund and not for the entire market liquidating on a single day. Now, if you take when 9/11 happened, September in the US, the whole world, the markets just shut because the exchanges couldn't take the amount of volume. So here in these stress tests, they're trying to say that what if everybody sold 25% of their portfolio on a given day? The question is, why would anybody sell their portfolio, 25% of their portfolio on the same day? They would do that only if there was a worldwide, some catastrophe that has happened and people want to run out of the door. If that happens, in any case, because of the volumes, the exchanges will freeze. As has happened several times over the 25 years that I've been in this business. So the whole stress test is more a theoretical one, because when you say that, okay, I'm going to execute 25% of the overall volume that is out there, and I'm going to take X number of days, that becomes a very, very theoretical exercise. So in reality, what's going to happen is, suppose there's an event for a particular fund house, for a particular fund, they would be able to liquidate far faster because the overall market liquidity is very different.
That's true. Yep, a fair point. Fair point out there. Okay, let's look at some stocks which have moved around today on volumes. I think a stock that stands out, and while PSUs have by and large have had a bit of a drubbing, Cochin Shipyard, I should pull that one up. Good price, good volume action. I mean, about 4 times the average volumes, and it's trading at the day's highs at 10.5% higher. So really good showing by Cochin in particular. There was also some talk of Garden Reach shipbuilders maybe doing okay, but don't know if it's really participated in the session today. But Cochin certainly has. Garden Reach shipbuilders too, 4.5% higher. Sony, any chance to look at some of these companies? PSUs aren't exactly firing. They are doing something different today.
Absolutely, Neeraj. I think Cochin Shipyard, rightly said, volumes very strong. And on charts also, we can see that it's a good breakout anywhere heading towards 940, 950 in the coming days. It's trying to close even above its 20 EMA, which is quite strong on short-term chart basis. So one can just continue to trail the stop loss somewhere around 840, 845 should do the trick, and then just hold the stock for 940 or 940, 950. Any move above that will be a very fresh breakout, and the rally can just continue up to even 1050 odd levels on a positional basis. As of now, the first target comes out to be 940 and must hold with 840 stop loss.
Okay, well, 892 and counting on this one. Really good show. Put up by that. The other one which has done well today, I think on price volumes, is Reliance Infra. A bit of a bounce back day for this one. So that stock is okay. There is strength in Wari, there is strength in UPL. But yeah, principally it's the shipyard companies which have had a really good run. The other thing is, Chakri, for all the issues around metal demand because of China, copper seems to be charting a completely different course. Prices hitting highs yet again today, multi-year highs or thereabouts. It's reflecting in the stock prices too, but is that a believable trend that you would want to invest into via the stock market route as well? Hindustan Copper or Vedanta or some such?
Copper is usually an indication that demand for various consumer goods is going to pick up, because copper is used in a wide variety of consumer durables. And that is usually a harbinger initial sign. So if there is going to be a recovery in the global markets, because interest rates are right at the top, everybody's going to start cutting rates sometime in the next 2 or 3 months, and therefore the consumers are going to start spending again. So if all this happens, then copper demand usually picks up, and so maybe that is a sign that, but it's still early days.
I was just looking at Paytm, and gosh, what a day that counter has had. The overhang seems to be behind them. 15th March was an important day because all of the RBI restrictions actually come into place. But just well in time last evening, the banks who would be taking over and ensuring there was no disruption to the payments business were notified. Yes, Bank has had quite a bit of an advantage there as well, but there's HDFC, ICICI Bank, etc. Now it's a pure payments play. It's been on a 5% circuit all day. Soni, how would you look at a Paytm at this point?
Taman, I think, regardless of how the impact has been, due to various multiple news on this particular stock on charts, the stock still remains quite weak. And on any opportunity or towards 400, 420, 450, these are the levels where it's continuously facing a supply zone. As long as it's not decisively taken out above 450, the stock cannot see further upside. It's quite weak on charts, and the support stands at 320. Any break below 320, you can see a fresh round of sell-off. I think the stock looks quite, it's not exactly showing you indications to start selling from current levels, but maybe sell on a rise view can be a perfect strategy for the stock.
Okay, well, amongst other things, pharma is having a slightly indifferent day today, Tamanna, because there are select pockets which might be doing well, but select companies on news are just not doing well.
Yeah, and one of them is Biocon. Has been feeling the pain. I mean, we would have left an opportunity to speak with the management, but did not get that chance. The stock is down nearly 6% after the subsidiary has sold its branded formulations business. Yeah, there it is, nearly 6%. What is the concern that the street has? Varsha is joining us with more details.
Hi, hello guys. So as you rightly said, the stock is under pressure. If you see, it fell over 6% after its subsidiary Biocon Biologics India branded formulation to be acquired by Eris Life Sciences for rupees 1,242 crore. Now, this transaction value represents an accretive multiple of 3.4 times revenues and 18 times of EBITDA. Now, this business includes the portfolio includes insulin, oncology and critical care products. Now, company said that this collaboration is to unlock value from its legacy business of branded formulation. According to Street, the decision to divest from core therapy areas such as diabetes and oncology has been necessitated by its elevated leverage. Now, overall at the Biocon group level, net debt stands at almost $1.1 billion. Now, Biocon Biologics, Basalog and Insugen are the largest brand having market share of over 10%. Now, addition of these two brands leads to almost 100 crore plus revenue. Yesterday, Biocon did see 8% rise in stock price after this news, but today's stock is under pressure.
Thank you for that, Varsha, detailing, the stock under pressure. So is Eris Life, the purchaser and the seller, both under pressure right now. Chakri, any view on this deal and why the sentiment has been a little negative towards it as far as Biocon is concerned?
Sorry, this is not a company that I invest in.
Okay.
So I don't have much details
All right,
on this.
fair enough. Soni, on the charts?
Stock is looking quite weak. In fact, it's a sell on rise perfectly as long as it's not crossing above 260. And, the stock can actually test lower levels of 240 to 35 in the coming days.
Yeah, it's looking wobbly today for sure. The question is, can it improve or will it continue to sulk? I mean, anybody's guess really, but just making the point that it's looking slightly wobbly. Chakri, a lot of good businesses, we were talking about this in the afternoon show, that a lot of good businesses have come off in the last few days, wherein the fundamentals might have been intact, but due to technical factors, they've come off. I'm not asking whether you're buying or selling or recommending, but what is it that forms a part of that good business list, which people should keep on their radar? They can buy depending on their research and their risk appetite.
Very good point. If you look at a number of companies which are in the broader market, have been the primary beneficiaries of everything that is new and happening in India, which is whether it's railways, defense, EV, not EV cars manufacturing, but the ancillary companies. And also whereas the ancillaries to the power industry. Now, these are the areas where we've seen the government spend, and these are the areas some of the private companies will also come in after the elections once the noise of election is over and interest rates start coming down. So I think, therefore, the earnings growth for these companies are going to be much higher than that of the frontline Nifty. And their valuations can trade higher. I think once the dust settles, one needs to pick a number of companies which are out there whose earnings growth is very sustainably growing, far higher than that of the market, at least for the next 3 to 5 years.
Yeah, so that's the point. I mean, we're not asking about ideas here, but where is it that you find earnings growth possibilities to be much stronger, Chakri? Sector, stocks, what have you?
Yeah, the earnings growth possibilities are still in the same sectors, which are still in manufacturing, electronic manufacturing services, auto ancillaries, and financial services. These 4 areas, so it'll come out with, some of them will come back to the same old names which I've corrected, but these sectors are seeing a very strong earnings growth for the next 3 to 5 years.
Now, as we're in the last sort of 10 odd minutes of trade, Sony, any BTSTs or BT sell Mondays that you have on your radar? And, looking at the kind of seesaw we've seen in markets, Monday could be another very interesting day. You have the election dates kind of fever, which will catch up as well. But anything that you would have shortlisted?
Yeah, the BTST idea would be persistent, giving a good breakout. And, there's a positive RSI divergence with volumes also crossing the previous day. So persistent from current level is a buy with 83.50 stop loss and 8600 target.
Wow. 8600 on persistent. Remember, IT has been sketchy, but some of these mid-sized companies are doing well. Persistent at 8400 is quite something really, but it's an expensive stock that continues to stay expensive. The other one that was in news today was LTTS, which won that $100 million order as well. So wonder if that has reacted positively. Should come up on your screen, 3% higher for LTTS too. So really good going here. Okay, watch out for some of these stocks. In fact, people are talking about IT and healthcare. Pankaj Murarka of Renaissance mentioned that IT and healthcare could be the investable themes going forward. Hear him out and his reasons for the same.
We've been fairly positive on healthcare and IT as a sector because we think IT is coming out of a prolonged slowdown of the last 18 months, and we see strong signs of revival of IT investments by global companies in the second half of this year, and Indian IT companies should be a big beneficiary of that. So we've turned pretty positive on IT as a sector. We like healthcare as a sector because we think the sector has done well in the last 9 months or so, but we still think that there's still strong growth ahead of the sector primarily because pricing pressure in US is off the table. We're seeing significant price improvements in US generics market, and which will significantly benefit Indian companies.
Okay, well, so that's some rationale. Chakri, wondering, are you constructive? IT, Sony, I identified persistent. But it's not just persistent, LTTS, some others also have done well. Do you like this space?
IT, that space is clearly good. I think persistent looks fine. They seem to have an order book momentum because, given the nature of their business. And I think that is translating into a higher growth rate. So I would buy persistent here. And among the large caps, I would buy into HCL Technologies. That company also, I think it will regain its mojo fairly soon, and the valuations are pretty much, the downside is protected at current levels.
Relaxo is having a great day today. Just some of the mid-cap gainers, Relaxo, Honeywell, Solar Industries, Metro Brands as well. Chakri, I'm just wondering, typically when you get into poll mode, there is more spend in the economy one way or the other, which does sometimes lead to a spike in, basic consumer spends. Do you think that this is going to be an interesting time for the next few weeks to even watch what's happening in the FMCG and the consumable space?
Within the consumable space, yes, but the companies like Bharat Electronics, which is in the defense space, corrected fairly in the last few days, and strong order book. That'll be a theme, national security, defense, and all that, which will be spoken about. And some of the consumer names, like you said, the FMCG names. But more, I would go with the consumer durables such as an M&M, because some of the sales usually pick up in the run up to elections. So that's another within auto space. M&M I'd look at.
Yeah. Any views, Sony, on an M&M or a BEL?
I think M&M is looking slightly on the profit booking side. So, one can just look forward to avoid the stock as of now until it has settled down. BEL, on the other hand, definitely, I think, it has a support of 180 and it has clearly taken those support. It's just bouncing towards 190. I think from current levels also, one can look at with a good stop loss of 180. Hold the stock, it should do 200, 205 in the coming days again.
Okay. The other thing that has done well after days and days of a fall are the wind energy companies. So Inox Wind is up 2.5% today. It was up in between as well, but went down all the way to 425, I think. So from there has bounced back, but in today's session up about a couple of percentage points. Tamanna rightly identified Relaxo, so that is done well, yes. But today, some of the media stocks also have bounced back after days of a pullback or days of a downtake. TV18 Broadcast and Network 18 are also up 5% apiece. So 3.5% for TV18, Network 18 up about 5%. So those are a couple of other interesting names. Zomato is up 4.5% at 162. Sony, on the chart, Zomato, it's kind of sticking to this 160 odd level, moving up, yes, but consolidating at these levels, or do you think it's reaching a top?
I think there's some consolidation going on. It's sideways movement. There's multiple support also that one can see around 150, 145. And on the higher side, 165, 170 seems to be that range. So it's just consolidating. Any move above 170, you can see a fresh round towards 190 as well. So I think one can just accumulate with 145 as a stop loss. And the moment it's taken out its resistance above 175, we can see it going towards 190.
Right. Sony, I'm just wondering if you've been tracking Swan Energy, and this is a stock that has been on our radar since this morning. It was a call this morning from Kush Bora, who is our technical guest on the opening show as well, and has had a pretty good day. Do you think there's a further upside?
I think, Tamanna, volumes definitely can be seen on charts today. If any further upside, it can test 600, 610 from current levels, provided on immediate basis it does not break 540 once more. So if it's holding 540, if it's defending, it should bounce towards 600. Any move above those levels, you can see, the confirmation of the stock being bottoming out and showing you a short temporary reversal from current levels. I think that's quite important. 540, important support to watch out for.
What about you, Chakri? Any of these small cap names that you're tracking, you are seeing them completely off their day's lows. I want to just pull up the small cap index as well. And with all the focus on small caps, stress test, mutual fund, sort of under pressure for their small cap investments, the fact is that you've seen a fairly decent recovery through the day. The last 3 months has been tough. Yes, over a month. The small cap index has lost about 7.5%. But Chakri, is this the time to go bottom fishing?
Yeah, if one has the risk appetite, clearly, yes. Companies like Park Hotels, so I think it's called APJ Park Hotels. It recently IPO'd company. It's corrected fairly significantly. The anchor book is out of the way, and the valuations are far lower than an Indian Hotels or a Lemon Tree. And hotel spends are still strong. So I think, yes, consumption. So Park Hotels.
Okay, Sony, Chakri, thank you so much, both of you, for joining in today, and have a great weekend. Much appreciate your time. And let's start wrapping up the markets, about 1.5%, 1 minute, 40 seconds left. And if we bring up what the large caps are doing, well, still sulking, but the small cap index is the center of my attention, because frankly, I'm a bit surprised when and I looked at the performance and it's ending in the green. Not a bad day for the small cap space. Bring up the advanced decline ratio, and has it improved even further from what it was? Yes, it has. Almost even Stevens, just a few points here and there. Okay, the heat map, before I hand it over to Tamanna, what's happening at the broader end of the spectrum. A lot of red. I think the winners and losers list almost the same, but for the fact that Tata Motors is now in the top 5 losers list with 2.5% cut, and M&M, not BPCL, is the top loser. Who would have thought at the start of the trading day today?
All of these under pressure with the EV policy, one reckons. Definitely, you see Hero Moto, all of them, Tata Motors, the entire pack. under pressure. Let's spot where Bajaj Auto is. Yeah, that also looking fairly weak. So you are seeing that kind of news. What's interesting, I think, is how a lot of the factors which seemed very important at the start of the day have dissipated. You're left with fuel cuts and auto policy as the key drivers. Let's just pull up where your mid-cap index looks like it's ending the day, and the line chart through the day would also be interesting because the mid-cap 100 is still 0.5% down, but off the day's lows, and you're seeing quite a recovery towards the end of it. In fact, your small cap is closing up in the green, but even here as well, they're definitely off the day's low. So you are seeing that kind of a move. I want to pull up the PSE index and its constituents because that continues to be a pressure point, Neeraj, that we have seen. And if there is one sector, one set of stocks which is going to have some impact ahead of the polls, this is the one where you should keep your eye out on. And HPCL, Indian Oil, all of this is of course the fuel cuts. An interesting statement from the Indian Oil chairman just a few minutes ago saying that this is going to have no impact on our profitability. BPCL there as well, Oil India. So that's the big pressure point that you're largely seeing. So autos, PSU stocks, banks also fairly weak.
Yep, not strong at all. So, but an interesting close with the small caps doing what they are. We wish you all a happy weekend from Tamanna and me and the team that put this show together. Thanks so much for tuning in. But remember, once the election dates get announced tomorrow on NDTV Profit, you will get enough data tomorrow in case that is something that interests you.
And definitely join us on Monday to understand what that means for your portfolio.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvandas Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phrases of Amul do you remember?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap.
It's all about the stress test for the mutual fund industry today, and that pertains to mid-cap and small-cap funds. What does this mean for your investments into these schemes, though? Should you change your strategy based on the outcome of the first test? To talk about that, I've got Dhirendra Kumar of Value Research joining me. Dhirendra, as always, thank you so much for taking the time and for speaking to us on NDTV Profit.
Thank you.
Now, a few of these schemes have disclosed that it will take anywhere between 20 and 32 days to liquidate half of their portfolio in the small cap space based on the methodology that has been prescribed. How do you read this? Is this significant enough to change your strategy on investing?
No, not at all. You know, I actually read nothing into this because this stress test is, just an activity which people have done, and it has nothing to do with reality. Because, I have examples of, situation or context in 2008 when the market collapsed. And if the funds would have faced a 10% redemption of their total assets, it would have led to a complete collapse, and even without that complete collapse, the small cap funds steadily declined in value by 70%. That actually was the norm. That was the time when we only had one leading fund, which was, a micro cap fund, which eventually subsequently became small cap. So this is a theoretical exercise. One has to see that what is the impact cost of this. 10%, 25% of your portfolio, 50% of portfolio if you have to redeem. But 25% of your portfolio, 50% of your portfolio to be redeemed in a small cap fund, which is enabled to invest 40% into large cap means nothing. Also, when we see a widespread exodus from a fund, then it is nearly impossible to simulate the situation or the context of, the kind of
pressure,
exodus we witness, or so it is just, I would say that it is just bringing in a degree of sensitivity, making people aware that these could be alarming. These funds can face a situation where they could be stressed substantially, but in 2008 the large caps actually looked like small cap, because when your Sensex goes down from a high of 20,000 points to 8,000 points, then the Sensex was in stress simply because FIs were, fleeing.
Correct.
So this is just a theoretical exercise and sensitivity, nothing beyond that.
Interesting points that you've already made, but to the point of, it being an exercise. And I was speaking to one particular representative of a mutual fund, and what they were pointing out is that their small cap fund is true to label, as a result of which they have 87% of allocation towards small caps and no allocation at all towards large cap, about 5% in cash and the rest in mid caps. As a result of which, the nature of this scheme and the nature of this particular individual scheme is that it's going to have a liquidity constraint. So you can't really change what the portfolio is meant to do. It's meant to invest in the broadest end of the market because that's the prospect for better returns. There are risks involved in that. So what is this aimed at achieving then?
I would just like to make two observations. One is that, true to label, but, if regulations permit you to have 40% into large cap, non-small cap in a small cap fund, you better follow it because it has been done with a view of, it is, you don't necessarily have to have style purity at the cost of compromising on essential liquidity. You being true to label may not be a great badge to have. Being a reasonable fund which can withstand any intermittent exodus or redemption from the fund is just as important, because everybody should every fund manager should be aware that he's running an open-end fund where a lot of people can turn up to take their money tomorrow.
Okay.
Second is that there is a problem with there's a catch in this whole exercise. We know that there are a lot of small cap companies where where the companies could be suspect, will be questionable, or may not be a high quality company. It may not have great returns. But we also know the reality that many a times section of interested people rig the stock prices, and when they rig the stock prices, there is ample liquidity. So here is a lousy company which will have great liquidity and it will pass the stress test, but you can potentially lose your capital over time. So this is something which the stress test will not follow.
Okay.
Will not be able to capture.
Okay. So from that perspective, then rank in order of magnitude the aspects that an investor, retail investor, should pay attention to various factors when choosing a small cap fund. Where does this liquidity risk fit on the ambit of, say, for example, valuation, or say, for example, choice of portfolio, or say, for example, the approach of the fund manager per se?
I have, internally at Value Research, where there are many people who are in the business of, or who are actually, to make a living. They look at small cap funds regularly, or they spend their 8 hours looking at different kind of fund and what actually makes them stand out, or what makes them a promising one for a long-term investor. And with that in mind, I would like to keep, just 3 points for a small cap fund investor. One is that apply your mind in terms of looking at quality of a small cap portfolio. Quality of a small cap portfolio is not a very easy thing to do, but read and understand. And maybe, we have an internal tool whereby we look at the return on equity or the growth and things like that, so that, because a small caps company might be a completely fictitious company and the stock price might be booming. Avoiding those at any cost is the most important activity of, investing in small cap. In keeping out of the, the sundries and crooks to be away, keeping away from that is the primary job. Next comes, and if you are able to spot 1 or 2 or 3 such fund, high quality, a small cap fund which invest in quality companies, then have a 5-year time frame and keep doing your SIP, never invest lump sum. And don't bother about liquidity, because liquidity is a moving target. You invest in small cap not for the sake of liquidity. You compromise on the liquidity to enhance your return, and in the hope that the small cap company will become a mid cap or a large cap. And that is why you need time. And if you don't have that time, don't invest in small cap.
The last question, this relates to perhaps the next step. If the purpose of this exercise that was started by the market regulator was to try and identify the risk, the liquidity risk, and have a measure that is described to the investor, then one cannot expect that the small cap composition or the small cap portfolio composition will change to reduce that risk because the objective is to invest in small caps. So can regulations then be looked at to say we'll manage redemption in this manner in the event of a stress where 25% redemption is sought on the first day?
No, that is taking a very unusual, view of things. I think every open-end fund which is faced with a situation like this should have an automatic clause that if a fund is faced or stressed because of redemption, something will roll out that, redemptions will not be honored beyond a point. Maybe exit load or clamping exit load of a severe, not exit load, but, CDSC, the contingent deferred sales charge on short term, because, you have to really, a fund has to protect themselves from short-term, behavior or short-term orientation of fund investors and encourage long-term investing in such funds. And investors just needs to be aware of the, liquidity, constraint of these funds. And if a lot of investors, if a fund meets with an accident that leads to massive redemption from a small cap fund, be aware of, that the fund will face a crisis.
Right.
And that is the essential risk of or the nature of the beast.
Absolutely. Dhirendra, thank you so much for taking the time for speaking to us on NDTV Profit.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know.
We've been getting you the leading voices from the mutual fund industry to tell you what this latest stress test of mid-cap and small caps is all about. And the next guest that we have today is Shreyash Devalkar, who is a fund manager at Axis Mutual Fund. Thank you so much, Shreyash, for taking the time. A lot of our viewers have been asking this question: what's the big deal about this stress test and how do I read it? Your own stress test points to a 28-day period for you to liquidate 50% of your small cap portfolio, and that accounts for about 10% or thereabouts, 10.7% of cash as well. So how does one read this?
So it doesn't account for cash. So the way it calculation is, it is a pro rata liquidation after removing bottom 20% of portfolio on scrip. So if it is only about 1 day, is there a redemption, then obviously the cash helps, but it is a pro rata, it is done, and that too removing the bottom 20% of the scrip. And that's where I would suggest that it's 28 is the number which is X of that. So it's a pro rata as such, right?
Okay, so fair point. So then when somebody is studying this, and I think the point that has to be made is, how do you look at this as part of the multiple factors that you would look at when you are deciding to invest in a fund? Because ultimately the nature of a small cap and a mid cap fund, particularly a small cap fund, is to invest in smaller stocks which naturally have a liquidity pressure.
Sure. So there are two aspects to it. One is as an investor and we as a fund managers, how to look at it. So as an investor, to me, when you are investing in small cap, then definitely a small cap or mid cap, depending on that asset class's profile of liquidity in the market, it will obviously have its repercussion on its liquidity profile as such. So, and that's where we always, or anyone always classify that large versus mid versus small on the risk reward metric and riskometer metric as such, which we normally talk about. Now, as an investor, one need to focus on his own investment, how much percentage should be in equity, in that how much should be in mid, how much should be in small, how much should be in large, and that should be the sacrosanct, and one should focus on, rather than trying to chase the returns and how much this segment is doing well, so let's put in more money into this. The better approach is to allocate money and just sit on it. And based on your change in the goals and ambitions, you may tweak the numbers. But the right approach is to actually have a right portfolio with the right mix of large, mid, small.
Point. Now, I think the ultimate aim of this exercise was to help investors understand risk in the broader end of the spectrum, and this was a nudge from the regulator. There has been the word froth that has been doing the rounds. What is your own opinion about the valuation picture in the broader end of the market? Do you think that there are excesses, that there is euphoria, that there is froth?
Definitely, see, at any point in time, market flocks to some segments of the market. It may be not only based on large, mid, small market capitalization. It may be just based on sector as well. So there are, at a certain point in time, certain sectors are totally in flavor, and then market just flocks to it, and you see higher valuation or elevated valuation in those sectors. That elevated valuations normally stays for some time, and then at the end of the day, the fate of it is dependent on whether the earning growth is following up or not. And that's what one need to focus on. That's what we also try to focus on, that yes, there is a valuation which we need to look into it, but whether earning growth is following up or not, and that becomes most important parameter while investing.
Okay, so you have a significant amount of cash. In fact, I haven't seen all of the portfolios, but in the ones that I saw, you had the most. Why is it? What is the strategic reason for that?
So probably you are observing among small and mid cap, maybe small cap fund, we have a relatively higher amount of cash. In mid cap, we don't have a relatively higher amount of cash. So here, if you look at, we are actually finding out opportunities to invest into. And actually, market volatility gives you opportunities to invest into. So we are actually on it, and we are trying to find multiple opportunities which market offers from time to time in this. So it is not reflective of anything on the risk aversion or risk taking. It's more to do it is the wait till you get your opportunity.
Fantastic. All right. Shreyash, thank you so much for taking the time for speaking to us on NDTV Profit. Always a pleasure speaking with you.
Thank you very much.
Viewers, there you have it. That was the fund manager of the mid-cap and the small-cap funds at Axis Mutual Fund. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does it say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Benchmarks erase previous losses but end close to 1% lower. All sectoral indices close in the red. RIL, M&M and L&T biggest contributors to Nifty's fall. India's mutual fund companies released the stress test data. SBI Mutual Fund to take as many as 60 days to liquidate 50% of its small cap assets. Government approves new policy for electric vehicles to attract global OEMs, allows limited imports of cars at lower duty. Prime Minister Modi inaugurated or laid foundation stones of projects worth 11 lakh crore rupees so far in 2024, with projects worth 7 lakh crore rupees being unveiled in the last 10 to 12 days. Election Commission to announce the dates of Lok Sabha elections at 3 p.m. tomorrow, may also release the dates of 4 assembly polls scheduled to be held around the same time. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, the show aims to bring you the market headlines along with national and international news. But before we move on to the show, it's time to see how the stock market fared during the day. A little bit of bloodbath once again we saw because they ended around a 22,000 mark and all sectoral indices closed in the red once again. My colleague Neeraj Shah is joining in to give us a quick wrap of all the market action.
Well, not a bad day for the markets, especially if you're a small cap watcher. And these days, I find that to be the barometer. So while the large caps did what they did, bring up the intraday of the BSE small cap index, and that will show you what a fabulous recovery that index had from midway through trade. Midway through, I mean, it's up about 0.25%, but midway in trade, the stock index was down in the red, as were the markets somewhere around noon. And from there, it was a splendid recovery to close the day at the highs of the day. So from here midway all the way till here. So good showing by the broader end of the spectrum, and the market breadth improved as well. Now if you look at the Nifty 50, it's a far more red than green on the screen. That's the market breadth, of course, but the Nifty 50 had far more red than green, and autos were the principal losers because of the new EV policy. The market will now believe that global competition might come in, so you'll have M&M unequivocally the leader of sorts, down 5%. It's Tata Motors 2.5%, Hero MotoCorp about 1.5%, Bajaj Auto somewhere here also down about 0.4%. A few winners in trade, but UPL, Bharti, HDFC Life, no reason-based moves, but up in the green. Then BSE 500 advanced decline will come up on your screen, and you will see the kind of moves that the broader end of the spectrum stocks made, more so On the gaining side, you had a clutch of stocks which actually did really well. Relaxo up 12.5. This is Gujarat Pipavav 12.5. Excuse the G being cut there. Swan Energy 9.5% up. Solar Industries had a 9% gain too. Across the board. And by the way, Cochin Shipyard and Garden Reach Shipbuilders, both of them had a very good run today. What didn't do well? Well, HP, BPIOC, bad day. Biocon on news, bad day, down about 5%. Apollo Tyres had some issues as well today, and Intellect Design Arena was amongst the few which actually didn't have a good day from amongst the IT pack, because otherwise IT had a pretty decent run. Lastly, just a couple of individual stocks that I want to mark before we wrap up. Paytm, newsmaker, finally sees some positive news flow, and the stock reacted duly, up about 5% in trade, so good showing for this one too. All in all, a day that belonged to the small caps at the end, and a good way to end the week, particularly at the mid cap and the small cap end.
Well, that was the market wrap. Small caps end better as compared to the others. Now, several fund houses have already declared the outcomes of the stress test for their small cap and mid cap funds. My colleague Saloni joins in with all the key details.
Right, Pragati. Actually since last night, several fund houses started releasing the stress test results that they were supposed to disclose, as SEBI had asked them last month to start disclosing it, publicly from March of 15 on the back of the rally that we saw in the small cap space, and which was called as a froth, right? So after the stress test has been released, if we see as per the table, SBI small cap fund, Tata small cap fund, DSP small cap fund, Kotak small cap fund. Now these are some of the funds that have shown that they will require more number of days when it comes to liquidating the number of days it will require for them when in case of excessive redemption pressures, as and when that happens. Now let me just remind you that this is based on any excess case that happens. It's not based on something that is happening on a normal day. This is only on the basis of when suddenly one day if 50% of their portfolio suddenly demands redemption pressure, and that is how many days it will take for them to liquidate that, right? So based on that, as per the table as I mentioned, if you see Edelweiss for that matter is particularly in a better position that way in terms of the days it will take to for the 50% of its portfolio. Now on the mid cap segment also, if we see Kotak, SBI, DSP have about like 30, 20 and 34, 24, 17 and 12 days respectively for the time it will take for them to liquidate the mid cap part of the portfolio. Now some of the mutual funds are yet to release their stress test, so we will be bringing you the updates as and when that happens.
All right, thanks so much for bringing us those details. Now moving on to the auto space, which was a buzz since afternoon. Now the Government of India has approved the new EV policy to promote India as a manufacturing hub. This has also likely paved the way for OEMs like Tesla to enter the country to set up their EV plants with limited imports at a lower duty. My colleague Tushardeep Singh joins in with all the important details on this development.
Thank you so much, Pragati. So essentially the new EV policy paves the way for the likes of Tesla to enter the country and manufacture here, essentially propelling the Make in India initiative of the government. Key facts first: the customs duty has been reduced to 15% for vehicles worth more than $35,000 that will be imported to India. Remember, that's a decline from 70% earlier. But this customs duty will apply only to those companies who enter India with a manufacturing plant and with a minimum investment of $500 million. There is no cap on the maximum investment. OEMs have 3 years to set up the plant and commence production, and 5 years for domestic value addition. That is essentially local sourcing. So in the next 3 years, in the first 3 years operations, they have to achieve a localization level of about 25% and 50% by the 5th year. So essentially a plus for the likes of Tesla to come in, but a negative for Tata Motors and Mahindra, whose stock has actually declined today on the news. Pragati.
Right, thanks so much for bringing us those details. A very important policy indeed. Now, Prime Minister Modi has also inaugurated projects worth 11 lakh crore in 2024 so far. And as we mentioned in the headlines as well, out of all these projects, 7 lakh crore were unveiled in the last 10 to 12 days. Considering that the Election Commission will be announcing the dates of the elections tomorrow, this also comes as a very significant thing to watch out for. My colleague Pallavi Nahata now joins in with more on this. Pallavi, what are the details of these projects and why is it significant at this point?
Hi Pragati. So like you said, PM Narendra Modi has been on an absolute spree inaugurating infrastructure projects or laying down the foundation stones of multiple development projects across the country ahead of the general elections. And the figures we're talking about are huge. Projects worth more than 11 lakh crore rupees have been announced in 2024. Remember, we're just about 75 days into the year and we're already talking about projects of this quantum for which the Prime Minister has already either laid the foundation stone or has inaugurated. Of these, like you mentioned, about 7 lakh crore worth of these projects have taken place only in March, in fact. When we're talking about these projects, they're spread across the country. They're a combination of public projects or private projects, and they range across railways, roadways, thermal power, renewable energy, oil and gas, to just name a few segments. These projects are expected to drive growth, development, and importantly, employment in the years to come. Some projects like the semiconductor facilities that the Prime Minister laid foundation stones for just about a couple of days back are also extremely critical because they are a step in the government's motive of achieving Atmanirbharta. So you can of course log in onto our website for a detailed list of what these projects are and which states are they in.
All right, Pallavi, while you're at it, please stay with us for a bit more because as we all know that the Ministry of Petroleum and Natural Gas has already mentioned that the OMCs had notified the government that they have revised the petrol and diesel prices across the country. So, Pallavi, considering this is a significant development at this point and after quite a while such a step has come in, what are you picking up from this?
Right, Pragati. So like you've mentioned, recently, in fact, effective from today, petrol and diesel for a consumer is going to cost roughly about 2 rupees less per litre. This is a move by oil marketing companies. This came in yesterday. And like I mentioned, this is effective today. What's important about this move is the impact it's expected to have on consumer inflation. We're currently at about 5.1% inflation. That is above the central bank's target of 4%. Though, to be fair, we are on a declining trajectory somewhat. This move will definitely further aid to rein in inflation, and it will be a step towards bringing inflation below that 5% mark. So it's a step in helping rein in inflation and bring it closer to that 4% mark that the central bank has been targeting for quite some time now. Now, to break down what the impact is going to be like, we spoke to some economists, and according to some rough estimates they gave us, when it comes to the fuel price cuts, those are likely to help ease inflation by about 5 basis points roughly. We must remember that last week Prime Minister Narendra Modi had also announced that the government was cutting LPG cylinder prices by 100 rupees. That move is further expected to help ease inflation by about 5 basis points, possibly a little more. So together the combined impact of these measures is already at about 10 basis points. It could be a little higher taking into account the secondary effects, especially of the petrol and diesel price cuts.
All right, Pallavi, thanks so much for bringing us so many details and very significant developments indeed. Moving on, we also have a news update, in fact, a very important news update from the Supreme Court on electoral bonds and the notice that is issued to the SBI. My colleague Charu Singh joins us now to give more details on this. Charu, considering that this issue has been on for last couple of days and it is a hot topic, what are you picking up as of this morning?
in the modification application filed by the Election Commission of India, in which they asked the Supreme Court to return their seal cover documents that they submitted in front of the Apex Court as per the electoral bonds judgment, has been heard. And the Supreme Court of India has said that those documents will be returned to the Election Commission of India by 5 p.m. tomorrow once those documents have been scanned and digitized. The Supreme Court had also asked how much time it would take to do the exercise, and they were told that it would take at least a day, and that is why the deadline of 5 p.m. tomorrow has been given. Apart from this, it was also brought to the notice of Supreme Court that as per the judgment of the electoral bonds, the SBI, State Bank of India, was asked to submit certain other information about electoral bonds, including the alphanumeric numbers of the electoral bonds. Now, this information has been asked by the court from the SBI, but this matter will be heard in detail on Monday, and Supreme Court has also issued notice to the SBI regarding the same. We'll keep you updated for any new developments that take place on that front.
In fact, on similar lines, we're also learning that 4 financial services firms have donated around 87 crore rupees by purchasing electoral bonds, and in a lump sum, the total amount that has come from the electoral to the electoral bonds from the financial services firms stands at about 180 crore. We are joined by our colleague Mimamsa Verma, who's done some crunching of the numbers and collated this data specifically on the issue. So over to you.
Hi Prakriti. So electoral bonds list published by SBI on Election Commission website yesterday showed that 16 financial services firms bought electoral bonds worth at least rupees 180 crore between 2019 and 23. Out of this, Paytm Group was the largest donor among financial services companies at rupees 85 crore through its subsidiaries in April 2019 and April 2022. Most of the bonds purchased by Paytm Group were by PHL Fininvest Private in April 2019 worth rupees 40 crore. The company later on was merged into the group's NBFC arm Paytm Enterprises in 2022. There's another non-bank lender that is worth mentioning and is on the list is Infina Finance, which is jointly owned by NBFC by Kotak Mahindra Bank and the Kotak family. That NBFC Infina Finance purchased electoral bonds worth 60 crore rupees between October 2019 and April 2021. Another lender that has bought electoral bonds is Bajaj Finance, which is the largest consumer financier. They bought worth 20 crore in April 2019, and Edelweiss Group also purchased electoral bonds worth 4 crore in May 2019 through its multiple subsidiaries.
Thank you so much, Mimamsa, for bringing us those very important numbers. Now it's also time to slip into a short break, but please stay tuned because we have lots more lined up for you. Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than rupees 10,000, while high-end kits range from rupees 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is rupees 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between rupees 1,000 to 2,000, and in Goa, it is about rupees 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of rupees 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to rupees 2 lakhs per month depending upon one's work and creativity, with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%, significant meaning, 29%, or the idea that it would make them look cool, 18%. Thank you for watching and stay tuned to NDTV Profit for more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles.
Welcome back. You're watching The Reporter on NDTV Profit. And now moving on to another very big and important news. Finance Minister Nirmala Sitharaman at an event during the day said that despite huge fluctuations globally, the Indian stock market has maintained a certain level of sanity and that the market should be allowed to play on its own. The statement from the Finance Minister now comes days after SEBI chairperson Madhvi Puri Buch had said that there are pockets of froth in the small and mid-cap stocks and that the regulator is looking into it. On similar lines, the SEBI board meet is also underway and the outcome is expected later in the evening. Once again, we are joined by our colleague Saloni to tell us what can we expect from this meeting.
Right, Pragati. So as you mentioned, the board meet is underway. It was expected to start at about 4 p.m. Now talking about what is likely on the agenda, first is the same day settlement. Now that is something that's been spoken about, extensively. It means that the trades will be done on the same day from right now, T+1, which is followed right now, and it is expected to start from March 28 on optional basis. So the board approval for the same is expected to be taken up, and also the agenda is going to be revolve around the ease of doing business part of it, related to relaxing certain timelines for disclosures of material changes for the foreign portfolio investors, and also the ease of doing business for proposals related to the alternative investment funds. Now, another thing that is likely on the agenda, and it was actually mentioned by the chairperson yesterday at an event, that they will be looking at the board approval to allow the staff to invest in zero coupon, zero principal bonds. Now, this is in a way to promote the social stock exchange, in a way for encouraging the employees to donate the money for the same. So we will be tracking the board meet and we will be bringing all the updates for our viewers.
All right, Saloni, thanks so much. We'll come back to you as you have the update and possibly after the meeting as well. Now, the trade deficit widened moderately in February as imports outpaced the exports. This particular trade gap widened to about $18.7 billion in after narrowing to $17.5 billion in January. Now, Commerce Secretary Sunil Bartawal also said that the current fiscal year trade is set to be the highest ever, topping the last year, in fact. Well, that's also that we have for you in the reporter for this day, but please stay tuned to NDTV Profit for all the latest news and updates.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 litres of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh litres of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. Our guest today is Pankaj Murarka of Renaissance Investment Managers. The case for a chat in today's show is simple. Is the pain in the broader markets likely to continue? Can the stress test actually result in further stress for these mid-cap and small-cap markets? And of course, what are